we believe. And so losing the talent that it has, and as I understand, it lost another one today to Mark Zuckerberg's top 50. So they've had a lot of trouble in this regard, and I think the burden of proof is on them.
Do you think that it is time to follow the talent, that this is going to work, the gamble that you're seeing over at Meta, and that that's the path of travel for the other big tech companies that are going to just eat some of the companies from the inside out, take the talent, not necessarily buy the company?
You know, it's a very good question. We're trying to figure out if what Mark Zuckerberg is doing today is much like he did when he was pivoting hard to the metaverse, which proved, because he thought that was the next big thing, and that was incorrect. AI is the next big thing, no question about it. And you do have to have the right DNA, and you have to move fast and break things, as he would say. So, you know, it'll be interesting to see if he's able to turn his open source strategy, and we've admired that quite a bit in terms of generative AI, into a leader again, or as we were observing it, Apple's Llama 3 at the time was improving at a faster rate than some of OpenAI's models. And that was true of open source generally. And then that has stopped. So yes, he had to do something. Is this the right thing? Why did that stop? I don't know.
Cathie, next time you're with us, we'll have a longer conversation. Two leaders, incredible men, doing incredible things. ARK Invest CEO, Cathie Wood from New York. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing.
Yep, now we're playing.
First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The administration is looking for that last bit of pressure to get these deals where they want them to be.
This is a perpetual negotiation that we'll continue to see unfold.
This is President Trump at his best, bringing the pressure and supporting his negotiators.
The market is trying to operate like this is going to be a nothing burger, but we are seeing tariff rates go up.
As the days and weeks accumulate, we're going to get greater certainty around what the trade policy posture is going to be.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
This was the week. This was it. July 9th. That was the day you would get additional clarity on trade. You're not getting it. Like from New York City this morning. Good morning. The third hour of Bloomberg Surveillance starts right now with equity futures on the S&P slightly firmer, just a touch positive, up by 0.1%. A bounce back on the Nasdaq of 0.2%. Your week ahead still includes jobless claims coming up in a few days. It still includes earnings from Delta Airlines. What it won't include is clarity on July 9th on the path forward for trade.
Because ultimately that can's been kicked and people are watching that and they're saying, okay, so August 1st is the new July 9th. Maybe. Have we gotten any certainty? And I think that's a valid question. Is there a certainty in the uncertainty? The fact that there is some sort of prolonging in the deadline at a time when companies are figuring that the cap is not 145%, maybe it's 25%, maybe it's something like that. And that, I think, is what people are trying to figure out at this point.
Most people think the temperature was taken down after Liberation Day. If you look at some of the letters that went out yesterday, it does look like another maximalist approach, escalate to de-escalate, because essentially the rates are the same, but Trump's giving them 3 more weeks to come to the table. I'm still waiting on what happens with countries like India, like the European Union, like Switzerland, where we know that there have been tons of negotiations at the table and a lot of talks. Potentially this week, we get actual frameworks and agreements with some of those countries.
Investors want to make it really simple. July 9th was meant to be a clearing event. It's not going to be anymore. For the Federal Reserve, they were going to wait to get 2 months of data, maybe sit there in September and reduce interest rates. When they get together at the end of July, they still won't know what the tariffs are going to be a day later.
Is certainty overrated? I mean, I'm asking this question genuinely because we've been saying, we just need certainty and then we can keep flying and then people can keep, figuring out their plans and stocks can keep going up and businesses can keep going and the economy will be just fine. And we don't get the certainty and people are saying stocks can keep going up and the economy is going to be just fine. So what gives with that? Is it basically the uncertainty is something we can live with if there's a band that it sort of ranges within?
With Trump, the only thing certain is it's going to be bumpy and it's going to be uncertain. But this from the National Foreign Trade Council represents large U.S. firms saying the strategic uncertainty is producing some short-term results, but continuing to threaten exorbitant tariff rates is just paralyzing for the business decision-making and erodes trust with their allies and major trading partners. So at some point, the businesses are still potentially holding off on massive decisions until they get the final results.
Inflation hasn't spiked. The economy hasn't collapsed. Is that sufficient to sit here and say that things are okay? I don't know, but for the time being, things seem to be okay.
July 15th, or later this week when we get Delta earnings, we'll see how okay it is and what pockets are falling out or not, what pockets are accelerating. It was not that long ago when inflation was a good thing for companies. If we do get inflation, can they pass that along? I mean, we're talking about Porsche having lower sales. Is that really the clientele that's going to be worried about some sort of price increase, or is it a product mix issue? I keep going back to this with particularly
the Porsche 911, the economics of the Porsche 911.
Okay, so people are really out there saying, well, I don't know, an extra couple
rates right now. Chairman flies up early, emergency meeting.
I don't think I could go from 120,000 to 121,000.
Not sure that moves the dial for them.
Correct.
For the July meeting, anyway.
Oh.
Might move the dial in September, Bramo. You never know.
Yeah.
Might be really freaked out about that.
Oh, no, the Porsche prices.
Futures this morning, positive by not even 0.1% on the S&P. Busy 60 minutes coming up. Alex Altman of Barclays as markets keep climbing a wall of worry. Stacey Rasgon of Bernstein on tariff whiplash in the chip sector. And Amanda Liner of BlackRock on the risks of being too defensive. We begin this hour with stocks pushing higher as President Donald Trump signals a willingness to continue trade negotiations. Alex Altman of Barclays writing, the backdrop for risk assets is as benign today as it has been all year. There remains room for stocks to grind higher into month end. Alex joins us now for more. Alex, good morning.
Morning.
What's the price of the continued uncertainty here?
So I think the price of continued uncertainty is that we're going to end up with essentially an environment where Lisa, I think pretty much covered it. You know, if we're just going to have a period where companies can't make decisions anymore, and consumers are going to hold off their spending decisions, at some point that is going to bite. And we talked about this a while ago, if you remember. We may be past the sort of peak uncertainty. We're probably not past the peak negativity. And I think we've just got to sort of take stock of the fact that at the end of the day, tariffs is another word for taxes. There is a tax that is coming towards the economy. And whether we split that between the corporate or the consumer is kind of irrelevant at this point. We're going to have that tax that will get hit in H2.
The way you explain it implies the worst of the data is still in front of us and not behind us. But what we've heard from many equity investors so far this morning and the past week is they're okay with that because the Fed's going to cut interest rates and it's going to be better in 2026. Do you take a different view?
I would take a slightly more balanced view. I think really my view stems and starts at two things. One is positioning. So from a positioning perspective, we talked about this before. I think that's a lot of the reason why stocks have got to where they are. The problem is now stocks are where they are, and we're back at trading at sort of 22 times. If we start taking an optimistic view on 2026 earnings, we're trading on around about 20, 21 times. So stocks are not particularly cheap as a starting point, and that at the end of the day is going to create a bit of a headwind in terms of what the path forward is for risk assets. Risk assets, the members thinking, oh, everything's fine because nothing's actually hit the economy yet. Of course it hasn't, because we've been in this purgatory period. So we have to work off an assumption that there will be a tariff hit in the second half of the year, and it will either hit the consumer or it's going to hit corporates, or potentially a little bit of both.
You're the most bearish, bullish person I've ever met in my entire life. You're making an argument, and I'd say, okay, so you're selling stock. No, I'm buying them, because I think they're going to continue going up. So can you square that circle, please?
Yeah, sure. So look, we came into the quote that Jonathan just gave just now was basically us at the beginning of June, which was we were bullish, and we to a degree still are, largely as a foundation of AI CapEx, this fiscal tailwind from the OBBB, which is going to be about 40 to 50 basis points. And then positioning. I think you've really got to put positioning in front and center as part of your investment process right now. Because when investors were so disconnected in terms of their positioning to the market, vis-a-vis where the S&P was trading, we knew that there was a systematic bid that was going to actually drive risk higher. That's still happening today, and actually that's underpinning a lot of our bullishness right now. But fundamentally, it's becoming more difficult to get extremely bullish on the index at these levels. So what we've actually decided to do at this point is start to look a little bit more rotationary under the surface. And primarily, that's looking at something like within the small cap space. So we're actually turning quite constructive on small caps here, and that's driven by the OBB primarily, simply because it's getting a disproportionate benefit to smaller companies at this juncture as a function of the depreciation amortization and also the interest deductibility. You put those together, and actually that provides a significant tailwind to smaller companies within the market. So that's where we're actually quite constructive right now.
Incredibly counterintuitive if you expect the economy to roll over, to be constructive on small caps. But I get your point about the OBBB and how that could potentially be stimulative. If it's stimulative, how does the Fed cut rates at a time when potentially inflation is going up? Potentially you get some sort of fiscal boost from the one big beautiful bill. And the economy isn't rolling over yet. So there is this idea that you could get this absorption of some of the price increases by the consumer.
I'm not sure about whether the consumer can absorb any more price increases. I mean, do you really want to see your coffee go from $7 here in Manhattan to $8 tomorrow? You know,
I get free coffee.
Fine. Okay. Well.
Carry on.
Convo killer, Bramwell. Let the man speak.
About your matcha.
All right, move on. Sorry
Alex, we
about
fully
that.
understood where you were going. Continue, please.
So someone's going to have to absorb it somewhere. Even if you're getting your free coffee, someone's paying for the coffee. So and so therefore, is it actually the corporate instead? Anyway, the point I'm trying to make is that I think there is an absorption capacity within the economy. We could talk about a slowdown that's not a recession. We could talk about interest rate cuts by the Fed, but we're talking maybe 25, 50 basis points. Is this really going to move the needle off where the base level is right now? And I don't think it's material. So when I think about things like small caps and why I'm constructive on them, that's really driven, again, by the positioning argument. And I really want to hit home on this because positioning is ultimately what's driven a lot of the market higher over the past couple of months. It's been positioning and it's been earnings upgrades that's largely been driven by the FX component as well. And I think that positioning dynamic is now going to start percolating into other parts of risk.
Alex, I'd love to ask you about what you're talking about, the fiscal tailwind for the one big beautiful bill. Won't that just fade when the economy's confronted with the tariff rates? Don't they cancel each other out?
I think they do eventually. And I think essentially what we're trying to do, Anne-Marie, is trade the sequencing. And I think that's really important. If you take the S&P in 2025, we're up, whatever, 4, 5, 6% or so, that clearly is not telling the picture of what's happened over the course of this year in the first half. And so every month has really been a story in its own way. And I think all we're trying to do is continue that story. Each chapter is about 1 month long at the moment.
Someone else mentioned this. It's about the sequencing. What's next then when it comes to policy in Washington?
Well, I still think we're going to get clarity, or hopefully some clarity, on August 1st in terms of those tariffs. But I think what's important is that yesterday, as a case in point, you had a bit of negativity that the letters got sent, but we've still got 3 weeks where we can get deals done. And I think people are forgetting, again, the sequencing there. What is the probability that we're going to get announcements from Switzerland or Europe or whoever it may be? That's going to be positive incrementally for risk. So I think that's an important point.
But there's one cloud, and it's China. Isn't that going to be months and years in the entire Trump administration as they try to get a grand bargain?
Most likely, and I think it's interesting that the rare earth deal was only set for a few months as an example. So yes, we are going to have this issue down the line. I will just highlight one point though in terms of the uncertainty and Trump providing the bumpy ride, as you call it. I think it's important to clarify that between 2017 and 2021, i.e. when Trump was actually in office, he actually oversaw a lower period of the VIX than average going back to 1990. And that includes COVID. If you take out the actual COVID months, so basically Q1 and Q2 of 2020, it's dramatic. We're talking 4 or 5 points lower on average in the VIX. So even though Trump may talk a bumpy ride, actually his track record is a lot less volatile than you think.
When did that vol trade blow up? Early 2018?
That was February 2018, yeah.
Did that have anything to do with policy?
No, it had nothing to do with a load of short VIX positioning.
I remember all of that. Yeah. That feels like a lifetime ago, doesn't it?
Yes, and people still talk about it today because they'll think about there's a lot of like short vol strategies in the market again, but they're different kind of short vol. It's not selling puts, so to speak. It's selling calls, which is a very different prospect in terms of the impact it can have on the market.
Good to see you, sir.
Nice to see you.
Grab a coffee on the way out.
I will. It's free.
Right, good. Alex Altman of Barclays. I'm told it's really good. Appreciate your time, as always. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Joining us now, Lizzie Burden. Hey, Lizzie.
Hey, John. President Trump has delayed imposing higher tariffs on US imports until August 1st, while sending letters to countries detailing the levies they'll face. The letters include 25% tariffs on goods from Japan and South Korea, and plans for more than a dozen other countries. The president also teased the possibility of further talks ahead of the new deadline. And more than 100 people have been confirmed dead in floods that tore through central Texas over the weekend. Local, state and federal officials have faced criticism in the aftermath of the tragedy. Senator Ted Cruz downplayed concerns that President Trump's cuts to the National Weather Service played a role in the failure to evacuate people. And here's one for you, Anne-Marie. The New York Knicks have announced their next head coach. Two-time NBA Coach of the Year Mike Brown is going to be taking over the team coming off its first conference finals appearance in 25 years. Brown is coming from a successful 3-year run in Sacramento that saw the league's longest ever playoff drought come to an end. And that should be my brief, John.
Lizzie, thank you. More from Lizzie in about 30 minutes' time. Up next on the programme, the Morning Calls, plus Stacey Ruscott of Bernstein on tariff whiplash in the chip sector. Live from New York this morning. Good morning.
Shit. Hey Snooze, how you doing?
All right. All right. Oh, you gotta get a new eval. Well, the problem I have is Top Step is no longer doing NinjaTrader. So I had to move to Lilu, and I'm qualified. Yeah, I know. They're trying to go exclusive with their own platform, which kind of sucks. Yeah, Top Step X. So I'm done with that, and I went back to Lilu. I'm working on a weekly with Lilu right now. You can see it here.
2 hours of single stock stories that are driving.
So this is a pretty good one. Lilu was the first brokerage I used. I was with them for probably 6 months, 8 months or something. And then I went to Apex because they had the 90% off, like the 250K eval, so I went and did that. That's how they got me over there. And then you know how that went, but so there was a discount. It was only $50 for 50K. So the deal with Lilu is this: they have weekly and like their regular foundation accounts like take forever to get fucking paid on, but they offer a weekly product where you can qualify in one day. You got to get to 3,000 profit before you go backwards 2,500, and they give you 8 contracts. The caveat is it's a moving it's a moving drawdown. Yeah, just shit it. Now I've been working it responsibly, actually. So, but the thing is you can't let it run. You got to take profit off, because if you make 1,000, yeah, you can pass in one day. Well, no, you don't have to pass in one day, but you can. They let you do it in one day. Sorry. No, you don't have to. No, you can do it in one day. No, that's crazy. But the big thing with them is it's in the trade, if you're up 1,000, it automatically moves up your what do you call it? Your drawdown. So like you got to be tight with your stop, and you got to like set realistic take profits.
How difficult are things getting for this industry?
And
well, right now we are seeing two
with Lilu's the whole that like Lilu, like designing the forecast strategy, it was all around trying to get qualified at Lilu, because taking profit is everything. Yeah.
So clearly there is that factor, but there is
no
doubt that the AI data center.
Yeah, but once you get to the funded account and you get to a certain amount of profit, they take all that off. That's no longer a thing. But they just want you to learn to be responsible, because they're looking for people to fund. So I've been just taking profit. I only traded it yesterday. I made 458 yesterday after commissions. I got to get about 2,500 more. So we'll see how I do. But that really disappointed me at Top Step, man, because I can't leave. How did the funded? It went up and down, and then I ended up losing it.
And what those are actually going to ultimately look like at a time when we've seen a rollback of some
doing the same shit, yeah.
Constraints put on China with respect to semiconductors.
What it is you got to take profit,
isn't that the bigger issue?
and you can't hold the trade for too long, and that's just what it is. So you got to get over the fact that if you got taken out of the trade and only made 50 or 75 bucks, then 2 candles later it goes 20 points in the direction you were going, you can't worry about it, because it could have went 10 points against you and blew the account up before then. So you just gotta like get to break even and take the profit it gives you on the A+ setups, and you just can't let it swing.
So you completely take out that forever.
And that's just what it is, you know, and that's really how you have to trade a.
Off from the diffusion rule.
I mean, unless you can afford to put 35, 50 grand in a cash account and let it swing, you can't, you know, this is just what trying to qualify a brokerage account is, or a prop firm account.
Our net hurts. Liberation Day.
I haven't been able to do it any other way. It's just the way it is. And if you can't mentally handle it, then you just save up your money and then go for it. That's kind of I think that would be my advice after, you know, after playing around with these prop firms for a couple years now. It's really, the amount of discipline it takes it's quite incredible. And sometimes you don't realize it till you like walk away from it for a couple of weeks. Like I've taken about three or 4 weeks of vacation the last month and a half, and my mind is pretty fresh, and it's easier for me to sit here now and wait.
All of the volatility and everything that's going on, like if you just look at the endpoints, how
You kept an eval for a whole month? Fuck, dude, that's really.
We'll see if that continues. Again, I don't
Well, yeah, well, that's the game. You know what, dude? Snooze, that's the game, man. Like when you're doing the prop firm eval, you got 30 days, or you gotta pay again anyway.
What happens if they do?
So you kind of gotta, you know, and that's the thing with the weekly is I got 30 days. Because this is a $300 account that was on sale for $50. So I'm just gonna be tight with it, take my time. But if I get down to the last day, then you just gotta, you know, you gotta go for it because you're gonna end up fucking paying for it anyway, you know. But that's the game, is you gotta have a strategy to make the target within 30 days.
I don't know if there's any changes. Like we'll have to see what happens.
But you can't overtrade, and you can't hold trades too long, and you can't add to a loser, and you can't do all the crazy shit that you see me do.
Even more complex for semis because
I do it all, man.
Semiconductors don't enter the U.S. by themselves. They enter inside other things like.
I do so much of it. I tried to create a strategy on how not to make myself do it. But then I break all my rules and do it anyway. So I was good yesterday. Let's see if I can go 2 days in a row with being good.
Less demand for those, and therefore you may have less demand for semiconductors. And to be fair, it's hard to size. In the near term, I think I heard earlier, like you're talking about, we've been actually seeing some pull forward, which makes sense given all that uncertainty. Now there is one area for direct impact that I think we are waiting for, and this is the sectoral tariffs, that the 232 investigation that the Commerce Department put on April 1st, and that may directly impact. You're
going to fund? Are you going to take profit trader? Or you don't use Ninja Trader? Do you, Snooze? Are you going to do Top Step X?
That kind of sucks, but we could probably
No.
deal with
Are you
it.
Trade Evade?
We were up 50% over the last 4 or 5 years, anyways. You know,
Oh,
if
you
it's
use X to enter?
then, like that's a whole other ball game. Like, and I don't know what that's going to look like until we actually.
So is it possible to trade from the DOM on Top Step X?
That I think we're waiting for in the space now.
What's the tariff rate
Oh,
that
okay.
would actually torpedo the AI trade right now?
Well, it's interesting. So the AI trade, like the AI servers, the way
Yeah, I didn't even play around with that. I just logged into my Rhythmic with Lilu and just they had that deal, so I took the deal. I like that.
They're USMCA compliant. There's no tariffs
On this weekly account, if I can get it qualified, I can take a payout every Saturday. Every Saturday they'll let you pay out.
Advantage with the AI is that the demand is
So I decided to give it a shot because all I had to do was log into my Rhythmic with them because it was already all set up. But you know what? Maybe I'll go. Maybe I'll just pay $50 to play around with the X, Top Step X, and set up their DOM.
And then you have this other avenue.
Can you do an ATM strategy with them, like the one that I do with the trail and break even and everything?
That helps to at least somewhat insulate them, at least.
Okay, maybe I'll play with that. Maybe I'll do one. Maybe I'll do one with that.
If the tariffs actually get put into place.
Stacey, you mentioned smartphones. Can we just?
Because I do like them.
What it means for Qualcomm, a lack of demand there. Just what is priced at the moment from your standpoint?
Okay.
Well, so Qualcomm's very, very cheap.
So you can set it up where one contract at 4 ticks takes profit, second one takes profit at 10 ticks, and then you let the third run or something like that.
You know, you could.
That's
argue
kind
that
of how I
even
do
with
my
Apple,
ES strategy.
They're growing EPS double
Yeah.
digits, and it's like 14
Okay,
or 15
cool.
times earnings.
All right, maybe I'll play with that.
Examples.
I just
if
didn't
people
want
are
to play
waiting
with
for
it.
catalysts, there
I kind of got a little upset with
for
the
now,
whole
but I
thing
actually
'cause-
think it's sort of an interesting. It's a good time at least to sort of like sharpen your pencils. You know, 2020.
Yeah, I'm sure you can
the Apple
do it.
revenue gets small. start
They
to
must
get
feel
into
like
18 months
Top
away.
Step X is going to
in
be
terms of
able to
smartphone
compete
demand, and
with the
again, around
functionality
tariffs,
Ninja Trader
US,
has.
imports about
soon.
10% of the world's smartphones. Half of those are iPhones, and more than half of those are iPhones.
But I don't
So
listen to them
it's
anymore.
really not so much that we import a lot of smartphones.
They
we
have a
import lot of
YouTube show.
iPhones. And again,
Yeah, they want. Yeah,
Apple's
they
doing
want to
that.
be
It's that
in-house.
revenue's going
Yeah,
away from
and I
Apple.
like
We
that.
already know that.
I do like
And so
that.
the extent that, like, tariff,
But the
you know,
problem
prices
is I've
moving
spent so
might
much
impact
time programming
smartphone
my
demand
strategy
in the
and
US,
trying to get it
to
through
the extent that it's
licensing that
insulated or
I
isolated
can't walk
more
away
to the
from
Apple
it.
side of the equation than the Android.
I can't walk
It's
away
actually
from it.
less fundamentally impactful for Qualcomm.
Yeah, well, that's it. That's probably why they can probably give traders a better deal if they have everything in house. You know what I
Stacey
mean?
Rascon there of Bernstein with the latest in business.
And you can probably be somebody over there if you can get in and get good with them. You know.
What was your reaction to that story?
Well, Meta right now has the compute. They
Yeah, it
have the
is.
research,
Yeah, it's all
they're
nonsense.
spending big.
Yeah.
When it comes
It's
to
all
Apple,
play
they
money.
haven't even started
It is.
investing in their own data centers. So I'm
It's
not
all play
surprised
money
they're losing
until
talent
they
because
really
if you're
front
an
you
AI
and you get the
researcher,
real data.
Meta
You
or
know.
OpenAI or Anthropic are the companies you want to work at because they are investing big. They have the Apple still has the distribution, but they have clearly underinvested. So
I
I'm not
wonder what the
surprised they're
best
losing
way.
And Zuckerberg comes along right.
Well, I'll
next
play
week,
with
obviously.
it. You know what? Maybe I'll sign up
Tens
for a
of
Top
millions
Step
of
X and
dollars,
play
and
with it
that's what
tonight
I think
after.
that college interns
after
should
work.
aspire to.
Real money.
Oh yeah.
Yeah. Up next on the program, Michael
Yeah.
Reed of RBC Capital Markets.
I wonder.
on a feature
I wonder
Rates
if
Plus.
they'll let you do a
Yara
cash
Ahmed with your
account.
morning
You know what I'm
movers.
saying?
Taking a look at a downgrade.
I wonder if
on
you
an
can have a
incoming
cash
member of
account
the
over there
S&P
where
500.
you front yourself. Because my ultimate goal was once I break through in the prop firm world and I actually get established to copy trade like a cash account with the prop firm. You can do that in Ninja Trader. How's work? Oh, work's good. Work's all right, man. I'm having a really good quarter. Actually, this quarter I've taken 3 or 4 weeks off, and this is my best quarter for production-wise. I'm doing well now, but I think I really think I got to wrap all this stuff up and get more serious about it because I think they're trying to get rid of all the remote people. I think the writing's on the wall for that. I think I got about another year before they completely close my department. So I gotta probably 6 months to a year to make. Well, this is the deal. I'm corporate. I work for Intuit Corporate, so that means I've got, all the best insurance. They're paying me stupid money for what I do. And there's also a big HR department. So it's fucking, if you get a shit person that's barely doing enough to get by and won't do what you ask him to do, it's impossible to get fucking rid of them. And so I think upper management felt like it's holding them back from making adjustments faster to the market and like what they want to do. So they created this big call center in Kentucky, and they don't own it. It's like a third party. They call it a partner site, but the corporate management runs it. So like if they don't like how somebody's working leads, like in chat or inbound or outbound or whatever, whatever lead source, if they don't like it, they can just pull them off it and give them something else, or they can fire them right away. And it's not like going through corporate HR where it takes 3 or 4 months to fucking get rid of someone. And I think that's what they're doing. And I think the first 2 layoffs, they've laid huge amounts of people off for the last 2 years. I made both cuts, but they were ramping up the outside partner,
Making money
the
isn't
partner
about
site.
drowning in emotions.
It's about understanding what's actually
Now we got a bare minimum
Markets are the
corporate
best way to
salespeople.
from noise, and that is what we try to
How
do
about
every
some
morning.
advancement for you?
This is
Nah, that's,
corporate
dude, there's no advancement, man. I put in for everything and they don't even talk to me. Because this is the deal. There's only 5 people that do my position in the whole on the corporate side. If they move me to another department, who's going to replace me? You know what I mean? They got barely enough people to handle the leads that they have. And it does take time for somebody to train to do my position, to just, you know, be able to navigate the software, know the product, be able to close. So if somebody like me left, if they let me leave this position, they'd be fucked. So it's kind of like I'm in a catch-22. They're not going to let me leave my position, but they'll sure as shit close the fucking department when they feel like they got it covered. You know, and that's, you know, so there's very limited advancement. I've been trying every way possible just to stay on the corporate side. Well, I don't know. I'm even trying to rewrite our job. Like, I've been thinking about, listen to this. So I'm trying to find a way to make the corporate side more valuable, because I don't think the corporate side is valuable enough to justify paying to keep it. But we have 3 departments. We got inbound, outbound, and then you've got like chat lead, people who develop the chats that come in. We develop into leads, make appointments, and sell them. But overall, our leads are going down because we're moving people off the old desktop onto the new online product. So the volume of leads are going down because most of our stuff is moving people from the old product to the new product and then upgrading them. So I was thinking all chat and outbound should be one department. So all the outbound people, when their goal should be to fill their schedule with appointments, to do calls. So if everybody went into the chat and their whole goal was to make appointments and not try and sell something in chat, but if it was a super easy thing, you could just write it up, that's fine. Then we wouldn't be in a position where we're having to transfer different things to different departments. Like our merchant services, if somebody's interested in that, we got to transfer them over here. If it's the online product for, you know, there's like 4 different places you have to transfer, where you could have one person do everything and just set the appointment, work it properly from A to Z, and do the whole ecosystem of everything we offer, instead of this piecemeal stuff that they have going on. But it would take me a lot of time to write that down, how it would work, how it could be managed. And I don't know if I want to go through the hassle of doing it if nobody's going to fucking read it anyway. You know what I mean? That was kind of like, how can I save this? If that makes sense. Because it could be way more efficient. Because the job that I actually do all day, honestly, yeah, but they don't. These fucking people, man. There's a difference between a sales manager and a manager that has salespeople. Do you know what I'm saying? And these managers are just managers that have salespeople, and they're just trying to make something work from old ideas that aren't valid anymore. And they're just shuffling stuff in circles. It's like having a fucking storage unit that you're fucking moving shit from one corner to the other all the fucking time. And it's just not gonna work. You know, and I'm the one that's going to be out. Me and the other people that made it through.
When the Fed meeting is, so it's the market's kind of more about the start of it rather than the magnitude.
The idea would be to treat the salespeople like real professionals, and have everything run through them on an appointment basis. That would be the idea. And I was thinking, they got this great AI stuff. I took all the classes last week, or the week before maybe. And you can, this AI will go in and analyze all the information you give it from PDFs, whatever, and it will make like a podcast conversation between two people on the subjects that you give it. So like I could literally create a like a PowerPoint podcast conversation on how each part of this job position should work and how the leads are handled and how it would move and be managed. But that sounds like a lot of fucking work, and and they could just take the idea and get rid of me anyway. So I mean, I don't know if I should.
I think threes today probably come and go.
So I don't know how I should go about it. Should I just like ride it out to the end and try and just make and like maybe try and make the trading work and try and get the stream and get the forecast through licensing? Should I focus on that, or should I focus on trying to save the corporate side of the sales?
The strength of demand at that 30-year auction.
Oh yeah, no, this is all on the company computer. So this would be like, it can go in and analyze all the Intuit information. It's all proprietary. You got to like sign some shit before you start using it. Like I'm in it. No, everything on that computer, like when I go off and work on, you hear me typing on the computer, working leads, that's all like completely separate, Intuit only. There's nothing personal in that.
Why am I mentioning that? But yields are actually climbing.
People have been fired for using that shit for their own stuff. Like often. No, you don't play around like that on other people's stuff.
So this is a really interconnected and global story.
It's a global story. Well said.
But
not just the US, it's the UK as well.
But that's kind of what I'm thinking about. I'm trying to decide whether it's worth putting the time into that, or do I make the final push and put the money into finishing the stream and the licensing for the strategy. And then when Intuit over, it's just over.
Morning, thanks for having me.
Let's talk about the problem.
So it's a tough decision, man, because it's a lot of time and work to do this stuff. Create a whole sales program.
What is it?
I've done it a couple other times.
As a supply side issue.
Usually what happens is somebody tries to steal it, or they change it a little, or they don't let you in on it, or it gets running and then you're just out.
Shown up in the data in various ways the past couple of months.
And I don't know.
And on top of that, you have the immigration inflows that are slowing. So that's really reducing
but
the
it's
supply
just like
of workers who are available to fill the job openings that we
it's
have.
just like it's just like QuickBooks Intuit is just so good, man, that it's easy street forever. I mean, I could be 89 years old and still do what I'm doing right now.
And just take up some of these jobs
it's
that the
just
immigrants are leaving behind.
I mean, that's easier said than done. If you think about who's out of the labor force, there's a lot of reasons.
It's not like you got to
First and
grind
foremost,
for
we
anything.
have folks who've retired, and they're at the point in their lives where they don't want to work.
Well, you know what, dude?
Secondly, you have folks who have
If I thought
whether it's caring for
that
children,
they would sit down, evaluate it, and let me in on the management side of creating it,
so that's another reason
I would do it.
People aren't able to enter or re-enter the labor market.
If somebody made me a deal where if I gave them the rough draft of the idea and they said, okay, if you can create it and we get a buy-in and we'll let you, into junior management to set it up and do the pilot program, I would do it in a second. But if somebody just wanted to dangle the carrot with some empty promises, then I wouldn't do it. I've fallen for the carrot too many times in the past.
What's the explanation for that?
Yeah, so the way we think about
Most of
it
the time
is
you
what we
fall for the
measure is
carrot when you don't really have anything
matching,
better anyway.
College graduates in terms of their degree and the job openings that we see. So if you have folks that are graduating,
How do you know,
for example,
you know
degrees in
beforehand?
business or in engineering,
Like if they're
job openings,
going to make me a decent
that
deal
we're
if it
seeing
works
are
out,
healthcare,
how would I
for
know
example.
that?
They're not going to be able to be employed in that sector necessarily. They'd have to go back to school. And
So
get
I think what it would be
So
is
there's
I
a
would,
bit of
it'd be a conversation with the
mismatch in terms of skills. And on top
like
of
the
that,
real
you have
middle
some
management, not the
geographic
guy I work for,
wherein the jobs
but the
that are
director
open,
and the
don't
people
have
just below
graduates
him
necessarily who live
pitch
or
the
want to
idea
go to that area
and
for
just
their
say like, look,
What about wages?
just give me
Like
2 or
when
3
companies
guys,
close the border, Americans
let me
get
work
higher
the
wages.
program,
Do you see any evidence of that?
and if it's if after a quarter it's more successful than the model you're using now, then just let me be the manager of that and I'll build it out to a full scale. And then I can compete for you know, and you know, manager 2 right below, you know, or whatever it is, right below
So they're
director.
coming in and filling these jobs that were
You know,
formerly
once the
filled by
department, I would do if I had a deal like that. That's how I would do it.
about the inflationary impact of a
You know, but I wouldn't build out the
some
full
sectors, yes, they're still very
presentation
much,
and go,
strong
you know,
demand. So
and
let's
like
talk about
put all the
hospitality,
details
for example.
down and
That's a
daily,
sector
you know,
that's
I wouldn't do all of
being
that
driven
until I
by
had
that
some kind of
retiree
commitment
cohort
on
that
an
I mentioned
outline
earlier.
level.
Those are the folks who
You know, I wouldn't
really, think are
develop
responsible for a lot of the
everything
travel,
until
whether
I had a
it's,
commitment, 'cause
airplanes, stays at hotels.
there are
dining out,
people
et cetera.
smart enough here to
So
steal it if I
there's
give too
very much a
much
strong demand,
detail.
for those services. And we're seeing that there is still wage pressure there. And when you look at kind of that pre-COVID,
See, that's
trend,
why it's just a
for
lot of,
hiring in that
you know,
sector, we're still
that's the
below,
rat race, man.
where we should have been absent that.
That's why I
disruption.
started trading. I wanted to get out of the rat
Some of the
race.
issues and some of the forces
You know?
in the labour market right now. They sound more
That's the
structural
fucking
than
rat race.
cyclical. Does that lead to a different outcome at the Federal Reserve? How do they approach?
Because you got to spend
that
your
issue?
weekends. You got to spend so much time
Absolutely,
developing
and I
this
think
stuff.
that's
You
what
know,
we're
and it
trying
creates
to figure
other
out right
hassles
now.
in
So
your life.
there are some cyclical forces at play, but they're rather muted right now.
And then if it
We
doesn't
are
work
looking
out,
for
then
some
it's
potential
like
layoffs in trade-related
it's like I had
sectors,
told
but we're just
you,
not seeing
fucking-
that yet.
yeah,
As you
it
noted,
just
jobless
turns
claims are still
into-
very low. So
turns into a shit
now you have
sandwich.
to think about kind of that natural rate of unemployment, NAIRU, right? And
Turns into
where
a
that
shit
is
sandwich.
relative to the unemployment rate now, they're quite close.
But if you don't take a
should we
chance
be
and do
thinking
anything,
about
you'll
NAIRU
never have
perhaps
anything.
being a
So
bit
it's kinda
lower,
like that's
given the
how I've always
conditions that we're
looked at
looking at. Less
projects like
immigration
that.
and a large retiree cohort. So maybe we're right there. And
shit.
that begs
All
the
right,
question
hey, I
for
gotta
the
set
Fed,
some stuff up.
you know, do you want to start cutting now? Where
Are you
think
ES or
the
NQ today,
NAIRU
dude?
is
You want to watch the
perhaps
NQ?
right where we are at 4.1%? Do you think NAIRU is perhaps a little bit higher at 4.3%?
Is that yeah,
Are they
yeah for
willing to
NQ or
accept,
ES?
a bump in the
All
unemployment
right, here I'll
rate?
put NQ on,
So
dude.
I think that's part of
Oh,
the
you're not
debate,
trading?
for the Fed. But at the end
All
of
right.
the day, when
Well,
you have
I'll
a
just leave this
4.1
here until I come
unemployment
back.
rate, it's really hard to
Do you
justify
want me to have the NQ on?
This goes back to something we said earlier on in the program. When they get together
Here,
in
I'll move the
September,
news down to
what
the
they wanted
NQ.
in September was several months of inflation data off the back of a final decision on tariffs. They're not going to get that several months
Okay,
anymore.
hold on.
If we get a tariff on August 1, they'll only have a handful of months. Look, when you look at that situation, Lisa, the only way they can cut interest rates based on the threshold that they've established is if they can no longer stand there
All
and
right.
say the economy's
There's
solid,
your
we can
NQ,
wait.
dude.
If they have to say the economy's starting to crack, we can't wait anymore, that's the reason to cut interest rates.
They have to see the unemployment rate go up significantly. And
All
that's
right,
not
I
what
got
we're
some
seeing.
stuff I got to
And
wrap
frankly,
up.
what we
I'll
just heard from
I'll try and hop back on the mic
highlights
before
why
the
we're not
open.
seeing that increase in
All right,
unemployment,
brother. I'll
even
talk to you
though
later.
It seems like companies aren't hiring quite as much. You've got the cyclical changes and you've got the structural changes, and you put them together and you say, what can the Fed do? How does the Fed respond? Well, they can't go out and train people. So how do they sort of use policy to deal with something that is pretty profound?
And still not that well understood at the moment, at least. More jobs data later this week. As I say, initial jobless claims dropping on Thursday morning. Michael Reed there of RBC Capital Markets. Michael, thank you, sir. Appreciate it. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hi, John. President Trump hosted Israeli Prime Minister Benjamin Netanyahu at the White House last night. The Israeli leader told Trump he'd nominated him for a Nobel Peace Prize. The US is pushing for a ceasefire in Gaza that could end more than 18 months of fighting and see the release of the hostages still held by Hamas. Elsewhere, Apple's top executive in charge of AI models is leaving the company for Meta. Sources telling us here at Bloomberg that Ruoming Pang is joining Meta's new superintelligence team after being offered a package worth tens of millions of dollars a year. And Shein confidentially filed for an IPO in Hong Kong. The Financial Times reporting that the fast fashion retailer sought the China Security Regulatory Commission's approval for its listing. Shein had filed for an IPO in London about 18 months ago, but has been unable to secure regulatory approval. That's your Bloomberg Brief. John.
Lizzie, thank you. Thanks for this morning. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with Amanda Lynham of BlackRock on the risk of being too defensive. That conversation up next, live from New York. You're watching Bloomberg TV.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I ask whole corporations study how will you bring generative AI to their job.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Bramo getting absolutely hammered in the commercial break. This continues.
I will get TSA approval. Listen, I don't need to be anyone's charity case. I don't need to get your guest passes
We're
for
going
Clear.
to crowdfund this now.
We're not going to crowdfund my TSA approval. Let's move on.
Chaos this morning. Let's move on. Equities on the S&P just about positive by 0.1%. April 2nd was absolute chaos. April 9th, we've got a 90-day extension. Before we even arrive at July 9th, we've had another extension of 3 weeks. We'll see you again on August 1. Equities positive on the Nasdaq 100 by 0.2%. That's the price action as we count you down to the opening bell. Your trading diary for the week ahead is shaping up as follows. At 11 a.m. Eastern Time, we'll hear from the President of the United States holding a cabinet meeting on Wednesday, Fed minutes. On Thursday, earnings from Delta Airlines, plus an important round of jobless claims, which retreated just last week, and we'll see if that continues for the weeks ahead. More comments from President Trump expected in a few hours' time then. More letters expected as well. Bloomberg's Tyler Kendall joins us now for the latest. Good morning, Tyler.
Yeah, hey, John, good morning. Well, we're not just waiting on President Trump to speak at 11 a.m. Eastern because he's convening his cabinet, which often means that he goes around the room and he has officials give updates in their particular area of expertise. We are expecting some of those top trade officials that we watch closely to give updates as well, including the Treasury Secretary Scott Bessent, the Commerce Secretary Howard Lutnick, and the USTR Jamieson Greer, who we all are understanding have been holding these trade negotiations in recent days ahead of this 3-week extension that we've now been given. We've been talking a lot about those countries that did get letters like Japan and South Korea, but we are on watch for if any other ones will get letters too, because it's been interesting to hear from sources familiar telling Bloomberg News that some countries actually appear on the cusp of perhaps some framework agreements, including Taiwan, India, and also the European Union, and what's really been a reversal of favor for the trading bloc. But John, people familiar tell us here that ultimately to get some sort of monumental breakthrough in order to announce the agreement, that was going to be very difficult to reach by the original deadline of this Wednesday, July 9th.
Tyler Kendall, thank you. Monitoring the latest down at the White House with the President of the United States. I have to say that's been a surprise for me over the past few months, the fact that Europe's no longer back of the line, that they might just accept the 10% with some exemptions and we move on.
And it was a reversal from Europe as well. They were not willing to at first deal with the 10% across the baseline tariff. They were going to come out and retaliate. It's interesting because basically Europe and Japan have swapped places in terms of where they are in the order and basically the willingness of this administration to do a deal.
That's the situation in Washington. Here's the view on Wall Street this morning. Amanda Lynham of BlackRock writing the following. We expect episodes of macro volatility. We remain attuned to the opportunity cost of being too defensive and under-risked in this environment. Amanda joins us now for more. Amanda, good morning.
Good morning. Thank you for having me.
Great to see you. The risk of being too defensive with stocks at all-time highs and credit spreads near the tights for the year.
Yep.
Explain, please.
So I think in a time like this where there's a lot of uncertainty, often the reflex from investors is to just generically move up in quality. And we've been pushing back against that and basically saying that there's a case for selectively moving down in credit quality. If you look, for example, high yield total returns have outperformed investment grade year to date. Subsets of high yield, including double Bs, have outperformed triple Bs. So I think what the market is telling you is that, yes, we're expecting volatility. There's residual uncertainty. But if you focus on kind of back to basics credit work, companies are navigating this. And we are paying incredibly close attention to the micro level commentary of companies in this environment. And I think what the market is actually seizing on is companies guiding towards 2026 and 2027, outlining all of the operational levers that they can pull to navigate this uncertainty. And I think that's what's giving some comfort. Now, is there a lot of scope for spread tightening? No. But our income, our all-in yields in corporate credit still attractive? Yes. And I think that's really what we're emphasizing.
That's exactly what I wanted to ask you, the idea that spreads are near all-time tights on high-yield bonds. You're not getting compensated in addition to treasuries that much at all relative to history. Why doesn't that worry you?
Well, there is some market segmentation there. So the trade-off between treasuries, yes, the spreads are tight, but back in late 2024, we've characterized that as warranted resilience. So those spread levels, there are a host of reasons, macro, fundamental, technical, why those spreads can remain in that tight range. I think from our perspective, when we talk to investors, they're looking to deploy capital into corporate credit. And so what we're really saying is if you're buying corporate credit, buy it for the income, the carry, the yield, not for the potential total return boost from tighter spreads. And I think really the point we're just trying to make is if you're waiting for a sustained sell-off in credit spreads, we view the bar for that as pretty high.
So it's pretty remarkable that not only is this not April 2nd, but that here we are with yet another trade war brewing and escalate to de-escalate. And not only are people not getting bearish, we've got David Kostin over at Goldman Sachs upgrading his S&P forecast. You've got an upgrade over at Bank of America. And here you are in the credit space at BlackRock saying there's a risk we're not getting risky enough. And that essentially that's what we have to go. Are we just discounting the policy uncertainty entirely? Is that sort of been stripped out of the picture?
We're not discounting it. The title of our third quarter outlook, for example, was two-sided risks. So we're absolutely recognizing that there's still a lot of uncertainty. There are still a lot of potholes that we need to navigate in this environment. What we're saying, however, is that the economy has shown relative resilience. And so taking a complete risk-off posture, in our view, isn't the way to go. In fact, again, going back to the lower-rated pockets of the corporate credit market, they've outperformed. It kind of reminds me of in the early stages of the Fed's rate hiking cycle when rates were being hiked significantly and there was an expectation in Europe and the US that it would lead to an imminent recession. The economy surprised to the upside. I feel like that's a little bit what's happening in the corporate sector, is that it's actually turning out that corporates have a lot of levers to pull to navigate this. Some are within product mix, some are vendor relationships, inventory purchases, and so they're actually navigating this. And I think the bottoms-up credit work is signaling that there is a little bit more resilience, I think, than many expected. That does not mean, however, that we are expecting a more challenging growth inflation mix. So that doesn't mean that we aren't expecting some softening in the data from here.
Were you able to get to this point because we saw reversals from this administration when the market pushed back on some of their policy proposals?
I think we got to this point because companies have been a little bit more forthcoming about the options that they have at their disposal. And so when you look at retail earnings, for example, over the last month, some of these retail companies have actually guided towards they can actually offset the full cost of tariffs starting in 2026. Yes, there may be some near-term volatility and some near-term headwind, but I think those sort of concrete details are what's giving investors the comfort to actually do the bottoms-up credit work. That doesn't mean that all these companies are created equal. There will be some winners and losers in this. But I do think it's hard to ignore when companies actually present that full suite of levers.
Do we need Chairman Powell to cut?
I think that's probably more of a boon for the equity market, frankly, than the credit market. I think actually if rates stayed in this regime, that's a pretty supportive technical for corporate credit in terms of all-in yields. There's been some increase in default rates, but by and large, companies have incorporated that higher borrowing cost. So I don't think it's a prerequisite for continued resilience in corporate credit. I think maybe the equity market might be disappointed a little.
We can live with rates in the fours on Fed funds.
Yes, I mean, you've seen some floating rate borrowers default, but those are largely repeat defaulters. So by definition, that should have been priced into the market. I think ideally it would be nice to have some additional normalization cuts, but you know our view, we're not expecting easing. So I think that's really the base case for us.
What you just said there was fascinating, that that any kind of rate cuts would help the equity market more than the credit market. Is the credit market now a clipping the coupon, all-in yield story, period, full stop? And if rates go down, that will be challenging in terms of justifying why you should purchase credit at these spreads.
I think psychologically there is some hesitation for investors if we would see, for example, high yield all-in yields below 7%. Right, that kind of gets some attention. I think I do think that it's more of a why are you buying credit? For carry, for income, for yield, not for the total return boost from tighter spreads or lower rates. That's historically been the driver of total returns, not our real view in this cycle. For sure, it would help fixed rate, long duration product. But I think if you look at the fact pattern of inflation above target, growth holding in, still residual uncertainty, the commentary from the Fed, we're not expecting the first rate cut until the fourth quarter. So really, that's kind of our base case.
We heard that again earlier this hour. Amanda Lynham of BlackRock. Appreciate it. Thank you. Amanda Lynham there on the latest. You mentioned the upgrades from Goldman and Bank of America. I think we should call them what they are. Market to market, just a little bit, right? Both their year-end price targets were below where the market is right now.
They're market to market. It's slightly above where we are right now, at least when you look at Goldman Sachs.
Yeah, 63 and 66 of both of those banks, yeah.
So you could say this is just market to market, but the timing is remarkable. I mean, you have to just say they're coming out with this on the same day that we're reigniting the trade war, maybe, but the market's ignoring it, kicking the can, and it's just sort of notable.
Credit to Chris Harvey of Wells Fargo.
Yeah.
Just stuck with 7K. Never changed his price target.
I thought that was great. By the way, parenting tip, I'm going to start sending letters. If they misbehave, I'm going to send
to the
letters
kids.
to the kids.
Stating the same thing, just with an extension.
Exactly.
Do you think the behavior is going to change?
Thank you for attention to this matter. I hope so.
You think they're going to adapt and adjust to
You
that?
have until September 1st to change your behavior.
See how that works out. Or back to school for you, which is where they're going anyway. From New York City, we've got a new deadline. It's August 1st from New York. Good morning.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Was it easy to get the pandas to come back to Washington, D.C.? Did the Chinese say, we have some extra pandas, we don't know what to do with them, we're going to give them to you?
Well, it was a little more difficult than that. It probably took us, it was about over the course of a year where we had conversations with our colleagues in China, and we were able to get pandas here very quickly. I think it's a testament to the relationship we've built over decades, to the conservation success that we've had here with our pandas and our panda program. And so it was a lot of conversations, but I think we always knew in the end that we did want pandas at the National Zoo.
How many pandas are there in the entire world?
So this is incredible because this is all due to this panda program, and this is so important. So when we started with giant pandas 50 years ago, there were fewer than 1,000 pandas in the world, right? We're talking in the wild and zoos, fewer than 1,000. And decades later, there are close to 2,000 pandas in the wild now. Actually, I think a little over 1,800. There are over 700 pandas in breeding centers. So as part of this program, we have tripled the number of pandas on the planet.
But still a small number of pandas.
Because of this program, there are more pandas on the planet, more quality panda habitat in the wild, and pandas have gone from being endangered to being vulnerable.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Mellody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
A little bit of a dead cat bounce this morning, 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
He's open to talks. President Trump signs a wave of threatening letters to trading partners, but delays what is now a soft tariff deadline of August 1st. Plus, Wall Street is trying to keep up with the twists and turns of Trump's tariffs, and Goldman Sachs is raising its S&P target for the second time since May. And on the corporate front, Apple's AI efforts, already fairly poor, take another blow as the tech talent war heats up in Silicon Valley. Katie, what are you looking at?
I'm looking at that stock, and there's not too much to say. It's up about 0.1% right now. Of course, as Matt just said, it lost its top AI modeling executive to Meta in a setback for Apple's AI ambitions. Meta has been on a hiring spree, an acqui-hiring spree, to accomplish artificial super intelligence, which sounds even scarier than just artificial intelligence.
Yeah, it's going to kill us, definitely, sooner than climate change. Renewable energy stocks, speaking of, like Enphase and First Solar, are falling after President Trump called for new rules that would restrict access to tax incentives for solar or wind projects that already had been pared back by his budget bill. You can see these shares getting, well, in some cases, absolutely crushed, down 6% for First Solar. Katie?
We'll talk about all that and more, but let's get back to trade, because President Trump revealing a wave of letters threatening key trading partners such as Japan and South Korea with high tariff rates. The president pushing off those increased duties until at least August 1st, and he says he's open to negotiations.
Well, I would say firm, but not 100% firm. If they call up and they say, would like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now.
For more, we are joined by Bloomberg Washington correspondent Tyler Kendall. And so firm, but not too firm is the deadline. What are we expected to take from this? Is it a negotiating tactic?
Yeah, hey, Matt. Well, perhaps the administration could think that way. We know that one of the reasons why they sent out these letters to begin with, according to the Treasury Secretary, was to apply maximum pressure. They were hoping to light a fire under these trading partners to put their best offer on the table. But when we look at the rates that were actually proposed in these letters, they're not really, they're marginally different from what we saw on April 2nd. For example, some are a little bit higher. Japan, in one instance, is seeing a boost by only 1 percentage point. And many of these countries are actually facing the same rates that they were threatened before, like South Korea, South Africa, Indonesia, for example. Although probably worth mentioning that some actually did see some lower tariff rates, like Laos and Cambodia, the latter of which saw the biggest drop from 49 to 36%. I think what we can take from this is that President Trump has framed these initial letters, these initial countries, as the trading partners that the U.S. at the moment are the most frustrated with when it comes to negotiating. And perhaps that could inform how the White House looks at these negotiations going forward. You heard President Trump there saying August 1st is firm, but not firm, signaling that he's open to negotiating and that ultimately these tariff rates could change moving forward. One thing's for sure, this is all pretty fluid, Matt and Katie.
It seems like there's just a laundry list of deals and countries that need to be negotiated. But for a lot of investors, Tyler, what really matters is the relationship with China, that crucial trading relationship. What is the current state of play?
Right. So the Treasury Secretary, Scott Bessent, Katie, has indicated that he will be meeting with his counterpart in coming weeks. We know the U.S. still has been raising concerns about those export licenses when it comes to critical minerals, which really was seen as sort of the linchpin in keeping these negotiations moving forward. And what's been particularly interesting about this round of letters, these tariffs, of course, separate from the negotiations with China, are the countries that got some of these letters and were prioritized, like Japan and South Korea, which we know the U.S. had been prioritizing prioritizing for certain reasons, including the strategic ones, when it does come to countering China moving forward. Of course, these are sort of on separate tracks because the China negotiations are just totally different. But it has been interesting to see the White House try to light the pressure, light the fire under some of these Asian economies that we really haven't seen much movement when it comes to a deal.
Absolutely. It'll be fascinating to see how that shakes out. That is Bloomberg's Tyler Kendall with the latest on trade. But let's turn to equities right now because clean energy stocks, like Matt highlighted, falling today after the president called for new rules that would cut access to incentives for solar and wind products. Joining us now is Bloomberg's energy and climate change reporter, Will Mathis. And Will, it's interesting to see these big drawdowns in some of these names because we had a pretty good week in the sector last week, at least when it comes to their share performance. What exactly has changed?
Well, the Trump administration has clarified that there could be some additional restrictions on the eligibility for tax credits, which were already pared back by the big, beautiful bill. And, there was a bit of a jump last week, but that was kind of a jump based on avoiding the worst case scenario, that an earlier draft of the Senate bill looked really bleak for the sector, and what passed ended up being not as bad, but it's still much more negative than it was, this time last year before Trump came in.
Do you get any pushback from, we're going to talk a lot about Texas today. We have Ari Rastegar on, a real estate mogul out of Austin, and I think of Texas as the biggest state in the country for wind and solar. Are they getting any pushback from these, red states that also have huge business in renewables?
I think so far, Trump has been very effective at getting the Congress to line up behind him. What I think we'll see what that pushback will look like is when or if this starts to affect power prices, because, like renewables or not, they are quickest to build in many cases. It takes a long time to permit and develop a new power plant. If you want to build a new gas plant instead of a wind farm, it's going to take years to buy a turbine. And so if you have rising demand, like you're seeing, especially in a place like Texas, like you said, with AI demand and air conditioning demand with these hot summers, you need more supply. And if you don't get that supply that was going to come in, you're going to see prices go up. And if prices go up, that's when people, regardless of their political parties, start to complain.
All right, Will, thanks very much. Will Mathis there covers renewables for us at Bloomberg. Turning to the AI talent war in Silicon Valley, Apple's top executive in charge of artificial intelligence models is leaving for work at Meta. It's another setback in Apple's struggling AI efforts. Bloomberg Tech co-host Caroline Hyde joins us to explain. So, Caroline, we know that Mark Zuckerberg is paying tens of millions, if not $100 million to get the best AI minds in the country. Now he's taking from Apple, which already has issues.
It has issues, it has morale issues, particularly in the Apple Foundation model department, which the current exodus seems to be coming from. This isn't going to be the only executive. This is the leader at the moment. So Roming Pang led about 100 people in the Apple Foundation's models team. He's a distinguished engineer. If you're a key AI researcher, if you're a key engineer, where do you want to go? You want to go where they're paying you the big bucks, but they're spending the big bucks to win at super intelligence. That's where you want to take your talent. At the moment, you're looking at Apple and thinking, sorry, you're not even perhaps depending on the models that I'm building for you. You're looking outside to third parties like Anthropic or like OpenAI. Morale is pretty low. They've already lost some talent. This could just be the start of the marching that goes from Apple to places like Meta, which are spending and luring the top talent right now.
Well, you touched on what I've been wondering about, which is how this folds into the news of last week, that Apple is basically looking at outside AI to build that new version of Siri. And it makes sense to, I guess, pile that on to what we're seeing now when you talk about morale.
Yeah, there's peaks and troughs, right? So when you look back to WWDC, we did actually see a little glimmer of the fact that these foundational models that the Apple team have been working on, AFM team have been working on, did start to get opened up to third-party developers. You're going to build your apps on there. There was a feeling of enthusiasm for that. However, you then think, okay, what actually thus far does Apple Intelligence do that's built in-house? Maybe translates the odd text, maybe translates the odd email. But really, they depend on partners to do the bulk of image generation, image analysis. And therefore, even in their coding, Xcode that was being opened up, that's dependent on Anthropic and other particular rivals. So what really is being done in-house isn't much. And no wonder we're therefore starting to see some of the top talent wanting to get paid more, because we know that Apple doesn't pay the most over there, and indeed wants to go to a team that feels full of enthusiasm to be on the winning side and join the likes of Alexander Wang from Scale AI, to join the likes of people who have founded GitHub and be that sort of source. So I think we could see not just one, but many start to leapfrog. And I think this is a tale of two halves. You want to go to a winning team, you want to go to where they're spending money. Mark Zuckerberg is having lunch with these people. He's inviting them over to Tahoe, his personal house. You're going to get an ego boost when back at home at Apple, your ego is really diminished and you're seeing some of the AI heads lose their control of their remit.
Right, if you're in this unit. I mean, I'm looking at the screen time on my iPhone, right?
Yeah.
I spend 4 hours and 46 minutes a day.
That's pretty good, actually.
On this phone, but if I look at the breakdown in apps, Bloomberg obviously the most, then Chrome, then ChatGPT. I mean, Apple doesn't necessarily need to be one of the apps I spend my time on, as long as I'm doing it on this device, right?
Precisely, and I think that's always been the argument. They don't need to spend gratuitous amounts of billions of dollars building their own large language models, paying up for data centers, if basically they can be the home for all these services. But then what does Apple become? Apple becomes a longer-term, revenue generator, but maybe not the innovator. And where do top talent want to work? Innovation hubs. And I think that's where your pull and the push is going to come. What ultimately is Apple going to become? Are they ultimately going to rely on third parties? They should make that decision sooner rather than later.
Absolutely. That's the question that investors are asking. I do want to briefly talk about Meta before we let you go. What exactly is super intelligence? What exactly are they trying to build with these acqui-hires that they're spending gobs and gobs of money on?
Well, they're the one key company that we now dub a hyperscaler in terms of they're building their own data centers, they're getting their own compute, that are able to really monetize. Basically, the ad services have become so much better, far more efficient, they're driving revenue. And I think Mark Zuckerberg is starting to realize that, okay, if we're going to go all in on AI, if it's going to be a winning formula for my company, I need to win at super intelligence. Whether or not, I mean, if you hear Sam Altman and some at Brad Lightcap talk about it, they don't really know why Mark wants to lead super intelligence, but many would just say you can't come second. If you're going to build the underlying technology that is as good as a human across the remit, whether it's coding, whether it's building advertising imagery, whether it's becoming a productivity hub. Look, we've seen what Facebook did in its prior iterations. It wanted to be the place where you brought work. It wanted to be the place where you were socializing, but also doing your enterprise.
Well, where you go, right? I'm going to the Bloomberg, I'm going to Chrome, I'm going to ChatGPT. I'm not going to Facebook, right? I'm not 75. So
but what about
you
going to Instagram?
Yeah.
Exactly.
Because that's got, and what about Meta AI? Remember, they recently pulled out and have an individual app now, which is meant to rival ChatGPT. So I think Mark Zuckerberg's got his eye on a much bigger prize here that isn't just going to be your social networking and your advertising. It's going to be all things to all men when it comes to AI.
Well, I can't wait to see what exactly is built. Caroline, great roundup. As always, that is Bloomberg Tech's Caroline Hyde. You can catch her at 11 a.m. But let's take a look at this market right now. A little bit of a lift, but I stress a little bit, especially when you consider the drop that we saw in the S&P 500, in the NASDAQ 100 yesterday. Seeing this bounce back now as price targets are raised for the big index. Coming from Bank of America just in the past couple minutes, they just raised their price target to 6,300 for year end from 5,600. That follows that upgrade that we saw from Goldman Sachs this morning, the team led by David Kostin, also bumping up their year end price target. So there's some optimism creeping into this market.
Yeah, no, I mean, we're already at all-time highs, so it's pretty optimistic now.
But when it comes to the sell-side community, it feels like it always takes a little bit of time to get on board.
Yeah, no, absolutely, and we're starting to see more. I think as you get the certainty of the big, beautiful bill, as we start to get certainty from tariffs.
Do we start to get certainty?
Eventually, you'll start to see more price targets raised. Coming up, Goldman Sachs, as Katie just mentioned, also boosted its S&P target, and Deutsche Bank calculates the tariff impact on earnings. Are tariffs going to eat into margins? We'll discuss all that and more with Emily Rowland of Man U Life, John Hancock. This is Open Interest.
flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for.
All right.
We're giving this consumer a voice.
We're watching the NQ this morning. Don't really have any news. Let's switch over for a second.
Get your fixed income fix. Watch Bloomberg Real Yield
No news.
around the world right here on Bloomberg. Context changes everything.
Trump has a cabinet meeting.
Good morning. This is
Fed
Bloomberg
inflation
Surveillance.
expectations. You know what? The Treasury bill percentage rate has been moving
Television.
lately. But none of these are real major.
Let's get now to high interest. Look what's making headlines around the world. Amazon's
Not a
Prime
lot of
Day
news.
kicks
What we
off
got?
today.
We got about
The
13
retail
minutes till
event
the
being
open.
impacted by President Trump's
S&P
trade war as some brands
56.
opt out of the sale, and shoppers plan to pull back on spending because of tariffs. Prime Day lasts for 4 days, so it should really be called Prime Days. Robinhood CEO Vlad Tenev said the firm is in talks with regulators.
So I guess we'll have to
over
see
its
what happens
offering
into the
of
open. Let's go back to the NQ.
equities
We're watching
in
the
Europe last
NQ
week.
today.
Robinhood announced
Maybe we'll
retail
work the
investors
NQ
using its
depending
app
on
in
price
the EU
action. I
could
worked
start
the ES
trading
yesterday.
tokens that represent
Keep an
shares
eye on
of
both.
US equities on the blockchain.
I really,
Move
I
drew criticism
choose,
from
I kind of
companies
make
like
my decision on
OpenAI, which is weird. More than 100 people have been confirmed
which
dead
instrument
in
between
floods that
ES and
tore
NQ
through
depending
central
on price
Texas over
action.
the
So
weekend.
let's see what
The
happens.
news
Got
marks a
13 minutes,
grim
12 minutes to the
milestone as
open.
Searchers used boats, dogs, and drones to locate victims. 10 children and 1 counselor from the Mystic Girls Summer Camp remain missing. We'll continue to update you with any developments on this tragic story.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Open Interest. There were some new strategy notes out this morning that show the impact that tariffs may have on coming quarters. You have Deutsche Bank strategists expecting tariffs to reduce earnings by 2 percentage points for second quarter S&P 500 earnings growth. Meanwhile, you have Goldman Sachs raising its 12-month target for the S&P 500 to 6,900. That would be a gain of 11% after factoring earlier and deeper Fed easing. Bloomberg's equities reporter JP Barnard has the details. And JP, I want to start with the Goldman note because, okay, they raised their target. This is the 4th time this year that Goldman has raised their S&P 500 target. And I think that really speaks to how when it comes to analysts, when it comes to investors, when it comes to news anchors, we're just trying to figure out the narrative here.
Yeah, absolutely. And that was a problem basically over the past 3 months because nobody really knew, like, okay, the wobbles of April, how are they going to affect the consumer, the corporate earnings, the corporate margins, the overall economy, what's going to happen. And I believe now at this point, we have a much clearer picture as that the consensus is building that we are going to see a little bit of an impact on corporate margins. And there is a consensus that the earnings season is probably not going to be as good as the previous ones, but it's not going to be like terrible. And then on the other hand, like your macro picture is still like pretty good. I mean, inflation is still all right. I mean, maybe it goes up a little bit when we get these tariff impacts, but not dramatically. The job market is still doing all right. And so there's a sense of that investors are willing to look through the short-term noise maybe, but that the overall picture remains one of being bullish and being healthy. Positioning is also not extended. The market is not like super rich, maybe a little bit hot in the rally. But I mean, like bottom line is there are a lot of reasons to be optimistic here right now. And so I believe many people who stayed cautious over the past 3 months don't have another choice than just like acknowledge that fact and reflect that in targets and estimates.
JP, how different does this market feel than early April? I mean, we thought tariffs were going to result in empty shelves and prices so high that consumers are facing starvation, like potentially world wars. And it looks not so bad, does it?
Yeah, absolutely. I believe like the narrative that we had for a very short term in April where everybody was like, okay, we're going to get like a probably deep recession and a total breakup of global supply chains and global trade, that narrative lived up for just a couple of days, I would argue. And now we are in a much more moderate universe where we feel like, okay, the world is going to move on from tariffs. Okay, the overall tariff percentage will going to be higher, and that is going to be kind of a tax thing for everybody, but it's not something that is going to derail the overall economy. It's not going to derail the consumer at this point. And I mean, like, there's always a chance that Donald Trump is doing another step, and we saw this over the weekend, that headline risk is not fully fading at this point. But I believe everybody has understood now his tactics, his way of maneuvering through the whole thing, and that we are not getting this worst case scenario.
All right, JP, it certainly seems like that is the way the wind is blowing. Really appreciate your time. That is Bloomberg Equities reporter JP Barnett. And let's keep this conversation going now with Manulife John Hancock co-chief investment strategist Emily Rowland. Emily, it's great to have you with us. So we talked about the Goldman call. You also have Bank of America bumping up their price target as well. And I was just listening to Bloomberg Surveillance. You had Amanda Lyman on from BlackRock saying that there's a risk here of being too defensive. And I'm curious if you also see the fog clearing to such an extent.
You know, we do, Katie. You know, there's a lot of things going right today. You look at things from a technical perspective. Of course, we've got new all-time highs in the S&P 500. We've got sentiment that's gone from deeply negative to positive, but probably still has some room to run here. We've got a broadening out of market participation with financials and industrials getting in on the game. And then from a more fundamental perspective, the U.S. economy is doing fine. JP just talked about the labor market. The last few reads we've gotten on that, from initial claims to non-farm payrolls here, have been pretty solid. Corporate earnings growth, analysts are penciling in 5% this quarter. It might not be the 13% that we got last quarter, but still on solid footing there. Corporate default rates are low. You know, we think really the only challenge here is that there's very little risk being priced into markets. That's probably the biggest risk right now. The S&P 500 is trading at 22.3 times forward earnings. That's close to the 10-year high. Corporate spreads are narrowing in on 268 basis points. That's incredibly tight, near 10-year tights. So we're just at a tough starting point for markets, but certainly a lot of things going right, but it is reflected in a price.
What about opportunity, Emily? I have a trader who always writes in about deregulation. Is that something that no one is really looking at?
Yeah, certainly. I think there's deregulatory moves going on in the background that are going to be accretive to corporate earnings. I think also the...
All right, guys, we got 4 minutes to the open. We're watching the NQ this morning.
Expensing of CapEx should result
Anyone
in
who's hanging out, if you made any trades, let me know how you're doing.
That's also going to be a positive for
Heading into the morning, we don't really have any news on tap.
that should definitely support corporate earnings. I don't want to paint the most amazing picture out there because we have seen record profit growth, and we are starting to see some pressure on corporate margins as the cost of
He
capital
had passed.
remains elevated
How's Shades
and revenue
doing?
growth
I haven't seen Shades in a while, man.
identifying those companies that can do a better job.
He stopped in, like, I think when I got back from seeing, like, I was at my dad's
This is Bloomberg.
for a couple weeks. I came back, he stopped in, say hi. I guess he got his work visa or permanent resident card or whatever you get, like, you know, when you move to, he's in Scotland, he moved from Canada to Scotland. Anyway, he's working and it's during trading hours, so you know, I was back for a week and then I was gone to Vegas for a week, so I haven't seen him in a few weeks, so I hope he's probably doing good. But he blew both those. He came back and said, yeah, he blew them. He had 2 of them and he blew them up. But now, you know, man, he's starting out, you know, he just got married. He's moved to another country, just got a job, so he's probably pretty busy than trying to be a trading bum delinquent like the rest of us. So I wish he'd stop by. I'd like to hear how he's doing. Yeah. I'm on the other spectrum. I'm closer to the other end. From I'm close to the opposite end from getting married and getting started.
So the question he asked you was something like,
he's probably gonna have kids and shit soon. And
what is the answer? I don't think he gave you a chance to really answer that question, but what is
once
the
that happens and you got yourself a mortgage and then you got a lot of shit to worry about.
70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank it.
All right, so we're 2 minutes to the open. Yeah, but I hope he stops by. He usually stops by in the morning and says hi when he does, but I don't know if I can message him on Twitch or whatever. Let's see how he's doing.
Bank Secrecy Act, KYC, know your customer's customer. You know, there's a lot of burden upon the banking system.
Well, you never know what's going to happen at the open, but this action right here, I really like this for front running the short. But you could bounce right off the VWAP. 1 minute till the open.
Another area that comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies.
I mean, this is almost like playing poker for a living. I used to play a lot of poker
They said that's a high risk
before my daughter was born, but after she was here,
that came up as an issue. So at the end of the day,
I didn't really have time for that. Yeah, I played a lot of poker. If my daughter hadn't come along, I probably would have ended up being a poker bum.
top stories. Insight with
Well, the thing is you kind of, once you get your bankroll going and you kind of understand the game and you understand how to play with somebody long enough to try and figure out what they're gonna do. It's like if you've got the time to put into it, it's kind of like a long ball game.
Moments away from the start of trading,
You know,
this is
in
Bloomberg
pattern. So you
Opening
did get the
Futures.
short to the
I'm Matt Miller. We're
VWAP. I
looking
called the
at
short to the
futures that are
VWAP.
doing not a lot on the S&P. We had a pretty
Market's
decent
open.
sized drop yesterday,
But
from
at this point in my life, I would
So
never,
we're in
I would never
wait
go
and
back
see
and
mode.
try
A
and
lot
do
of traders
anything
will
like
tell
that.
you when it comes to tariffs.
You know, that was a
You can
while
see the
ago,
Nasdaq futures
when
up
poker
0.2,
was
Russell
first
futures up
big.
4. So maybe more on the positive side.
COVID really
Near the
killed
opening
poker,
bell,
you
At
know
the
it.
New York Stock Exchange, you've got Core Civic ringing the opening
It used to
bell.
be so good. You go to a
They run
2-5 no
prisons,
limit game,
so when Donald Trump was elected,
Texas
the stock
Hold'em, and there'd
basically
just be
tripled,
so much
right,
fucking
overnight.
money.
Down at the Nasdaq, Natera.
You'd have any jackhole that just watched the World Series of Poker on TV show up with 2-3 grand. You know the best time for the poker game was like when all the college loan money hit.
Not moving, but I
So
promise
you could
it's
go to a
interesting
game
if you
after
take a
work,
look at the details.
be
We're
there till
watching
midnight.
Apple because it
Yeah,
lost its top
yeah.
five
That's when it
modeling
first
executive.
started. When Chris Moneymaker won, that was the big kickoff. It really was.
Seen plenty of setbacks. Remember that Meta
It really
has been on an
was.
acquihire
And then,
spree
you
to
know,
accomplish
4,
artificial
5, 6
super
years after that, that was
intelligence.
kind of
Apple
like the
shares
sweet
can't
spot,
really
man.
decide what to do. They were down, now they're up, but we know that they've been a big underperformer
Yeah.
so far in 2025.
Yeah, well, all he did was just go all in and win like 15 hands in a row, and then he had enough to get to the final table.
5%, Nextera down 2, First Solar
I think he's got his own league now or something. I saw his name up on a billboard when I was in Las Vegas in an Uber.
projects that already had been pared back.
But that's what he did, is he just started going all in and he just kept winning.
That's a roundup of some of the stocks we're watching.
It wasn't any skill, and that's kind of how a tournament goes, is you get yourself in a position to go all in and you got to double up 2 or 3 times and get lucky, and then you have enough chips, then you can start playing poker at the final table. Or the last 2 or 3 tables, depending on how big the tournament
Trump
is.
said that's not too firm.
I've won small tournaments before, but I don't really like the tournament because you can't, there's not a whole lot of skill going on until you get to the
our
end.
investment process, because they're just so difficult to handicap here. You know, it's really
But I got to
easy
admit,
have analysis paralysis.
this one
when
tourney
trying
at
to
college,
digest all the
first hand we
news
had, I
around,
had
the big beautiful bill and around tariffs. What we're hoping here is that investors
Yeah.
can move on to away from politics and towards
Those hands are the worst when the guy with 2 jacks hits his 3rd jack on the
earnings
flop.
season with the big banks. It kind of reminds us of, I don't know if you remember that famous Bill Belichick interview about 10 years
But
ago.
that's tourney play, man. Everybody's all in automatically with a
Just
high
keep
pair.
saying, we're on to Cincinnati. We're on to Cincinnati. We're on to Cincinnati. And that's kind of what we're thinking about as it relates to earnings season here. And analysts are penciling in 5% earnings.
You know, it's
growth
kind
for
of
the
like it's
S&P
easy to compare
500.
tourney play to like trying to get through an eval with a prop firm. You just keep going all in till you get it. And then the cash game, you can't do that. So when you got a live, when you got your live cash account, you can't be doing that. That's a good analogy, man. I'm gonna have to write that down.
Stocks that can produce solid earnings results have the ability to see some price appreciation into earnings season.
So numbers aside, when it comes to the upcoming earnings season,
I think the people that win those, like the people that you see in those tournaments, they're not really the best players. Because you don't really, I don't think you really need to be the best player.
And you think about the narrative from
You just
last
need to
earnings
get lucky.
season, it was that basically companies didn't know what was going to happen.
You
No
need-
one did. This time around, what are you expecting
And
when it
when,
comes to the guides?
and then when me and my friend moved to the capital city, we were trying to find games, but we were like 19, poker's 21, so we went to the forums.
Companies, but you're right, it was amazing.
Working.
Last
That's
season,
cool,
we
man.
saw companies giving 2 sets of guidance. guidance all
They thought
together.
you were the cops trying to set up a
little
game.
bit more of a
Try-
robust set of
That's
information,
hilarious.
From corporate leaders this quarter.
Dude, that's
we're
funny.
watching more specific specifically is just sort of how depressed
They thought you were a cop troll in the forum
been
trying to find the
in the United
games to
States
bust.
versus
That's
Europe.
fucking
So you look at
hilarious, dude.
analysts penciling in about negative 5% growth for MSCI EFA earnings.
This last time I
Meanwhile,
went to
they're looking
Vegas,
at,
I
you know,
checked out the poker rooms. They
mid-single-digit
weren't near
returns
as
in the
big as I
US.
remember,
European
like
markets
before
have
COVID.
far outpaced their US
There's just not as
counterparts,
many.
even with
There's not
negative
just not as many
earnings
people
growth.
playing
A
anymore.
lot of that has been driven by the weaker dollar. I think that's going to be another
Like
important
Atlantic City,
conversation
you
in
could
the earnings
you could
season
go
that's
to Atlantic
upcoming
City
here about how currency
and you
dynamics
could
have
find
impacted
2 or
profits.
3
So we
2-5
think that
tables
there
almost
can
every
be a
night of the week.
comeback here, given those better
You know, I think it'd
economic
be
and
hard to
relative
find a
earnings
2-5
trends in
game.
the United States that have
Mika
really been
Massey, that sounds
discounted
familiar.
versus European counterparts.
So do you sell Europe short and use that cash to buy the U.S.? I mean, what a pair trade.
Is that a
No,
pro,
we would be
like a
fading
pro
gains
player,
in some of
poker
those
player?
areas of the market. You look at things like European financials up 20+% this year, and their earnings have been negative 8%. To us, this has been a big shift in sentiment. It's sell everything America, whether it's stocks, whether it's dollars, whether it's bonds. We've seen huge capital flows into Europe. We still have international stocks in our recommendations, but it has been a relative underweight. I know that's very out of consensus.
He's playing
now, but
against
we're
the
digging
casino
into that,
most of the
given
time.
better
Oh,
relative
professional
economic and
gambler.
earnings trends in the United States.
Okay, so
Absolutely
he
nice to
plays
hear
like
a
probably
contrarian
plays like
there. I
blackjack
want to
and
go
other
back
games
to
and just
something
finds
that I
an
mentioned
edge.
in the previous block, and that was that comment
Oh,
from
okay,
Amanda
okay,
Lynham
yeah.
over at BlackRock. She was talking
Yeah.
specifically about
There's a
credit,
lot of
but she
people
said
that do
there's a real
streams
risk
that
here
go
being
around and
too
play
defensive,
slot
that,
machines
there's a
and
risk
stuff.
of being too in love with those high quality names. Again,
Yeah,
that
I
was in
know.
the
You got to be
context
careful.
of fixed
There's
income, but do you think
I
that we
used to
should
play a
apply
lot of
that logic
blackjack too, like
to
when
the
I
equity
was
market as well? That maybe you should
when
be
I was
looking at
in
maybe
the
more of
army
those
in
growthier
Louisiana.
companies right now?
Yeah, Katie, I listened to that
Yeah,
interview. I thought it
I
was
believe
great,
it.
and we do like growth.
I
We've
played a
been
lot of
overweight
$5
US
blackjack. That
large
was a
cap
long time
growth
ago
stocks
when
for
you could
years
play
now.
$5
The
blackjack.
challenge, of course, is
And if you're not
valuation. The
careful,
S&P 500
the
growth
dealers
index is trading
the
at almost
dealers
a 50%
will
premium to its 20-year
the dealers
average.
will
We're
try and play
still
your
there
hand for you,
because we think that the
and
earnings can
they'll
deliver, but we
swipe
have to
bets
protect
and they
against
won't
that
pay a
valuation
if
risk
you've
by owning
split and
some
double
things that aren't
down, they'll
safe.
accidentally
We've been
not pay
looking really
one.
closely
It's
at stocks that
you
have
you can
superior return on equity.
you
So
can find a lot of
greater
stuff that
shareholder
they'll do.
profitability there. And marrying that
But
with
then I'd
having a
have
market
dealers
that
that
has
liked
solid
me
peg
that would
bar.
pay me
We
when
only
they
talk
weren't
about these things
supposed
on
to,
Bloomberg,
and I'd
of
just
course.
tip them,
Everybody's got their
and they just
CFA
pretend like
textbooks
it
out,
didn't
right?
happen.
So that's PE divided by earnings growth. It's a
But
measure of
I
how
was a
much you're
degenerate
paying
back. Well,
for
I
future
mean,
earnings
fuck,
growth
man.
because we don't want to
My second,
overpay. So it's bringing us
back
to
then,
sector overweights in
dude,
areas
this is a
like
long time ago,
technology
you
and
know.
comm services,
The
but
legal
also
drinking
more
age was
defensive
18
parts of the
still in
market like
Louisiana.
healthcare,
So
utilities.
basically,
It's really that intersection
our
between
all the
quality
guys that I
and
was serving with at the
valuation,
time, our
cheaper
second job
valuation that's
basically
going
was
to, I
drinking
think,
beer and playing
create the
blackjack and
playbook that you
getting in
want for the
fights in
remainder of the year.
fucking redneck local bars and
all
shit.
the time, the Bloomberg Index browser, and
I don't think you could
year-to-date
do half the shit we
returns,
did back
are
then
just
anymore.
down the line strong in fixed income, but especially in things like
It was
EM
fun.
and high yield. Are those opportunities
It was
fading,
fun then.
or
I
do you
don't
think
think I
there's
want to
still
live
legs
like
there?
that now, though.
Still
They tried to
legs,
scam
you know,
him
as
by $1
long
million.
as
He went
default
to
rates
cash
stay
in
low
chips.
and the economy stays on solid footing, which
Really?
is what we're seeing right now. You know, it's not much of a.
No
You know, we do
shit,
think there's
dude.
some opportunities there. The challenge again is the starting point where you're near 10-year tights on corporate credit. We've been
One
neutral
second,
on
hold
the
on.
space because our view has been quite constructive.
How the
on
fuck
the
do you get 11
economic
million
health
in
of
chips
corporations
anyway?
here. But if you look to high quality bonds,
Yeah, they keep all
they aren't
that, like all the game
priced
tapes.
for
If you
perfection the way equities and credit
if you have
are.
a problem
In
with
fact, we
the
don't think
table
bonds
and
are
you
sniffing
and you
out the
say you want to talk to the
disinflationary
gaming
trends that we're
commission,
seeing across
things
housing
fucking
and
change
shelter,
real
which is a
quick.
key measure
Because most of the time there's a
as it relates to
representative from the
inflation. There's
gaming
so much
commission, at
myopic
least here in the
focus on the
States.
potential inflationary
You know, and then they play back the
impact of
tapes,
tariffs on
and
the
it's
good side
not a
of our
fucking
economy,
game.
but we have to
Like you
remember that
can,
that's a
if
much
you know
smaller
what's going
part
on around
of our
you
economy.
and
In
you
fact,
catch them, you can
services
get them
is
by the
much more
balls.
significant. Shelter sector and housing being the
But how
biggest
the fuck do you win
component of
11
services.
million?
And there's a
Go
lot
fuck
of
myself,
things
man.
changing on the housing front. Supply
I only
is
need to
coming
do that
online.
one
We had
time, and
more
I'm never
supply
going
since
back in a
2020.
casino again.
Demand is slowing in the face of unaffordability and untenable insurance costs. So home prices are actually starting to roll over that we think has a massive influence on disinflation and potentially the ability to counteract any potential goods inflation. The bond market's not sniffing that out. Yields are still elevated. We would take advantage of those elevated
Holy
yields.
fuck, dude.
Lock in income for clients.
What kind of
get
balls
that
does it
cash
take
off
to
the
do that?
sidelines, and create an income stream that can last for years.
Yeah,
Jesus.
encouraging people to move out of cash. It's been
Is somebody
a
backing
difficult
him?
climb to get them to do that. Emily, it's great to speak with you. Hope to do it again
too.
soon. That is Manulife, John Hancock's Emily Rowland. Let's get a check.
My
on
wife
this
works.
broader equity
She's in
market right
banking.
now. You
She's
can see we're
she
just
has
about unchanged when
a
it
big
comes to
branch
the
here
S&P
in
500.
town.
We're still pretty dang close to all-time
and there's a
highs when it comes
professional
to your big
gambler that
benchmark,
has an
even with
account
that
there.
decline
His
that we
accounts
saw
go up
yesterday.
and down,
When it
up
comes
and
to the
down.
split
But
of
he's
how
got a
global stocks are
backer.
doing
He's
right
like
now,
some
it's
old Indian
almost
dude that
even.
owns
You have
15 fucking
268
gas
names
stations
in the
with
green,
Slurpee stations and
232
shit.
in the red right now.
That's
You look
just
at
has
what's
so much
leading.
money. He's
You
bored.
got a
He
big
just
checkup here.
backs
Nvidia,
this guy,
Oracle, Broadcom,
just
Tesla, Meta, the list
goes around the
on.
casino
For
and
some of
has
these
fun.
names, this is just a
He doesn't
bounce
even
back
fucking care.
from what we saw
He'll give this guy
yesterday. Still
150,000 at a
positive
time,
contribution, but
and
then you look at what isn't doing too hot. Apple actually
they're just shuffling money
those
back and
losses
forth,
accelerating
partying.
right now. We know that they lost one
I need
of
a friend
their
like
key
that.
executives in
No, I don't
AI
need a friend
to
like
Meta.
that. I don't
Shares
need a
down
friend
about
like that.
0.7%. JP Morgan also a sizable bump down,
Yeah.
almost 2%. This is what we're gonna
I don't
see
need
on the
somebody to
sector
finance me in a
level as
fucking
well.
casino.
You-
Yeah.
because you do
Yeah,
have
well, that's what
some
it is,
of the
man.
big
Yeah,
names. You
150K,
have
fuck it.
energy,
We'll run it
healthcare,
one time,
materials,
see
and
how
then
we
tech
do.
up at the top. On a points basis, that
I'd rather
might be
put
the biggest
150K
contributor
in a
right
cash
now, which
account and
probably
trade.
speaks to how contained
I'd have a
this
better
movement is
chance
in
at
the
coming
benchmark.
out.
But then you go to the bottom, you have financials, consumer staples, and
I mean, how many
utilities.
contracts could
Down
you
at
buy
the
on the
bottom
NQ with
by
150K to let
1.4%. We
run?
know that this has been one of the hot spots of this market, Matt Miller.
Yeah, very interesting to see consumer staples and utilities down there at the bottom, healthcare and materials up at the top. So those defensive sectors kind of split. That's what I obviously always look for. Coming up, we're going to talk about Apple losing its top AI model engineer to Meta in a potential setback for the iPhone maker's push into artificial intelligence. But is it really, if Apple has decided on partnerships as the way forward? We'll talk to Mandeep Singh about
All
that
right,
next.
looks
This
like
is Open Interest.
trade box not going to turn on. By the way, anyone hanging out, I've been watching the ES the last few days. I'm watching the NQ right now. My buddy Snooze is hanging out with me. He likes the NQ, so I'm just watching that. If anyone wants to see the ES, just let me know. I'll switch over and we'll analyze where the ES is at. I can't remember how much you need. Oh, 500 for a mini. So with 150K, man, you could like do 30 or 40 minis and be okay. You could really fuck some shit up, dude. You know what I'm saying?
As Bloomberg's global
Yeah,
financial correspondent, I get
minis. No, 500.
the way money flows around
Yeah,
the world.
300. Oh, buy 300 minis. Yeah, that's. You gonna buy 300 mini contracts? You do. That's fucking insane, dude. That's some degenerate shit. You might as well go play 250 a hand at the casino.
I love all these new Wall Streets, Y'all Street, Wall Street South.
Yeah, but you gotta be careful it doesn't go 20 ticks against you before you get your 10. You know, that's the only
Are New
thing.
Yorkers are negative?
Yes.
Anything that trains people to understand probabilities.
All right, I gotta work some leads, dude. Yeah, you have to believe. Yeah, I believe in myself. The problem is you keep doing it. You can't do it every single time.
I did. It was a busy
The over trading will get you. All right, I got to work some leads. I'll be back in a little bit. The trade box should turn on about 10:50. We'll turn on at 10:15. Right now we're in VWAP chop mode. So if you look at the ES price is above the VWAP. We talked about this the other day, and the NQ is below. So we need to get out of this oscillation zone before we start hunting an entry. You see how we're below here? So it'll just pull it back and forth because the VWAP is such a strong indicator. But we're hanging out on the NQ today with my buddy Snooze. If anyone wants to see the ES, just throw something in chat. But I got to work some leads, guys. I'll be back in a little bit. All right, brother.
Only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Datadog is getting downgraded to a sell over at Guggenheim as OpenAI, which is Datadog's largest customer, starts to build its own monitoring system. That's good for a 4.3% decline. Next up, we have Wall Street weighing in on CoreWeave's all-stock acquisition of Core Scientific. And it's not positive. Both Stifel and Mizuho are downgrading the stock, citing near-term overhangs. It's still up almost 300% since its IPO, but down about 2.5% today. And finally, we have Capital One getting upgraded to a buy over at TD Cowen. The firm sees upside after its purchase of Discover and sees potential for significant buybacks in the future, Matt.
All right, so buy there for Capital One. Let's get to Apple. The top executive there in charge of artificial intelligence models is no longer working for Apple. He's leaving for Meta. It's another setback in Apple's struggling AI efforts, or is it? Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, is here. Mandeep, I've been struggling with this all day because I use this device constantly, right? Or my iPad or my Mac at home. But I don't use any Apple apps on those things, except for messages and music, right? I'm using Google's Chrome. I'm using Bloomberg. I'm using ChatGPT. So why does it matter if the top AI guy left, since they're going to use those other partners anyway to generate revenue?
So, I mean, when I look at Apple, traditionally they have developed their own ecosystem, whether it's their operating system, their own chips. They've optimized for performance. And you're right, for certain cases, apps, you know, from Google serve better when it comes to traditional search.
They don't go into search, right?
Absolutely. But with that being said, I think AI is that sort of technology that it will impact them in terms of, you know, providing a better voice assistant when it comes to Siri, or even, you know, scheduling the calendar. So Apple does have a calendar app. Well, what about scheduling the calendar through the AI that's on the phone? And that's where, you know, having an AI play does matter. I mean, you talked about ChatGPT. The usage of ChatGPT app is growing to almost 30 minutes per daily active user.
I use it 54 minutes a day.
So just this entire hour.
And imagine if that type of AI was on the phone, where you could trust the AI, was focused on, you know, protecting your data, it didn't really offload it to cloud, then you will end up using it. So it is about the future, and that's what everyone is betting on. I mean, to me, both Meta and Apple are lagging behind in AI, but what Meta has done is really gone big in the last couple of months in terms of acquiring talent and paying up. And you can only do it when you're a founder-led company with all the voting rights that you don't care. You just want the top 50 researchers on your platform.
Well, why doesn't Apple pay up? Apple has a famous amount of cash on hand. They have so much money. Why don't they just go out and buy something if they're so behind in AI?
Well, so it's about capital allocation, and what Apple has done traditionally is, out of the $100+ billion in free cash flow they generate every year, they buy back their stock. They have done a lot of acquisitions, but those are more tuck-ins. They've always been about getting people, and that's what I think Meta is preempting here, is they're going big and making sure the top 50 AI researchers are working for Meta, and they're really bidding up. I mean, when I look at, you know, acquisitions, CoreWeave paying $9 billion, that's almost, you know, $30 million per employee, because the company they bought is a 300 people company.
Yeah.
So from that perspective, right now we are in an environment where AI researchers are really getting bid up, and it shows up.
When it comes to Apple, I mean, they're also extremely conservative when it comes to M&A. I was reading a Mark Gurman piece that pointed out that their biggest ever purchase was Beats In 2014, that was $3 billion. And in their entire history, they've only made 3 transactions more than $1 billion.
Yeah, it's a great point. They just don't spend. They have a ton of cash.
Mhm.
They don't spend it on acquisitions. I was given an article by Mac Rumors on the iPhone 17. It's rumored to. It's rumored to be coming out in a different color than you've ever seen before. And I'm wondering if is that what they hope is going to drive the next iPhone purchase cycle, blue?
At the WWDC, they showed the liquid glass display, so that's a big change in the look and feel. But
Yeah,
look,
but not enough to make me buy a new phone, right?
And that's where the AI element comes into play as well. So look, AI will still be predominantly on the cloud. I think on-device AI hasn't really taken off just because of the size of these models. They require a lot of memory, so you can't, load up a large language model on your phone. You need a distilled version. And that's where there are challenges in terms of doing things on device. But Apple still owns the distribution. When it comes to the ecosystem they have, whether it's through partnerships or their own AI efforts, they will figure out a way. It's very easy to think, oh, they're losing traction. They're just prudent about how they go about things. But clearly, they have underinvested in AI, and they'll have to fix it either through acquisitions or some big alliance, whether it's with OpenAI or Anthropic or Google. They just have to find that way.
Well, for those keeping track at home, Apple shares now down about 16% year to date. Mandeep Singh
It's
of
still
Bloomberg
a $3.1
Intelligence.
trillion company.
Yeah,
It's still
really
worth almost
big.
twice as much as Facebook.
They're really big and they have a lot of money, and maybe they should spend some of
Yeah, I
it,
hear you.
buy a company and get ahead in AI. That would be something. Coming up, one winner from President Trump's tax law, SoFi. Details next on how the private student lenders may benefit. This is Open Interest.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacroix, the ECB forum in Central Portugal, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on stocks right now. In the horseshoe, you can see the green chiclets dropping. Not huge gains, but the S&P 500 clawing back a little bit of what it lost yesterday. Right now at 62.36, still a relatively high level. Take a look at some of the stocks that are moving. The big kahuna is Apple. As I said, it's worth $3.1 trillion, a little more than that, even with today's drop, which is only 0.4%. Facebook climbing about 0.2%. So not big moves in terms of the mega cap stocks. You do have SoFi moving up 6.7%, and we're going to focus in on a SoFi story, Katie, right now.
Yeah, let's do that, because we've talked a lot about the companies that would be negatively hit from the tax package, but let's focus on one industry that could benefit: private student loans, lenders, and SoFi in particular. Joining us to explain now is Bloomberg's consumer finance reporter, Paige Smith. So, Paige, you take a look at shares of SoFi. They've been on an absolute tear, currently trading at their highest level since 2021. What is the calculus here?
So Trump's big tax package has now been signed into law. So I think that it would really give private student lenders a boost, because if you think about it, students are still going to need to borrow for college. And this package limited the amount that some grad students and their parents can borrow to give, those students the opportunity to get some higher education. So it's not like those students are going to just stop going to school. They're going to theoretically look for other options, and that's where we see analysts coming in and saying theoretically that SoFi would be the company that would benefit.
The most, right?
The most, yes.
And it's going to be a little bit more costly, right? Obviously, SoFi is going to charge a little more than you would get with a FWSB, which is the Federal Work Study Program.
FWSB, yeah, got that.
Remember that? These students are going to have to pay up.
It depends. I think there are a number of different options, of course, but yes, I think that it would be fair to say that sort of federal student lending programs were kind of the gold standard for students who were looking for higher education loans. But, it's important to remember that SoFi has been in this space for quite a long time. This is kind of where they got their start, and they know the area very well. So they have actually been sort of moving away from student lending and some of the loan-based business. It's not like they've abandoned those businesses. It's just that the company has put more of an emphasis on fee-based revenues. So, but theoretically, if there's this opportunity to be seized, Anthony Noto, the CEO, said on the previous earnings call that they would essentially go after the opportunity.
You know what? When we were kids, some parents would put college tuition on credit cards. Because you could get so many points. But I don't think they allow you to do that anymore, do they?
That's a good question, but that would be a pretty costly student loan. I'll leave it at that. I don't know if it's worth the Amex points.
Paige Smith covers consumer stuff for us here at Bloomberg. Coming up in the next hour, Hamilton Lane co-CEO Eric Hirsch on tariffs and the big, beautiful bill. Plus, we talk to the Oracle of Austin, Ari Rastiger, on real estate in Texas and nationwide. This is Bloomberg.
Why is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having among the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. The death toll is up to at least 104 now from catastrophic flooding in central Texas as a massive search continues for the missing. CBS's Maurice Dubois is on the banks of the Guadalupe River in Ingram.
Officials said they had rescued more than 850 people since the flooding began, but we have definitely seen the mood here shifting over the past 24 to 48 hours, with the grim reality setting in for families waiting for news.
Louis Depe has been searching since Saturday for a friend's missing daughter.
There's so many people willing to give everything to try to find these kids, and now it's probably turning into a different mission. Yeah. But the spirit of Texas is live and well and strong, and we're going to keep looking until everyone's found.
The president met with Israeli Prime Minister Benjamin Netanyahu and pressed him on Gaza. Correspondent Nancy Cordes is at the White House.
President Trump told reporters that he still thinks there is a good chance that a ceasefire deal can be struck this week. According to an official briefed on the negotiations, it would involve a 60-day pause in hostilities with a phased release of Israeli hostages and the withdrawal of Israeli troops from parts of Gaza.
Israel is still striking Gaza with hundreds killed in the past few days. Many were trying to access food. Airline passengers are welcoming news that after almost 2 decades, the TSA is dropping no shoes allowed rules at security screenings.
I guess it's a big time saver in the fact that I'm trying to take my shoes off, put them back on, while also trying to wrangle my kids, get my bags, do all the things. It's just one more headache that you have to manage.
I had less smellier airports, I guess, so that's good.
The phase out began at a handful of airports yesterday, including Baltimore, Washington, Fort Lauderdale, and Philadelphia. There's a new malaria drug for babies.
Until now, doctors have given infants drugs made for older children, but that raises the risk of overdose. Swiss regulators have approved the new drug for babies developed by Novartis, which is offering it on a not-for-profit basis. Dr. Richard Price is with the Worldwide Anti-Malarial Resistance Network.
Nearly 40% of the world's population live in risk of malaria. There are 207 million cases estimated to occur each year.
About 600,000 people die of malaria each year. 3/4 of them are children under 5. Michael Wallace, CBS News.
The CDC says emergency room visits for tick bites in the Northeast are at their highest level in 5 years. Dr. Thomas Mather at the University of Rhode Island blames a damp spring.
So we had good conditions in May and June for tick survival.
The typical disease carrier in New England is the deer tick, which can be as small as a poppy seed. This is CBS News. Several leading medical groups are suing Health Secretary Robert F. Kennedy Jr.
The lawsuit accuses Kennedy of endangering public health with new COVID-19 vaccine recommendations. The American Academy of Pediatrics, American College of Physicians, and other leading medical groups are calling on the court to stop what they call Kennedy's unilateral, unscientific directive and restore the COVID vaccine to immunization schedules. In May, Kennedy announced on social media that federal authorities would no longer recommend COVID-19 vaccines for healthy children and pregnant women, resulting in sharp pushback from health experts. Steve Kathan, CBS News.
Royal watchers are in a tizzy after French President Macron arrived in the UK today and greeted Princess Kate with a kiss on the hand. Some say it was charming but uncommon and wonder if it broke protocol. The answer is no. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are also streaming live on YouTube, so head over to YouTube and search Bloomberg Live Radio, and that's where you'll find us. Coming up, we're going to check in with Sean Donnan. He's a Bloomberg News senior economics writer. Get the latest reporting on trade discussions between the U.S. and various countries around the world. Kim Forrest, she's a founder and CIO of Boca Capital Partners. We'll get her thoughts on the markets. Brandon Daniels is CEO of Exeger. It is a company that focuses on trade, supply chain, and how are tariffs impacting the global supply chain coming up. So, and then in the 11 o'clock hour, President Trump hosts his cabinet meeting at the White House. We will bring you parts of that cabinet meeting in the 11 o'clock hour as that occurs. So we got a lot coming up over the next couple hours. Lisa Mateo is here with me, Paul Sweeney, and we've got a lot happening. Let's go right to John Tucker. Getty Bloomberg Business Flash. John.
All right, guys, and this Bloomberg Business Flash being brought to you by IBKR. Will the U.S. Consumer Sentiment Index exceed 56 in July 2025 at IBKR Forecast Trader? The yes was recently at 24%. Start predicting today at ibkr.com/forecast. Last trading day for this contract, July 31st. Right now, the major stock averages, they have turned lower. Investors are hopeful the trade war will de-escalate, though. 5 of the 11 major index groups in the S&P 500, they're still higher, led by energy, and it's the solar stocks that are taking it on the chin after President Trump moved to scrap clean electricity tax credits a little faster than expected. Those stocks include Enphase. Right now, that is down just over 5%. Chris Grisanti, meantime, at MAI Capital, is cautious on these markets.
You definitely have to respect what the market's done since April 8th, which is up over 20%. So you have to respect that. But because of that, we're back to 24 times forward earnings. We have the tariffs sitting in front of us like an undigested piece of gruel.
Well, right now, the S&P 500 7 points lower. That's down 0.1%. 62.22 on the index. The Dow down 144 points. The Nasdaq 100 just 5 points lower right now. And the AI talent war, that continues to heat up. Apple could be facing an exodus of top talent. One of the first out the door is a guy by the name of Ruming Pang, a distinguished engineer and manager in charge of the Apple Foundation Models team. He's going to Meta Platforms, where they have dangled millions and millions of dollars
like
a year. You're right. Top talent, they're worth something, and Apple's push into AI isn't exactly getting gold stars at this point. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. We appreciate that. A little bit of red on the screen here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo. And we're joined today by Bloomberg's Christine Aquino. Christine, what are you looking at?
Taking a look at Amazon today, Paul, because it's Prime Day, which is actually 4 days starting today. So Amazon, ticker AMZ, and not doing so well, actually. It's down 0.7% at the moment. So as we mentioned, Prime Day starts today. And the expectation by Adobe analyst Vivek Pandya is that the price drops will be probably steepest in apparel, electronics, and TV. So these are your high-ticket sort of spending items, right? That will probably be the most discounted. And Adobe expecting Amazon and other U.S. retailers to generate more than $23 billion in online sales during the event. But it seems to be that there's more subdued appetite for shoppers this year. Akeneo, which does retailer surveys, shows that of 1,000 U.S. shoppers, only 1 in 4, or rather 1 in 4, plan to skip Prime Day because of tariffs, and then more than half say that they will closely monitor prices. Are you planning to buy anything, Paul?
No. Lisa?
I'm not a big sometimes I go on and I buy stuff I don't need and it just sucks me in. So
it's a lot of regret after Prime Day.
Yes, it's the regret after. But I have to say, there are some good deals, especially those TVs, like you were saying.
All right, First Solar.
Yeah, First Solar, ticker FSLR. Exactly. Tough times continuing, down more than 3% at the moment, 3.5% looking at those shares right now. And that's because President Donald Trump, in an executive order on Monday, calling for new rules that would restrict access to tax incentives for solar and wind projects. And so, under the tax and spending bill law that was signed into law before we all went on a long weekend, solar and wind developments are eligible for tax credits if they begin construction within 12 months. But the speculation was that provision had irked the Freedom Caucus. And so the executive order now, which came on Monday, is being seen as a way for President Donald Trump to kind of strike a deal with that caucus. So the plan is to more closely scrutinize the incentives. And for solar being a provider of such technology and equipment, definitely suffering those consequences today.
Yeah, here in the U.S. and Europe, too, a lot of those European solar stocks, too, taking a hit. What about Bank of America?
Bank of America, ticker BAC, also extending declines. That's now down 2% from the open. That stock was caught to hold from buy at HSBC, and analysts are citing valuations that are increasingly stretched after a rally in the bank stock. I feel like you could say that for a lot of equities just in general, but focuses on banks particularly. And, HSBC analysts saying that fundamentals are strong, they like credit quality and an improving investment banking environment, but those are all well priced in. HSBC, though, raising its price target for Bank of America to $51 from $47. So that's currently in line with the current share price. And a reminder that Bank of America reports on July 16th. So that's just around the corner.
All right, that's when the new pup arrives in the Sweeney household.
Oh,
July 16th,
nice.
big day. Christine Aquino, thank you so much for joining us, Bloomberg Markets managing editor there. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Trade remains front and center this week for sure. Sean Donnan joins us. He's a senior economics writer for Bloomberg News. He's down there in Washington, D.C. Sean, it looks like President Trump, he's issuing new tariffs, but I think the message is he's still open to negotiations. What's the latest?
Well, I think he's reinvigorating his attempt to try and get some deals. I think that's probably the way to read this. And he's also given himself a few more weeks to get those deals that he's promised. If you think back to April, there was this promise of 90 deals in 90 days that Peter Navarro, President Trump's trade advisor, laid out. Of course, they've gotten to essentially one deal, one ceasefire, and a kind of couple of social media posts on a possible deal with Vietnam that the Vietnamese don't seem to be fully on board with. So they've fallen pretty short of that target. And, they were facing this week the expiry of this pause, this 90-day pause that President Trump announced after markets swooned in early April after his Liberation Day tariffs were announced. But, President Trump's tried to play it yesterday by kind of, again, throwing out these threats via some good old-fashioned letters. that went out to 14 different countries. The biggest of them are Japan and South Korea, but also some really interesting kind of small countries that are included there. Bosnia and Herzegovina has gotten a threat for a 30% tariff, Serbia 35%, Tunisia 25%, Bangladesh, which actually is something consumers should be keeping an eye on because that's where a lot of clothes that are that we buy here in the United States are made. They're facing a 35% tariff threat. South Africa 30%, Cambodia 36%. Anyway, these letters went out yesterday. It's given everyone till August 1st, and at the end of the letter, on the second page, President Trump says, "Of course, we can have a chat. We can talk. Give us your best offer."
More negotiations.
And we'll see where we go. We get more negotiations. I think, all of that said, the direction of this stuff is pretty clear. President Trump wants to get some tariffs in place. Tariffs are not going to go down you remember that pause, that 90-day pause, that actually has seen us paying 10% tariffs on imported goods from everywhere in the world. So, chances are we're going to go up from there in the weeks to come.
So, Sean, is the 3-week extension, is that enough? Is August 1st going to be the last that we're going to hear from this again?
The president himself said, we'll see. He said that last night, and he's kind of opened it up to a possible extension. I think a lot of this is going to depend on the market reaction. And we saw that in April pretty clearly. That it's not just the equities markets, it's what the bond markets do, what the dollar does. That's all stuff that they're monitoring pretty closely. I think one of the ways to think about this week is he's kind of thrown something out there to kind of keep the markets relatively calm in what could have been a pretty fraught week if all of these tariffs had gone up July 9th. Just to give you an idea, we're now sitting, we started the year at an average applied tariff rate here in the United States of somewhere around 2.5%. We're now sitting around 15% with the tariffs that we have in place, not just that universal 10% tariff, but also some sectoral tariffs that have gone in on cars and steel and aluminum. And, if all of the tariffs that he promised on Liberation Day went into effect, you'd be up above 20%. We're already looking at the biggest tariff increase that the U.S. has had since the 1930s. You go up to that next step, and you're looking at the kind of late 19th century in terms of tariff levels. There's a shock there, and we're still digesting that shock in terms of the broader economy, and I think markets are still trying to figure out how it's going to work its way through it.
Sean, thanks so much for joining us. Appreciate it. As always, Sean Donnan, senior economics writer for Bloomberg News. He's down there in Washington, D.C. And Lisa, I was looking at some work from Bloomberg Economics, and they kind of did some analysis, and they kind of think where this is all going to shake out in terms of the weighted average tariff is maybe at 15.5% was all said and done. And as Sean was mentioning, it was, right around 3% before all this started. So that's still a 5x increase in tariffs. The question then, I guess, is who pays that? Is it going to be the importers, the manufacturers, the distributors, or consumers? And we'll have to see how that plays out.
Yeah, and then he's talking about how, the market reaction to it and how that's going to be. Today we've seen kind of a relief rally, kind of, it's struggling, but it's interesting to see how much that'll pan out.
Yeah, so I think what the market's trying to say is just give us some clarity here. I think once we have some clarity out there, then maybe the companies can adjust. As Tom Keene has always said, companies adjust, consumers adjust, and that's how you deal with change. And so we'll have to see how that plays out, but we have the full reporting from Washington, D.C., a team of reporters covering this from a trade perspective on a global scale. S&P 500 down 2 points, Dow down 85, NASDAQ up 6 points. We're going to have more coming up. This is Bloomberg Morning.
Hey, Lottie off. How you doing, my friend? We're watching the NQ today. I agree. This is a sell, sell, sell day. Sell, sell, sell. We got our trade box on. I got the NQ up today. Snooze is hanging out with us, watching the NQ.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com.
All right, time to start hunting entries.
This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And the major stock average is mixed to little change. Moderna, the best.
How'd you do yesterday, Lottie off? You make some money?
I'm not sure why. Enphase Energy is the worst performer. Right now, that is down close to 5% with the executive order to end clean energy.
All right, so both the ES and NQ. Oh, good.
Meantime,
Good.
Profits for the
Good,
Liberation
good.
Day quarter, we're going to start to see those as we get
All
earnings
right.
starting next week. The tariffs,
Oh,
of course,
yes.
are paid by U.S. importers. They should.
All right, so both the ES and NQ are below the VWAP, so we're out of that VWAP chop mode. So we're good to start hunting entries.
That is down right now.
So we got the ES right here.
Well, it's turned positive up 2
And then,
points right now. Hold that little
I've
change.
had the NQ up all morning.
Average, that is down
12%, damn, that's good.
points. As far as
12% is
yields, the
good.
two-year
Shit.
up a basis point,
I'd be careful with that
10-year
then.
yield
That's a
is
good
up just
day.
about 4 basis points. That is at 442. And this report being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud
see
bill
here.
in half if you move to Oracle Cloud
All
Infrastructure.
right, I got everything
This
in
for new
line.
US
So, all
customers
right, so
with
for me,
minimum financial commitment. See if your company qualifies at oracle.com.
well, if you look up here,
And we check
we
the
had
markets
our
for
big
you all day
cross
long
up
right
here
here on
early in the
Bloomberg
day,
Radio.
but it was
Tucker.
outside my
And it's
trade
your
zone.
Bloomberg Business Flash. Lisa and Paul.
Right here
Tucker, thank you so much. We appreciate
was
that.
the
Mateo
EMA
Paul, live here in
cross.
our Bloomberg Interactive Broker Studio, streaming live on
So you had
YouTube.
the EMA cross and the forecast change to sell. The cloud changed to red, EMA cross, big drop. But that was, when did that happen? That happened right at the open. So we don't play the open.
7% year to date.
So now I'm just waiting for a pullback or a direction change. But we're clear to hunt an entry right now. Everything looks pretty
Kim
clean.
Forrest, founder and chief investment officer at Boca Capital Partners. She's
Monday,
a Pittsburgh.
9%?
In a previous
Jesus.
life,
You're
she was a
crushing it, dude.
technology analyst, and, when she was working for a living.
Fuck.
So, Kim, how do you think about
I made about
technology
500
as the
American
leader in this
yesterday.
market? And I guess I'm kind of asking you about AI as a,
I missed a
as
couple though
theme
because I
here.
had
Is that
leads to
still
work. Man, we're
we need to
we're
focus
selling
on?
off pretty hard. All right, so be careful about catching the falling knife, guys.
In the
Be
past,
careful
and
about
I
the
wasn't
falling
just
knife.
an analyst. I was an actual software engineer writing code.
Oh boy.
For AI projects, believe it or not, back in the 90s, yes, we had AI then. It's actually pretty darn old. But regardless, I think what has been missing, in my opinion.
Okay, everything, we're set up pretty good. We just got to wait for our entry, wait for our A plus setup or our B setup. The B setup is the pullback and the entry off the 20 or the 50 EMA typically. The A plus setup is like the one I marked here on the NQ, which is the direction change. The EMA cross, everything. You got everything all at one time right here. That's the A plus. So we're waiting for that, or the B would be if we pull back to the 20 or the 50, and then the stochastics are with us and it rolls over. So we're waiting. So this is going to be a little bit of a wait. But wait for a few candles. All right, Lottie off. Good to see you, my friend. I got a couple leads to work. I'll check back in a little bit. We'll keep an eye on it and look for our entry, okay? I'll talk to you in a bit.
Yes, I think AI is going to be a thing for the next 15, 20 years as we figure out how to use it productively. But this first pass, I'm afraid if it blows up and people go, ooh, I'm getting too many wrong answers, this isn't productive, that it could kill a rally. And that's kind of my big issue with AI as it stands. And I've just thrown that thought bomb on you, so I'll be quiet here for a minute.
well, let's take that thought bomb and let me toss it back at you. When you're talking about the AI space and we talk where tariffs in the news, how do tariffs play into that AI space? Does that change the narrative too?
Well, it's really more about, like, can a product even escape out of the U.S. as opposed to a tariff? So there's an even higher bar than a tariff. We're not importing a whole lot of technology necessarily. Taiwan's kind of sticky, I guess. That gets some tariffs slapped on it, but we've had these tariffs in place for a very long time. So, and I don't think Taiwan is the object of any tariff kind of discussion at this point. So tariffs we can take off the table, but it's really the leadership of NVIDIA. Yes, most of those chips come from the island of Taiwan, but they're NVIDIA chips and thus get reported as American, I believe. So yeah, it's confusing. It's a very confusing time here with the tariffs adding to a confusing AI time.
Kim, broader market outlook here. We're going to start earnings next week. We'll have J.P. Morgan kicking it off in earnest here. What do you expect to hear from corporate America? What do you need to hear from corporate America?
Well, I think a little more certainty would be nice, wouldn't it? The last quarter seemed to have people taking estimates off the table or severely reducing them in many cases because they didn't know what tariffs were going to bring. Now, we've gone through most of a quarter with the tariff tantrums hanging over our head. As you pointed out in the beginning of this segment, you know, technology, which was the most affected, rebounded and has even eclipsed in many cases what it was in the beginning of this year. So apparently we're not worried about that. But let's see if companies can give us a good snapshot of what they're seeing for the remainder of the year. And that would assuage a lot of investors' concern, both retail and the professional investor.
Oh, and on that same space, Kim, talking about sentiment out there, when you're talking with clients, a reaction from your clients, when you're talking about trade negotiations, all the things going on that could have them a little bit concerned, a little bit worried, how are you easing those fears or those concerns for your clients?
Well, I'm pointing to the market itself because the market, I love that I'm in markets now as opposed to technology. It is a bunch of people betting with money about what's going to happen in the future. That is what markets are to me. And this sudden rebound and this belief that we can use technology to make ourselves better, stronger, faster, that's what, you know, productivity is really kind of encouraging and energizing to me. And that's where I point people, saying this is a different time with respect to politics, but it's the same where people are putting their money, and it's in the future, and it's building better products. And I think that is what the markets are telling us.
All right, Kim Forrest, thank you so much. The founder and CIO of Bocas Capital Partners, talking about her outlook on the markets and AI, getting into that as well. We're going to keep it here kind of in that AI tech space. I want to go to Mandeep Singh. He's Bloomberg Intelligence Senior Tech Industry Analyst. So Mandeep, we have this sign of just how competitive the AI space is for talent. So you have Meta possibly poaching Apple's top AI executive, offering this big payout. Explain to us, first of all, who this guy is and how much are they offering him?
Well, I don't know the exact dollar amount what they're offering, but clearly Meta is going big in terms of poaching the top AI researchers. We saw that with the Scale AI acqui-hires. They pretty much poached the founder. And look, I think they want to assemble the top 50 AI researchers that are out there who have got published papers, and they are paying up in this case because they've made all the big investments in terms of compute, in terms of infrastructure, but they don't have a cloud business or some other form of monetization that, you know, a Google has or a Microsoft has. So from that perspective, I think it's crunch time for them to really show that, you know, they can develop an ecosystem with their large language model, which has been underperforming relative to OpenAI, Google, and Claude. And I think it's the founder, Mark Zuckerberg, who really is going all out. I mean, you can't expect any other CEO to be that aggressive with paying $5 billion for 50 people. Literally, that's what the expense that we are talking about. So Facebook, Meta as a company, has over 76,000 employees with an expense base of 115 billion. They're adding 5 more billion for 50 people. That's what we are talking about here.
Wow, that's the order of magnitude.
Yeah.
All right, so it's clear that Meta's all in. What does this mean for Apple? If I were an Apple shareholder, I'd be concerned here. A, I'm losing talent. But B, it's coming from an area where I feel like I'm underinvested already, perhaps.
Yeah.
I'm already behind. What do you think this means for Apple?
I mean, clearly, everyone on the research side realizes that Apple doesn't have the big AI cluster that these companies have. And, generative AI is all about having a large cluster, training your model on that cluster, and then really building from there. So from that perspective, Apple has lagged behind. And if you're a top AI researcher, there are better companies to work for right now. So I'm not surprised, a top AI researcher has ended up taking up the offer. But for Apple, look, they're going to use a combination of partnerships and some on-device AI investment, which is what they have done in terms of, their own model efforts. They're going to partner with Claude, OpenAI, probably Google as well, once the antitrust issues are over. And that's how they're going to provide the functionality. As long as it's cloud-based, they have the app infrastructure to offer AI. For on-device AI, they have to do it natively at the operating system level. You can't really leverage the large language model from OpenAI on device because you have to really open up your operating system, which Apple won't do.
I have to add some kind of AI in my resume. I think I'm behind a on this. Mandy, what kind of tone does this set for the industry? What kind of message is this sending?
I mean, to my mind, this is a very high risk play right now. The market sentiment is Meta can do no wrong. They are making all the right moves with getting these, big AI researchers. But at the end of the day, it is, they're doubling down on CapEx, adding more OpEx. So from a spending perspective, Meta is going all in. And so, once it starts to weigh on free cash flow and the returns are not there, which is why I said, with everyone else, you see the AI monetization. If you have a coding agent from Microsoft or Google, they are monetizing it. With Meta, all these are upfront investments with the hope that it will add more engagement time across their family of apps. They will probably have a killer AI product that they'll be able to monetize with in addition to their recommendation systems. So the stakes are getting higher and higher, but clearly they are doubling down in terms of their investment. And at some point, the monetization question will kick in. Probably not this earnings season, but maybe a couple of quarters from now.
All right, Mandeep Singh, big numbers. That's his companies, folks. They traffic in huge numbers, huge investments, huge revenue, huge free cash flow. That is the state of global technology these days, centered in the United States. Mandeep Singh, senior tech analyst for Bloomberg Intelligence. We appreciate that. And again, Meta going all in, not that they weren't before, but it's just kind of another example of the type of investments they are making there. We kind of got a mixed tape here. Not too much going on the index level. Coming up, Brandon Daniels, he's the CEO of Exeger. He's going to give us his thoughts on tariffs and maybe what they mean for the global supply chain, winners and losers. That's coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages right now, I'll call them mixed to little change at this point. We'll start off with shares of Amazon down about 0.6%. Their Prime Day being affected by the trade war, with some brands opting out of the Prime Day sale. Some shoppers also planning to pull back because of the tariffs. Moderna, the best performing stock right now in the S&P 500. Those shares are up 9.4%. Meantime, Veronica Clark at Citigroup Global Markets, a guest earlier today on the program, says tariff-induced inflation will show up later rather than sooner.
I think businesses are going to try to hold off on raising prices as long as they can. This does not seem like a consumer that's particularly strong, and so you don't want to raise prices if you don't have to.
Right now, the S&P 500 up just 5 points, 62.35 at the index. The Dow is down 50 points. The NASDAQ 100 is up 52 points. Bidders for 3 New York City area casino licenses, they are projecting revenue that would place them among the most lucrative resorts on the planet, with estimates ranging from $2.2 billion to $4.2 billion a year. One of the proposals is for what they're calling the Coney, which is would be a casino on Coney Island.
There you go.
Of course. So the state and the city regulators, the approval is expected by December 1st of this year.
And I think Steve Cohen, the owner of the
He
Mets,
is.
would like to do something
And
around
his casino
Citi Field.
would be like just about in the parking lot of Shea
Yes.
Stadium or Citi Field.
Exactly.
Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Lisa and Paul.
All right. Lisa Mateo, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Thank you, John Tucker, for that update here. I think during the pandemic, we all became familiar with this concept of supply chains and global supply chains and where stuff comes from. And boy, when a ship stops sailing, that's a problem. And we need to bring some of that stuff closer to home. And that's one of the reasons, I think, for President Trump and his focus on tariffs here. But let's get a sense of what the global supply chains are looking at now and how they may react in a world where tariffs are higher. Brandon Daniels joins, CEO of Exiger. He joins us from Chicago. Brandon, how do you put into context all this talk about tariffs and kind of what it means for the global supply chain and how we get stuff, where we make stuff, where we import stuff from? How do you guys think about that?
Absolutely. Well, thank you for having me on. It's good to talk to you guys today. I think when we think about it, it is a reflection of a major shift in priorities across all countries from a global commerce perspective, right? Like when you think about what the United States is doing and what the administration is doing, is they're trying to prioritize 3 things, right? The first thing that we've in our discussions and in our talks with the administration, they want to bring back manufacturing where the United States can be competitive. And that's what our customers are utilizing our AI tools today and our multi-tier supply chain visibility to understand where can they actually source in the United States in a way that is at parity with their global sourcing requirements. And so that is mostly focused on where labor arbitrage has been taken out of the equation. So think things like additive manufacturing, think things like, largely automated production floors. Those are the areas where you're starting to see major cost collapse in between emerging markets and more sophisticated markets, because the cost of the manufacturing equipment, it's the same across the globe. The cost of the land, I mean, there's parts of North Texas that are cheaper than parts of Hebei, China. And with the volume of operators necessary in these factories going down and them having to be also more higher skilled, the major labor arbitrage effect kind of dwindles. And so they want to move those areas of automated manufacturing back to the United States. And so I see our customers focused on those commodity areas, as well as some of the more specialized areas that require automated manufacturing floors, that stuff coming back to the U.S. The second thing is national security and economic security. So from a national security perspective, there's a core focus on semiconductors because AI is the future of our national security capacity, whether it's in managing, UAS and drones, or it's in, fighting cyber attacks. AI is where it's at. And then the other area is in pharmaceuticals. It's actually keeping our, medical supply chains clean and independent. Obviously we pulled back the veil on that in COVID. Exeger was the technology utilized by the federal government to purchase $7 billion of goods and to do it in a way that could get it to the healthcare front lines quickly, and in a way that didn't allow for fraud, waste, abuse, and adversarial investment. And I think they're looking to try to expand that and trying to bring back pharmaceutical manufacturing, medical device manufacturing to the United States. And so when I look at this, I see those two first strategies getting, sort of being prioritized. The last one is honestly to ramp up our actual external tariff collection. There have been estimates between 30 and $100 billion of transshipment per year. You saw this in the deal with Vietnam, where it was 20% tariffs and then 40% tariffs on expected or potential transshipment goods, right? So one of the things that we've seen is China has used this sort of global economic coercion to create veneer centers of manufacturing across the globe. And the U.S. is trying to crack down on that to level the playing field.
All right, Brendan, I hear you talk about a couple of things. So AI, pharmaceuticals. One of the things you mentioned in your notes is how autos are going to be the best case study and how nuanced this policy really is. Can you dig into that for us?
Yeah, absolutely. So auto manufacturing is a great case study of where all of this might be going. I don't think we'll end up with just blanket country level policies. And I think those blanket country level policies will get nuanced down to the HTS code or to the actual sort of segment or sector of goods, right? And I think that they will get nuanced down to a place where, the recognized dependencies we have on critical minerals or specialty alloys or on specific goods that are indigenous to some of our allies, where those are necessary for us to do the manufacturing in the United States, I think those goods will become subject to exceptions or exemptions, very similar to USMCA. So automotive's a great example of this because basically you can have 15% of your auto that's being manufactured in the United States, you can have 15% of it be parts, components, and goods from other places.
Right.
And your entire tariff burden can be offset by the 3.75% tariff credit you get on the vehicle's MSRP, right? And so it's almost like you're tariff free if you have 15% of the goods coming from everywhere else. And that's because we realize that in many cases, there are things that the U.S. doesn't make yet. And it's going to take a while for the U.S. or our allies to build those things.
Right.
And we want to give, people the ability to have some leniency there.
Red headline crossing the Bloomberg terminal. Trump says August 1 tariff deadline won't be extended. We'll have more reporting on that. Brandon, we've got 30 seconds left here. When you talk to your customers, who's going to pay tariff costs? Is it going to be the importer, the manufacturer, the distributor, or the consumer? Or how are these tariffs going to be borne by the economy?
I think the consumer is going to be the last to feel it. And I think, the fact is, this is going to be absorbed somewhere in the supply chain. In 2018, when we had the original Trump tariffs on steel, the entire defense industry, the entire automotive industry, airline industry, they all ate it, right? Because you just needed the steel.
Yep.
And you didn't want to affect the end market. I think that the consumer is going to be the last to feel it on this one.
All right, hopefully that is the case. Brandon Daniels, thank you so much. Brandon Daniels, he's the CEO of Exeger, joining us from Chicago via Zoom, talking about tariffs, talking about supply chains. Fascinating and fluid situation. Coming up, we're going to check in with Poonam Goyal, senior U.S. retail analyst, to talk to her about Amazon Prime Day. How big is that? This is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
There we go. Welcome back to Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. So today is a day hardcore online shoppers have been waiting for. We're talking about Prime Day. It's not just 2 days, it is 4. But early spending hours are showing a little bit of a different story. Down 14%. Shares are lower this morning. Here to explain more about this is Poonam Goyal. She's senior U.S. e-commerce and retail analyst at Bloomberg Intelligence. Poonam, thank you for joining us. So I have to start out. You have to explain what's going on with the spending. It's lower as we start to kick off Prime Day.
I think people know they have time, right? It's 4 days, not 2 days. So, you have the whole week, essentially, all the way up until Friday, to go ahead and snag these deals. The deals are there, though. We're seeing things off 20%, 30%, even 60%, some things. So they're clearly pushing out deals. I think people will shop. They'll eventually come to it, but they have more time.
I don't know, Poonam. Remind us all of this whole Prime Day concept here. I mean, it's July. I'm thinking about, am I doing hamburgers or hot dogs tonight? I mean, on the grill. What is this whole Prime Day thing?
Yeah, so Prime Day is essentially another sales event, right? It's in the middle of the year. It's ahead of Black Friday. It's to stimulate those summer purchases, back to school, the second largest season for shopping following holiday. It's really to just get people to spend, get inventory out of the way, right? Excess inventory, clear house, sell more. It's another sales event. And it's not just Amazon that kind of does this now. It's everyone, right? Walmart has its sales around this event. Target has sales and so many others.
And is this more along the line, yes, they want to gain subscribers, but is this also a way for them to get more advertisers by kind of extending this out to 4 days?
Yeah, absolutely. So you said it just right. So there's really two main benefits for Prime Day outside of the sales that they generate. One is the subscribers. In fact, we ran a survey a, a little over a few weeks ago, which said, who is going to shop for Prime Day or sign up? And Gen Zs and millennials, more than half of them said that they're going to get the Prime subscription and keep it. So a great draw for the younger shoppers. And outside of that, yes, you're also right that, it's a day when people want to spend, and it's really going to target those that want deals.
This is tariff week. We've kind of defined it here this week. We're just talking about tariffs, it seems, since they got the tax and spending bill done last week. Markets focusing on tariffs. Remind us, Poonam, how you think this is going to play out for consumers. Everybody's trying to get a sense of, all right, if tariffs are going up, whether it's 10%, 20%, whatever the number is, how's that going to be kind of passed along throughout the retail food chain? Is it going to trickle down to the consumers? Based upon your conversations with your companies, how do you think that's going to work?
I think it has to trickle down to the consumers. If you think about retail margins, just operating margins, they're in the single digits, right? So as soon as you even put a 10% increase in costs, retailers are going to start losing more money. And now you're talking 20%, right? The rumors or what we hear so far, they're not signed, but in play is 20% for Vietnam, 25% for South Korea, etc. So they're higher. They're twice or more than that of the paused rates. I'll give you an example. Nike, in its last quarter's earnings call, said that tariffs are going to cost them $1 billion more. That is at the 10% rate. If we move Vietnam to 20%, which is where a lot of shoes are made, that could mean almost doubling that increase in costs. And there's no way they can absorb that. They will have to pass it to the consumer.
So keeping that in mind, all that said, does that mean that fewer companies are going to be offering deals? Am I going to be able to get the same deals that I usually get on Amazon Prime, or are some of their brands kind of pulling back?
I think you'll get deals. And then here's the reason why you'll still see deals at the bigger retailers and why scale matters. Remember, Amazon has three businesses: the retail business, the cloud business, and the advertising business. Where does it make all its money? On the advertising business and the cloud business. So could you argue that they can use those businesses for the time being to compensate, to offer lower prices on the retail side? Absolutely. And they will do that. Walmart, when we heard about tariffs, also said that they're not passing the prices to the consumer. They're going to absorb it. Here's where scale kicks in. You can bargain for lower prices. You have more power. You have more buying power against your suppliers too.
Back when my kids were younger, we'd go to birthday parties like 15 times a week, it seemed like. Buying toys at Target or Walmart was probably the smarter thing to do, but we went to the local toy store in town to, take care of them. Those people are going to get screwed, aren't they? Those
Yeah,
small
absolutely.
retailers?
It is going to be much harder for the local retailers because one, they don't have scale, and two, when prices go up by 20% or 10% even, the consumer notices, and then they start to find alternatives and seek alternatives. I think there will be a settling ground, right? Everyone's going to have to readjust to higher prices, and then you'll start to see discounts kick in again and so forth. But for now, when retailers go into the second half, pushing up higher prices, if we do get these higher tariffs, it is going to be a sticker shock for many consumers.
All right, Poonam Goyal, interesting. As always, Poonam Goyal, senior retail analyst for Bloomberg Intelligence. She's down there in Princeton. And you think about it, Lisa, Poonam says, based upon her discussions with her retail companies that she follows, she thinks the consumers are going to bear some of that. But the guest prior to that, Brandon Daniels, the CEO of Exiger, he didn't think so. So it's going to be interesting how this plays out here, where in the supply chain the costs get absorbed. I kind of just feel like it's got to come to the consumer at some point for a lot of products. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 129, presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins right now as we look at a market down 5 points on the S&P 500, the Dow minus 155 points, but the NASDAQ eking out a little bit of a gain, up 3 points here. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Paul Sweeney.
The semiconductor business is a really cyclical business. The market's telling me, here's another AI play. Just bid it, buy it. Is the market over their skis? Are people just too exuberant out there?
Breaking market headlines and corporate news from across the globe.
This was a big success story for Apple.
We like bonds. We think bonds are attractive.
Private markets have become very diverse.
What we're telling people is be cautious here.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up in this hour, President Trump is scheduled to host his cabinet meeting at the White House at 11 a.m. Wall Street time. Who knows when that will start? When it does, we will bring you portions of that. We're also going to check in with Ira Jersey, Bloomberg Intelligence chief interest rate strategist, get his thoughts on kind of where the Fed may go with the interest rate call. Some people are saying there might even be a rate hike there sometime this year. I can't imagine that. Gina Martin Adams, Bloomberg Intelligence chief equity strategist. We'll get her informed thoughts on where these markets are going. She has the courage to be in the market. That is always her mantra. George Ferguson, Bloomberg Intelligence senior aerospace analyst. Talk about Boeing. It's all about the deliveries of the 737 MAX for the Boeing story, because that's the big cash cow for the company. So we'll get the latest from George Ferguson on that. We'll get him off his sailboat, see if he can break some news here for Boeing. But right now, let's go to John Tucker and get a Bloomberg Business Flash.
All right, guys, thanks very much. And we are data dependent. We do have data. This is the New York Federal Reserve one-year inflation expectations numbers coming in lower than expected, 3.02%. The expectation by economists surveyed by Bloomberg was for 3.13%. Major stock averages right now, little change, and volumes, they are lighter than average for this time of the trading day. And of course, in the latest social media post, we told you about this a little earlier, President Trump says he will not offer any extensions to the new August 1st deadline for nations to begin paying so-called reciprocal tariffs. They don't pay them, by the way. It's, at the port where you receive the stuff. That's who pays. Ed Yardeni, meantime, at Yardeni Research, says new tariff threats from President Trump are just another negotiating tactic.
Trump has taken this to another level and to a global level of negotiating publicly with leaders around the world on trade. So it's not a pretty thing to watch, but I think the markets have figured out that this is going to get resolved in the next few months. It has to be, because otherwise Trump's going to really risk losing the midterm elections.
Right now, the S&P 500 down 1 point at 62.28. The Dow Jones Industrial Average down 127 points, and the NASDAQ 100 up 20 points. You saw this one from the Wall Street Journal. Technology from a startup, Black Dot, in New York City. A high-end ink shop now taking appointments for AI-driven tattoo robot. You want a robot doing your... well, not that you would have those. I was on the beach recently thinking to myself, tattoos on you? Looking at several individuals. I won't say who, but why? I don't get it.
There's nothing wrong with the tattoo.
I didn't say there was anything wrong with it. It's just like...
I can neither confirm nor deny that I have a tattoo. We'll leave it at that.
Yeah, I'm not going to go there. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Lisa and Paul.
I mean, talk about breaking news early this morning. Lisa Mateo just shocked the markets. But anyway, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Lisa Mateo. We're joined by Bloomberg's Christine Aquino. Christine, what are you looking at today?
I'm taking a look at Trump Media, Paul, ticker DJT. Those shares are up just over 1%, pairing some of those earlier gains, actually. That was up around nearly 2% earlier in the session. But anyway, it's still in the green, and that is because the company is plowing deeper into the cryptocurrency space. It has a new filing out for an exchange-traded fund on Tuesday, which is today, and that's showing that the social media firm, which is owned by President Donald Trump, is seeking to launch the Crypto Blue Chip Fund, and that fund will hold Bitcoin, Ether, Solana, Kronos, and XRP directly. This is actually the company's third ETF filing now. So if that launches, I mean, it's a pretty crowded space, but the Trump media name holds some sway. So we'll see how that goes.
It's certainly getting around. Let's talk about something up my aisle, beauty, Ulta. Okay, can we get to that?
Yes, of course, Lisa. We love a beauty story. Ulta, ticker ULTA. So shares are up just under 1% actually. So pairing some of those earlier gains as well, but still in the green. So yeah, that price target for those shares raised to $550 from $485 at DA Davidson. So that's about a 15% increase from its current price. It's right around there at $480 at the moment. And so, Bloomberg Intelligence taking a look at Ulta's offerings, and they're pinpointing their in-store services as something that could really be a differentiator for the company, because people who use those services in store, so we're talking about their salon services, right? They spend 3 times more than if you were just coming in and picking up something from the shelves, which makes a lot of sense, right? So we did see the company last month reaffirming its outlook for fiscal 2025.
I learned how important the whole beauty thing is. I got a much greater appreciation during the pandemic when the world was shut down. You'd walk by the Sephora store on Lexington Avenue and 49th Street, packed with people.
Yes.
I mean, these people, I'm getting my beauty stuff. I don't care what's going on out there in the world. I mean, it was like, I don't need to go to a restaurant. I don't need to go to a bar, but I need to get my beauty stuff.
But you need to look good.
Yes, it was unbelievable.
And it's funny, it's a lot of the younger kids too who are
Exactly.
getting, thanks, I know
you
that.
had a lot of time to work on your skincare routine during the pandemic.
Well, as Alex Steele always tells me,
yes,
you got to invest in your face.
You have to.
John Tucker and I missed that memo, so sadly. All right, one more.
Let's take a look at Dow as well, ticker DOW. So those shares up as well today, extending gains actually. It's now up more than 7%. And they're rebounding because they fell a lot on Monday. That's after the company said it would close 3 plants in Europe and take charges of as much as $790 million. Its debt was also downgraded to Baa2 by Moody's, which is citing the company's track record of elevated dividend payouts and share repurchases despite weekend earnings performance. So just a little bit of a rebound story for Dow there. And reminder that it is going to be reporting results on the 24th of July. So we'll see if those impairments will show up in those sets of earnings.
All right, great stuff. Christina Aquino, thank you so much for joining us. Christina Aquino's over there at Bloomberg News covering the market. She's a managing editor there. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, we are back into tariff talk seemingly all the time here. The big, beautiful spending bill, that's done. That's in the rearview mirror. Question is, how's the Federal Reserve thinking about some of the economic data they're seeing? How's the Federal Reserve maybe factoring in maybe a slower growth economy? Who knows? Maybe higher inflation. We're not seeing it in the hard numbers yet. Let's put these questions to somebody who does this for a living. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. He is down there in Princeton, the home of Hoagie Haven, which is my favorite sub spot in the world. Ira, talk to us about the Fed here. You could argue once again that they can be sitting on their hands. They don't need to do anything rash. What's the bond market telling you?
Yeah, I've been arguing that actually, that I didn't think that the Fed would do anything until the fourth quarter of this year, just to wait until they have confirmation from the data. And, a lot of the data, as you've noted, is okay, not great, and not falling off a cliff. That being said, there are little bits of things that are a little bit worrying. For example, here at Bloomberg Intelligence, we have an asset-backed securities strategist named Rod Chatahumbe, and he noted that subprime defaults within some of the bonds in his sector are deteriorating, and that is a concern. So, you get enough of people defaulting, and that can feed through the system. So there are little signs that the economy is slowing and not necessarily great. But again, I think all this tariff talk is going to keep the Fed on hold until it's clear that inflation expectations aren't going to shoot up a bit because of what's going on with global trade.
So keeping the Fed on hold, what about the economic impact from tariffs? I mean, you had President Trump release these wave of letters. Now he's delaying the duties till August 1st, saying that is the final date, August 1st. Talk about that economic impact from tariffs.
Yeah, so it really depends on how it affects spending and the household wallet share, right? So if there's a lot of things that we import into this country are not necessarily needs, but rather wants, right? So will people not buy those imported goods and instead buy other domestic goods, or maybe go out to dinner once more, or buy other services domestically? So there could be a little bit of a shift in spending from goods to services, or imported goods to domestically sourced goods. That's all possible, right? So, and this is the uncertainty that comes out of the tariffs and tariff negotiations. And the last question is, as I noted before, nobody really knows exactly what the pass-through from these tariffs is going to be, because producers could cut their margins a little bit, wholesalers could cut their margins a little bit, and then retailers might cut their margins a little bit, which obviously isn't necessarily good for those retailers' profitability. But all of those things might mean that the increases in some of the goods prices won't be as dramatic as, say, the 25% tariffs from some countries would necessarily be, but maybe it's only a 5 or 10% increase, right? Still a little bit, but not as dramatic as that headline tariff number might suggest.
All right, Lisa from the Upper West Side writes in and says, how are those Treasury auctions going? Because when people stop showing up, then we might have a problem there.
Well, the June auctions went very well, actually, overall. I think we had one reasonably poor auction, but it was more like a mediocre auction. This will be a big test. You've seen this bear steepening in the yield curve the last couple of days. Part of that's on the back of things going on in Japan. Part of it has to do, I think, with the tariff angst and a fear that Asian investors who tend to buy a lot of longer-term debt of the U.S. might start to back off. So you've cheapened up here quite a lot before tomorrow's 10-year and Thursday's 30-year auction. So that 30-year auction, I think, will be a key indicator of, is there continued demand in the primary market from end users? So that's what we call indirect investors, is how they're couched in the auction stats, and that'll be the key test. I think today's 3-year auction will kind of come and go. Tomorrow's 10-year will be worth watching, but the 30-year is the big test of the week for sure.
All right, Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Thank you for joining us this morning. We have something coming up here in this hour, the White House Cabinet meeting. So we want to find out some more information. What will we be hearing about? Is it possible new weapons, shipments to Ukraine? We'll be hearing more about talks about trade deals. Here to explain more is Mike Shepard, Bloomberg's senior editor in Washington. Mike, thanks for joining us this morning. So what do you think? What will be the first thing on tap that we'll hear from today?
Well, one question most at the meeting will concern trade. The president this morning signaled a little bit of a shift in direction from his comments last night about whether August 1st is really a firm deadline for countries to reach agreements with the U.S. Last night he had signaled that maybe it wasn't as firm as it sounded yesterday. Today he dispelled all those doubts with the Truth Social post indicating that August 1 was the date and that tariff payments would have to commence at that time. Now, the president is famous for also moving to maximalist positions to try to get counterparties to negotiate. That's true in business, and it's also been true in trying to reach trade agreements and agreements on other matters with other nations. So we're expecting more letters to trading partners to come today. The president has promised this. We saw 14 countries get letters yesterday setting tariff rates that would go into effect August 1st, Lisa. But those, of course, are still subject to negotiation ahead of that August 1st deadline that the president now says is set in stone.
So at this cabinet meeting today, is it all tariffs all the time, or are they going to be talking about, I don't know, wars in the Middle East, wars in Ukraine, issues in Texas? I mean, it seems like there's a lot out there, but tariffs is sucking all the...
Yeah, tariffs will certainly be at the top of the agenda, but Paul, you're right, it's not the only thing at all in the agenda. There will be questions about, as Lisa alluded to, the question of resumption of arms shipments to Ukraine. Those have been briefly halted under an order from the Pentagon last week, but last night during his meeting with Israeli Prime Minister Benjamin Netanyahu, President Trump indicated that no, those arms shipments would resume. He indicated they would be primarily defensive in nature, but didn't offer any other specifics. So we'll be looking to see if he offers any clarity to reporters when they bring them into the room once the meeting starts. And again, the meeting has not yet begun. begun. He also may get some questions about the tragedy in Texas, too. He is scheduled to visit the region on Friday, and he is offering full support to Governor Greg Abbott and lawmakers from the region to try to ensure that recovery efforts proceed apace. And he will also, of course, be asked about the situation in the Mideast. The Prime Minister of Israel, of course, was here yesterday for a visit with the president. The two leaders were able to take in a little bit of the credit in their views for the success, as they see it, in the conflict with Iran. The 12-day war, as President Donald Trump has dubbed it, managed to bring the two Mideast adversaries, Iran and Israel, to a bit of a standoff, but at least halting for the moment Iran's nuclear program, setting it back several years, and also perhaps setting the stage for a final negotiations on a ceasefire in Gaza, something the president has been pushing both the Israelis and Hamas to try to reach an agreement on. The two sides are commencing negotiations. We're waiting to see if we have an update on that as well, Paul.
Real quick question before you go. Who are some of the big names? Who are we going to be expecting to hear from later today?
Well, I think we would look for Howard Lutnick, the Commerce Secretary, of course, to talk about trade, Marco Rubio, Secretary of State, to talk about the situation in Ukraine and the Middle East, and then, of course, Pete Hegseth, the Secretary of Defense, to talk about those arms shipments. And then, likewise, really going around the table, we'll also want to see what Pam Bondi, the Attorney General, has to say, as well as other officials, Vice President J.D. Vance. Now, Marco Rubio may be joining from afar since he is traveling to Asia as of today, but we'll be looking to see what he might have to say as well about reports today that somebody had been impersonating him using AI-generated voice communications. The State Department has warned diplomats and others to be wary of these communications. We have a story out on the wire confirming these reports about somebody using AI to impersonate the Secretary of State's voice.
All right, Michael, thank you so much. A lot to cover there. Michael Shepard, Bloomberg senior editor in Washington, D.C. Again, the cabinet meeting, President Trump scheduled to hold at 11 a.m. This morning Eastern time, not being held at the moment. When they do get together, we will bring that to you, presumably sometime this hour, Lisa. And looking at the markets here, just kind of not much happening out there. I mean, the S&P is literally unchanged at 62.29, but I think everybody's trying to get a better handle on how this tariff thing is going to shake out. It's been months now of rhetoric, but it seems like we're getting a little bit closer to maybe a little bit more clarity. Maybe that August 1 date will be something that people can hang their head on. So we'll have to see here. Looking at, I'm just going to call out Tom from the Upper East Side. He wants his Bitcoin, quote, up 640 points.
Does he?
Yes, he does. 109,000. I think he's secretly long a little crypto there. It's not just Matt Miller.
Not the Turkish lira? No, you're not
the
going
Turkish lira. Seismic for global Wall Street, and we covered it in spades this morning. Turkish lira weakening out to a 40 level. This is Bloomberg.
Order submitted.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500 close to dead flat. 5 of the major industry groups in the index, they are higher right now. Energy, the best performer. Utilities right now, the biggest drag. Consumer expectations for future inflation, they have settled back to levels last seen at the start of the year. We got those figures at the top of the hour from the New York Fed. As Mike Shepard did point out a couple of minutes ago, President Trump said he would not offer any extensions to the new August 1st deadline for nations to start paying so-called reciprocal tariffs. Right now, the S&P 500 7 points lower. That's down 0.1%. 62.22 on the index. The Dow Jones Industrial Average down 137 points. Nasdaq 100 is 9 points lower. Amazon's Prime Day sales fell almost 14%. This is in the first 4 hours or so of the event. That is compared with the sales that we had last year. This is according to Momentum Commerce. As a result of Amazon shares right now, they are down 1.7%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Lisa and Paul.
All right, John Tucker, thank you so much. We appreciate that. Lisa Mateo and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. It's getting a little warm out there, kids. We're also streaming live on YouTube as well. All right, a piece of research just crossed my desk. Here's the title: Tulips versus Titans. Stocks to really watch as tariff pause ends. I have no idea what to make of that, so we're going to go right to the author of this research piece, Gina Martin Adams. He's a senior U.S. equity strategist for Bloomberg Intelligence. What am I doing here, Gina? Am I buying them or am I selling them?
Well, what we've done is tried to identify the stocks for our client base that are most exposed and least exposed to trade. Effectively, what we've done is taken the entire S&P 500 and we look at all of the stocks' performance back in the 2018 trade war, as well as the spring period of trade turmoil. Looked at their performance during those two periods, and you'd be surprised, but the same stocks that underperformed in 2018 also underperformed in 2025. We then further screened that list based upon our supply chain work and our revenue exposure work to identify not only the stocks that are most technically exposed, but within that list, who are also the most fundamentally sheltered and or exposed to trade risks, so that investors can analyze these baskets for performance trends during the trade war period, which clearly we're back in.
Well, Gina, all that said, you mentioned the S&P 500. Okay, so we're talking about tariff negotiations going on, created a lot of market turmoil, but the S&P 500, yes, hit a record last week. A couple of other things: stocks rebounded globally from the April lows. Dollar jumped the most in 3 weeks on Monday. So with all that said, what is that showing?
Well, it shows that we had a remarkable downdraft and a remarkable reversal, but the stocks that performed worst in April, or at least as according to our work, the ones that we call the tulips, are still down 5% from their late January peak. So even though they've recovered, you're still sitting on losses for the stocks that are most exposed to trade. And I think that this is really important because just buying the index really masks a lot of underlying trends that portfolio managers are tasked with contending with. They have to understand who is likely to be most and least exposed. They have to understand where your trade risks are going to be long-term and enduring. And the tulips to us are those stocks that have that trade risk still embedded, that are risky plays in an environment where trade is going to come and go as an issue in the broader marketplace.
So, Gina, presumably as a good enters, I don't know, the port of Los Angeles, the importer will see the invoice, and presumably the invoice will have some tariff price on it, and the importer will pay whatever that price is, presumably. And then the question becomes, what happens then? As these goods go through the supply chain and ultimately end up on in consumers' baskets. How do you think about that?
Yeah. Well, we're already seeing it, and we're going to see it affect fundamentals in the second quarter earnings season for the first time in a very long time. Analysts are forecasting, after 2 years of consecutive gains in operating margins for the S&P 500, we'll see a dip in operating margins in the second quarter. So the first answer to that question is companies are paying higher costs for their imported goods. At the same time, we're seeing economic growth slow a little bit. The result of that is margin compression on the index. And that margin compression is now creating a deceleration in earnings growth to what analysts think is going to be 2 to 3% growth this earnings season after double-digit gains for the last several. So second quarter is the first experience that we have with this trade policy. And so far, it looks to be dampening margins and dampening earnings growth. The question remains as to whether or not companies will approach trade differently going forward. They could obviously start to try to test the market for price increases. They could think about negotiating further back in the chain with their suppliers to have the suppliers take the burden of the cost increase. And I think that that's an ongoing process. It's going to change segment by segment, company by company, industry by industry. So I don't think we can paint the entire index with one big brush. But it does look like we're already experiencing a downdraft in company pricing power as a result of the tariff implementations of the second quarter alone.
Well, Gina, can you take a look ahead for us? So we're getting set for bank earnings next week. What's your outlook?
For bank earnings specifically or for the market?
For bank earnings.
Okay. It's a little bit narrow for my focus. What I will say about financials, a couple of things are really mattering right now for financials at large. The first is the Fed stress test, which are allowing the banks to deploy capital at a greater pace than we've seen in quite some time. Most of the banks have announced capital deployment plans for the third quarter. So we'll see dividend increases, buybacks likely increase as well. And that should help power some enthusiasm in financials. What really tends to get the bank stocks ripping and the financial sector at large performing very well is a Fed ease. And that's something that we're going to talk about a lot throughout the second half is will we or won't we get a Fed ease into the fourth quarter, into early 2026, because the yield curve is really obviously consequential to banks. The third thing I think you want to watch in the earnings season with respect to banks specifically is going to be lending conditions and sort of buyer solvency. So certainly we've seen delinquencies start to tick up, default rates start to tick up, in particular in the consumer space. How much of that is likely to continue? Are banks reacting with tightening lending standards, or are they seeing this as a relatively benign issue? Are key questions that I think you want to really spend your time on during the second quarter reporting season.
All right, Gina Martin Adams, thank you so much for joining us. Bloomberg Intelligence Chief Equity Strategist on the markets. All right, we're going to switch to the markets. We head over to Boeing because Boeing shares have really been under pressure lately. Investors waiting detail too from flight data equipment. So here to tell us more about it, break it all down for us, George Ferguson, Bloomberg Intelligence Senior Aerospace Defense Airlines Analyst. George, I want to start with the flight data equipment to start here. Have they found all of them, and what particularly will they be looking for when it comes to this equipment?
Yeah, so I'm not totally sure if they found all of the equipment. I knew they had found some of the recorders. I think once they get into it, I assume you're talking about the Air India crash, right?
Correct.
Yeah, and when they get into it, I think one of the items they're absolutely going to focus on is going to be what was going on in the engines in that Air India 787. Look, a Boeing 787 can lose one engine and still take off and gain altitude. So the videos we saw, circumstances indicate that both engines potentially were not producing enough lift. So my guess is that's where the focus is going to be, is on what was going on in the engines. It was an 11-year-old airplane. So we think that when all is said and done, probably not going to be a manufacturing issue either at Boeing or GE from original manufacturer, and probably going to be some sort of engine issue, which I think would probably, put Boeing not in the responsible category, for that crash, even though obviously something we're never happy to see, and very sorry about that.
George, you've in your coverage of Boeing and your discussions with us, you've always made sure that we focus on what's important. That is the deliveries of aircraft. June was a great month, wasn't it?
Looked pretty good. So we see about 60 deliveries. Of that, I think we had maybe 42 or so 737 deliveries. 737 is the moneymaker, so that's super important. Of those 42, we're focusing very closely on how many were first flown in 2025. And the reason we're doing that is we know Boeing has a lot of inventory airplanes. So if they're boosting deliveries through inventory airplanes, that's indicating to us that the factory isn't as strong as we would hope. What we're seeing right now when we look at Cerium data is 5 of those 42 airplanes are inventory deliveries, airplanes that were flown previous to this year. So that indicates that something around 37 MAXs came through the Renton factory in June. That's a pretty nice number. That corresponds pretty well with Boeing CEO's indication that they were producing at a 38-ish throughput in the factory, and that they were going to be breaking into 42s levels sort of in the back half of the year. And so this absolutely confirms, I think, the improving health of the Boeing production system and that Renton factory.
Now, George, you mentioned CEO Kelly Ortberg. What's the word on the street? How has he been handling this new role? I mean, a lot of pressures on him.
Yeah, I mean, I think when it's all done, it's going to be a function of did he get quality improved? Did he improve throughput? Did he generate cash? Did he improve the balance sheet of Boeing? Sort of stave off any downgrades. And right now, I'd say the report card would be pretty good for what Kelly Ortberg is doing.
And George, you also told us that, tooling up these factories to crank up production, it's not as easy as it sounds. It's a little bit more difficult than manufacturing an automobile coming down the line here. And that goes to the labor issue. You need some pretty highly trained labor. And coming out of the pandemic, that was a challenge. How is Boeing doing these days on that front?
Yeah, so if we measure it from the throughput in the factory, it looks like it's doing better. We're hearing better sort of noises from the supply chain that labor is stabilizing. I think we see it in the country, right? The labor market isn't as sort of white hot as it was coming right out of the pandemic, especially for some of this manual labor that they're looking for. And so I think that helps stability. That stability allows you to go ahead and train people, improve throughput. So it appears to us, all those indicators that labor is stabilizing, quality is improving, and that's definitely having Boeing's benefiting from it.
George, you mentioned deliveries earlier. The Paris Air Show is a huge event for these airlines. Yes. How did Boeing fare coming out of that?
Yeah, so we haven't seen a lot of orders for Boeing recently, and we didn't see any at Paris Air Show, right? They had pulled out. I think just as they were monitoring the developments of that Air India crash, but we really haven't seen a lot of orders recently for Boeing. I suspect that given the tariff backdrop, you're just not going to see a lot of orders for Boeing until that tariff backdrop gets cleared, right? Boeing has one factory they build 737s at. It's in the U.S. So tariffs between us and the rest of the world always get in the way. That has to get cleared up.
George, great stuff as always. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst. Boeing, stock hit a 52-week high today. So again, stock finally seeming to get back on its feet here. We're going to have more coming up. This is Bloomberg Good Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we are being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. And this is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Whole lot of nothing right now. Stocks mixed a little change a day after we had that broad sell-off yesterday. Now, President Trump did say he would not offer any extensions to the new August 1st tariff deadline. Got that headline on social media in the last hour or so. Karen Manna at Federated Investment, she was a guest earlier today. She says, like it or not, the passage of the big tax bill does give investors a huge degree of certainty.
Despite tariffs looming out there as a factor that needs to be resolved, perhaps less final than some others, I think that overall we've seen a narrowing of the range of outcomes and an overall reduction in the uncertainty.
Right now, the S&P 500 down just about 3 points, 62.27 on the index. The Dow Jones Industrial Average, 103 points lower. The NASDAQ 100 is up 4 points right now at 22,690. Meantime, profits for the Liberation Day quarter, we're going to start to see those appear next week, as Gina was alluding to.
Yep.
Tariffs, again, paid by U.S. importers. They should bite into margins. So we'll see that starting next week. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Lisa
So,
and Paul.
countries that we put a tariff on, they don't pay.
They do not pay.
The importer.
I'll take you both by the hand. We can go to the Port Newark Elizabeth, which is just a few minutes away, and you can look at the tariff sheets and the importers coming to pick up their stuff. They're the ones who fork it over, and
Then the question is,
how does it get passed on?
Does
Does it get passed on to the consumers or the people who are getting that stuff, the manufacturers in the U.S. or the businesses in the U.S.? Do they just eat that, and how does that impact their margins?
And Gina Martin Adams was suggesting
China is not paying anything when it sends its stuff to the U.S.
Got to make sure that reporting is clear, John. Okay.
I think I just did.
Yeah, I think you just did.
Nailed it.
John
Is that
Tucker.
controversial?
This is the pet peeve of the day, and we're going to nail it. So we've got our tariff math down correct. John Tucker, thank you so much. Lisa Mateo, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We were just talking about tariffs, and that's been a cause of a lot of volatility in the stock market this year. Although most market indexes are higher year to date, the S&P by about 5 or 6%. So there you go. Even the small cappers are back in the green again, and that's good for new stock market issuance, IPOs. Mike Casper joins us here. He's a Bloomberg Intelligence strategist. Mike, talk to us about the IPO market for some of these small cap companies. What are you seeing so far this year?
Yeah, so it's steadily healing from
Order
the dearth
submitted.
of IPOs that happened in 2023. So looking back to that year, it was actually the worst year on record for small cap IPOs back into the 90s, even worse than 2008, 2009, when obviously we were in the middle of the great financial crisis. So 2023, really bad. 24 starting to pick up. 25 has been pretty much a return to trend, right? So the pre-pandemic trend, we're almost back to that, at least on a nominal dollar deal value basis. The best quarter for issuance actually in the second quarter, going back to 2024 or 2021, sorry.
Yep. So how about SPACs? That was a thing back in the day. And I think if my eyes didn't deceive me, I've seen a couple of SPAC news items go across the wire. Are they back to any degree?
Yeah, they're somewhat back, at least in the small cap space. So when I'm talking about that 8.5 billion of deal value, they're still making up a little bit more than a third of total IPO issuance in the Russell 2000. We saw that bubble pop at the end of 2021 and into 2022. We got as low as 20% of total small cap IPO deal value made up by SPACs, but we're back to over a third now.
Now, when we go, when we talk in the breaks here, right? I was trying to find out, okay, IPOs, how do you find out so much? I learned IPO Go. You just head over there,
basic.
okay?
Yep.
And I click it, I head to the terminal, and a lot of stuff pops out, Mike. So explain to me, who does it say as far as like, who's leading the list? Is it here? Is it Europe? Is it different areas? I mean, who's leading the list as far as IPOs?
Yeah, there's a pretty solid amount of IPOs, at least in the U.S. Returning to trend in the small cap space. In large caps, we've seen a few as well. You know, IPOs or company managements rather really love when there's certainty for stocks, and you're certainly getting that in the large cap space. So there possibly could be a new wave of IPOs into the summer as the S&P 500 is hovering around all-time highs. Company managements always want to IPO into the highest valuation possible. In the Russell 2000, we're still dealing with quite a bit of turmoil, so maybe a little bit shaky there. But again, tariffs really didn't dent the outlook for IPOs. They still came to market in the second quarter despite considerable uncertainty. So we're really seeing a pretty nice recovery, at least here in the U.S.
How are these IPOs performing?
So relative to the index in the Russell 2000, at least, which is my coverage, new issues in the month after coming to the market have outperformed to a clip. About 60% of them have outperformed the market. So pretty decent performance. And the way I look at that is a gauge of risk taking, right? So think about IPOs. They're kind of riskier shares. People haven't really felt them out in public markets yet. And they tend to be a little bit more volatile. So the fact that investors are willing to jump into some of these new issues is a healthy sign for risk taking in the Russell 2000.
Now, can you dig into a little bit? You kind of mentioned this earlier, but why tariffs kind of halted IPOs for a bit, and then when they picked up? Because I remember talking about IPOs, and Paul was like, "Woohoo!" Like, "Hey, we're back in business."
Yeah.
So get into why it kind of took that pause and how it's coming back again.
Yeah. So again, when you're putting yourself in the shoes of company managements, really. You would want to IPO your company at the highest valuation possible into a lot of certainty in the market, right? So you'd like things like all-time highs and policy certainty going forward. And tariffs obviously introduced a whole lot of uncertainty to the market. We had a bear market in the Russell 2000, narrowly missed it, at least on closing prices in the S&P 500. So that's really not a good situation for IPOs, but the fact that they still were willing to come to the market in the second quarter as things recovered, I think is a very favorable sign.
Are there any sectors that stand out at you? Any industries that are coming to market more?
Yeah, so in the Russell 2000, it's always healthcare. There's always a ton of healthcare IPOs, and that's really been the case. These smaller drug companies especially, they like to look for funding to help move their drugs through the FDA approval pipeline. So there's always a healthy amount of IPOs there. Financials also had quite a bit as well.
Now, this morning I was talking about the Financial Times. I always take things back to shopping. So Shein, it reportedly filed for an IPO in Hong Kong to pressure the UK for a London listing. Do you see this back and forth, going between the Hong Kong and the London listing?
I don't look too much outside the U.S. really, so
Okay.
I haven't been following that as much. But
So what's the outlook for IPOs for small caps? Is it, bankers always talk about their backlog. What are you seeing out there?
yeah, so again, if you take a look at the IPO Go function, you can actually sort for announced deals that haven't come to the market yet. And if you look across the whole U.S. market, which is kind of how I would prefer to look at that rather than set hard market cap deadlines, delineations, there's a healthy amount of IPOs that have been announced and are in the pipeline for this summer and later this year. Quite a bit, actually. Again, 2021 is the comp that we're going back to because that was a huge boom for IPOs. The most announced IPOs going back to 2021 we saw in the second quarter.
All right, Michael, thank you so much for joining us. Appreciate that. Michael Casper, U.S. equity strategist. We had Gina Martin-Adams. She covers some of the bigger stuff, and Michael Casper covers the small cap stocks, the Russell 2000, which is where a lot of people see a lot of value at different parts of the cycle. So we love getting a few minutes of Michael's time there. Michael Casper, U.S. equity strategist for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker studio. The Russell 2000, it's up like a fraction of 1% here, but we'll take that on the year. That's on the year-to-date performance. So pretty interesting there. Coming up, we're going to check in with Geetha Ranganathan. She covers all the media stocks, and she's got a preview, Lisa. Okay, she's got a preview of the cable companies, and they're not only losing video customers, but they're also losing the broadband customers, and that is really challenging. All right, we've been waiting for President Trump to convene his cabinet meeting, and we see the room in the Capitol where they are gathered. the cabinet is gathered. So we will go to that when they begin their meeting. But in the interim, we're looking at the market here, Lisa. Not much movement. The indexes are kind of waiting here. So we'll have to keep an eye on that. But I look at the bond market. Yields are pulling up just a little bit, up about 4 basis points at 4.42%. All right, right now, let's go to Washington, D.C., President Trump and his cabinet meeting.
And you've worked great with the governor. It's terrific. I want in particular, because of what she's gone through this last few days, done an incredible job. As you know, Christy, I'm going to ask you to say a few words about Texas. The first person there was the first person I saw on television was you, actually. And you've worked great with the governor. It's terrific. And you might want to tell a little bit about the trials and tribulations, but we appreciate the job that you and everybody done. You had people there as fast as anybody's ever seen. So really appreciate it. We all do, and maybe you could say a few words.
Emergency responders. Nim Kidd is his emergency management director, who is incredible. And has immediately worked with the local first responders to get help to individuals and get them evacuated.
And it is heartbreaking to watch these families suffer the way that they are.
Right away,
As soon as
you
this
know, because you and I were
flash
talking
flooding
a lot
event
during
happened,
the Coast Guard.
the governor
We
has
also had some assets out of
activated
Customs and Border
his
Protection.
emergency
Our board tag
responders.
teams
Nim
went in
Kidd is his
and helped,
emergency
with
management
rescue
director, who is
clearing
incredible
debris so that we can
and
get
has
roads open
immediately worked with the
people
local
the help
first
that they
responders
need.
to
I
get
think
help
when
to
I got
individuals
there,
and
the
get them
most
evacuated.
concerned that
Put
day,
requests into me.
as soon as I arrived on site,
We
was
deployed
getting a
Sir
briefing
right
from all
away,
the
as
emergency responders
you know,
was
because
just
you and I were talking
how
a lot during
unified
this
they
time the
were
Coast Guard.
in
We also had some
focusing on the
assets
fact
out
that
of
they're-
Customs and
we're
Border
there to save
Protection.
lives.
Our board tag
They were
teams
there
went
to
in
rescue people,
and
find
helped
people who
with
were still
rescues
alive,
and
and to
clearing debris so
reunify
that we
with
could
them
get
and their family members.
roads open and
We
people
as a
get the
federal
help that they
government
need. I
don't
think when I got
manage
when I
these
got there, the
disasters,
most
the state
Sir
does.
that
We
day.
come in and support them.
As
And
soon
that's
as I
exactly
arrived on
what we
site,
did
was getting a
here in
briefing
this
from all the
situation.
emergency
FEMA went to
responders was
enhance
just
level immediately.
how
But as
unified
soon
they
as you
were
signed,
in focusing on the fact
major
that they
disaster
were there to save
declaration,
lives.
we
They were there
able
to
get
rescue
them
people, find
resources and
people who were
dollars
still
right away,
alive.
just like you envisioned through state block grants to help them with cleanup. And we're still there in presence, and FEMA's been deployed, and we're cutting through the paperwork of the old FEMA, streamlining it much like your vision of how FEMA should operate, and it's been a much better response to help these families get through this terrible situation. We still are looking for people. We're still looking for a lot of little girls and other family members that were camping along that river, and they will continue until they find every single person, and we will continue to help them and assist in that. I was surprised when I got there at the camp that day, right after this happened, the parents that were there, the parents that were looking for their children and picking up their daughter's stuffed animals out of the mud and finding their daughter's shoe that might be laying in the cabin, and just hugging and comforting people matters a lot. I'm extremely grateful for God's hand in that whole situation, because hundreds and hundreds and hundreds of people were saved. And this is a time for all of us in this country to remember that we were created to serve each other. God created us to take care of each other. And that when we do that, we are happier, we are more fulfilled, and we can walk alongside people on their worst day and help them get through it and come out the other side, knowing that we can continue to live a life that God has purposed for us. So they're grateful for you. Several times the day after the flooding, you and Melania were on the phone with me, and I want to thank you for that. That meant the world. I was able to tell many of those folks that I had been visiting with you, and that you had said, whatever they need, Christy, let's deploy it and get it down there and be helpful. And on Sunday, when the families were waiting at a church to identify their children's bodies, Franklin Graham and I called in and prayed with the families and read some scripture with them, and he was incredible in making himself available to that as well. We'll be back down there in a couple of days and continue to do all we can, but this is an unprecedented event. It really is. There's been tragedies like this around the country, but everyone is unique in different situations, and the response the federal government had supporting the state through this. I'm proud of the people that stepped up and immediately came. The Coast Guard, when they came in, they had a difficult time even getting the aircraft in and landed. They had to try several times in the weather to get it in and deploy. And I think we've heard about, our one Coast Guard member that was responsible for saving over 165 people, but that entire crew did incredible work. And all the first responders there did incredible work. And I know people are getting tired now, but they're getting reinforcements and volunteers are showing up. And I just want to commend the governor and his team for being the leaders. And they're so thankful that you're letting them make the decisions and manage the response like it should be. And then us supporting them with the resources of the federal government. We've already deployed dollars to the state, much like the block grants that you've talked about.
Right.
So they're grateful for that, sir.
There's never been a wave like this outside of the breaking of a dam. Because this was almost a wave that ended up being 30 feet high, more actually. Now with the dam you can understand it, but this approached almost with that speed. When you see a dam break, it's not a pretty sight. It wipes out everything, and this is the kind of thing that built up so fast. And it's happened 2 or 3 times before over the years, but not to this extent. But tell them when you met the father who was picking up the daughter's clothing. And
I had walked through
so
the
sad.
cabin where all the little girls died, and I had kind of fallen apart in there. But I walked out of the cabin, and a gentleman was standing there, and he said, "That man over there needs a hug." And so I walked over to him and I hugged him and I said, "Do you work here?" And he said, "No, my little girl was in that cabin." And he said, "And I just found her best friend about an hour and a half ago. She had passed away." And he just fell apart. And so then we just hugged and talked for probably an hour about that. But then there was the grandpa was there looking for his granddaughter as well. There was a dad there of one of the counselors. The counselor was alive, but she was dealing with the fact that she had hung on to some of these girls and was trying to keep them out of the floodwaters and had gotten hit by something and had lost 2 of the girls and wasn't able to hang on to them and was going to live the rest of her life thinking about that moment when she wasn't able to hang on to these girls. But these parents were picking up their kids' belongings out of the mud and throughout the camp and putting them in bags. And then one of the dads said, "I knew 50 of these girls here." So I knew that was her dress and my daughter's friend's dress. So he was picking it up and putting it in a bag to return to her parents. And so it was and then the director was there comforting everybody who had lost his father the night before too. And he was still there trying to facilitate all of these parents grieving their children and find them. So the strength of people is incredible. One of the things that I asked there that day was that they all have escorts or counselors when parents come in. So from that point, that when they came into the camp, that they have somebody with them when they're going and looking for their children's belongings or looking for their children. And so very emotional, but also just so tragic.
Texas and the governor has been obviously very good for years with me, but the relationship with Texas and their first responders and us with our first responders and lots of other people, and we brought in a lot of helicopters from all over, and we had a lot of helicopters. It was actually dangerous, a lot of helicopters up there, but they were real pros and they were responsible for pulling out a lot of people, and we got them there fast, and Texas had some good ones too. But the response has been incredible, and the fact that we got along so well, I don't know, I don't even think that's a political thing, but we got along so well, and it was so unified. I think a lot of lives have been saved. That could have been as bad as it was, and you could have lost double or triple. This thing was just really horrible. Well, congratulations on a great job, and appreciate it. I know you're going down. I'll be going down on Friday with First Lady. She will be taking a trip, and we don't want to get in anyone's way because that's what happens. The president goes and everyone's around focused on. I don't want anyone to focus on us, but it's possible they could have. they could have somebody saved still. You know, there's a lot of areas. It's a big area, and you know, probably unlikely at this point, but there could be. I mean, they're thinking there could be the possibility, but what a tragic situation. A good job, and we'll see you on Friday, and we'll finish out the day here. I think you've been reading a lot about it's a terrible topic when you talk about financial after this, but we have a big country and we've been doing very well. The tariffs, as you know, are starting to come in at record levels. Tremendous amounts of money are coming in to our country. We never did that before. We're not used to it. We only have tariffs going out. We only adhere to the rules of other nations who charge us tremendous tariffs because we were led by stupid people or people without any business sense. And I'd like to ask Scott, you could maybe talk a little bit about how well we're doing with regard to the money coming in. And the big money will start coming in on August 1st. I think it was made clear today by the letters that were sent out yesterday and today. Go ahead, please.
Yes, sir. We will have taken in about $100 billion in tariff income thus far this year, and that's with the tariff, the major tariff not having started till the second quarter. So we could expect that could be well over $300 billion by the end of the year. We don't agree with CBO scoring, but for those who do, the CBO scored tariff income over the next 10 years at $2.8 trillion, which we think is probably low. And you know, sir, under your leadership, we're witnessing.
And they gave us no credit during this last little, the great, big, beautiful bill. I always use the word great. I add that to it because it really is what it is. It's never been anything like it, actually. And I want to thank all the Republicans that voted for it. And I want to, you know, scold the Democrats because they're voting for tax cuts. They're voting for no tax on tips, no tax on Social Security, no tax on overtime, and you know, many, many other things far more important than that. Great health care. And frankly, every Democrat should lose their election because it was purely political to vote. They were told not to vote for it. So think of it, we got 218 to 2, and then with the Senate, we had 50 to 3. Democrats didn't vote at all, not one positive vote, with all of the good things in there. Economic development money, tremendous border money. Now you're loaded up on the border, and I don't think we're going to need so much of it because we had zero come in last month, so I'm not sure how much of it we want to spend. You may think about that. You may actually think about saving a lot of money because the wall's been largely built, and it obviously worked. But you may want to think about that. But so I think it's incredible when I watch the Democrats, and they have standard lines like they had Russia, Russia, Russia. They had the laptop from hell. It all came from Russia. You know, they make things up and they go with it, and they feed it to you people in many cases. And they said, "Here's our line," and I hear the new line is death. Oh, it's death. Everyone's going to die. It has nothing to do with death. In fact, we're saving our country. Death is from allowing 25 million people into our country, of which 3 or 4 are stone cold, hard criminals. 11,888 are murderers, many of them committing more than one murder. That's death, and the Democrats did that. Joe Biden did that by allowing people to come in here just totally unchecked, unvetted, open borders, open borders. The whole world was dumped into our country, from prisons, from gangs, from mental institutions. We have many people walking the streets, walking in areas that we don't know anything about, that came out of insane asylums. They released their the insane asylum population into our country, and it's amazing the job that you and Tom Homan are doing, by the way, on that. But we have to get them out, and we have no choice. We have to get them out, and we are getting them out. And so, Pete, do you want to tell them about our great military and how well we did with respect to the bombers and the B-2? We had the pilots here 2 days ago, and they were incredible people. Go ahead.
Yes, sir. Truly a historic mission, and demonstrated the skill and courage of the United States military. From those B-2 pilots and families that we had a chance to meet, sir, to the fighter pilots, to the refuelers, to the maintainers, to the air defenders who defended the base. What was demonstrated on the world stage was American military might and capability. And it wasn't just Fordo and Esfahan and Natanz that took notice in Iran. It was the rest of the world, that we have a decisive commander-in-chief willing to use these capabilities, which are the best in the world. As the president pointed out, no one else could have done what America did there on that night, and everyone took notice of that. With the One Big Beautiful Bill, sir, we've got $150 billion additional to invest in Golden Dome and all the other weapon systems and stockpiles and shipbuilding priorities of yours. Another month, another historic recruiting bump. It's not just the Army and the Marine Corps anymore, it's the Navy, the Air Force, and the Space Force, all historically ahead of where they've ever been. So historic spirit inside the military. We had a chance to be at NATO, Marco and I, and see how the world responds to us saying it's time for you to shoulder the burden and take the lead for your continent. It only happens with President Trump leading, and we're proud to be a part of what's going on at the border, sir, with now a 4th national defense area where we're helping get to that number 0 in securing the border. But that mission, Operation Midnight Hammer, re-established deterrence. It reversed what happened in Afghanistan. You saw the debacle of what Biden allowed to happen in Afghanistan and what that did to our image. President Trump said,
all right, I'm off. I'm caught up.
American leadership and deterrence, and we're proud.
You still out there, SM? How you doing, buddy?
Enemies were watching. They watched every minute of it. They watched. It was
Thanks for the call out.
People that weren't watching, actually, but they watched.
I'd be taking heat on that trade right now.
Military performance, the likes of which we haven't seen in a long time. I mean, if you compare that to the same country, the hostages from years ago, Jimmy Carter, it was unfortunate for Jimmy Carter. He was a nice man, but with the helicopters going down, the sandstorms, the prisoners, they get captured, then the election and the prisoners and Reagan and all the problems. It was nothing but problems. And that was a failure. And ours was not only the pilots, I mean, those machines flew for 37 straight hours. They didn't stop. They went skedaddle. You know the word skedaddle? It means skedaddle. They dropped the bombs and somebody said, skedaddle. Let's get the hell out of here. And every bomb hit its mark and hit it incredibly. And as you know, the Atomic Energy Commission said it's gone. That place is gone. We had a lot of fake reporting, mostly from CNN, where the scammer writer, a writer for CNN, who should be fired, by the way, she was involved with the 51 fake intelligence agents, if you remember that. She did that story, created a story out of it. She created a story out of the laptop from hell, saying it came from Russia, but it actually came from Hunter Biden's bedroom or worse. Just a scammer, and she's still at CNN, which is pretty amazing. But we'll ask you a question about her. But they came up with this concept that maybe the attack wasn't that good. Maybe and I saw it happen right after the attack. I saw this person on CNN. I like to watch the enemy. You learn from the enemy. And I watch because you have to know where they're coming from. And I watched her say, Anderson, I'm hearing stories that maybe they didn't hit their target. Maybe it wasn't that good a hit. And they were hearing stories. The next day it was a little more, and the next day a little more. After 3-4 days, she was saying, I don't know. I don't think it was that, except by that time everybody knew it was hit perfectly. The evidence is in the planes. The pilots are the best evidence. But they actually came out of their plane because they were here the other day, and they said, it was so sad. We did such a good job. We flew into very dangerous airspace. I'll never forget, we were in the Situation Room, and they said they have entered Iranian airspace, and everyone took a deep breath because they had more missiles pointed at them, but the equipment is so good, it's stealth, way up in the air, and it was stealth, and they went right through that, and they sort of, by the time they found out they were there, they were already gone. That was the word skedaddle, get the hell out of here. But they were right in the most dangerous airspace in the world, and they took those big, beautiful, very fast. They're unbelievable planes. I mean, they become.
All right, so we're in VWAP chop mode right now.
I always thought they saw.
So what that means is the NQ price is on top of the VWAP. If you see right here, the NQ, we're in the NQ right now. Let's go to the ES. The ES is below the VWAP. So we need to wait for this situation to iron itself out. Hey, SM, yes I was, you saved me. You saved me from taking some heat, my friend. How you doing?
30 missiles, Tomahawk.
I couldn't handle it.
Submarines,
Those people were talking forever.
Every one of them hit that target. It was a perfect mission. Then they came back.
I was attempting a short.
37 hours. Every plane worked perfect.
All right, you got interviews. All right, man.
You got to get the mechanics here.
Good deal. For software stuff, or are you going to grind it out and try trading, or what?
But they did fly through a dust storm, which they shouldn't have done. Sometimes you say, let's go back and try it on a nicer day.
Oh, great, dude. Yeah.
And sand don't work.
Perfect. That's a great job. That is a great job.
Horrible embarrassment.
That's a perfect place to start your resume.
It was the most embarrassing
All right.
moment in the history of our country, and we would have gotten out. I was
good.
the one that got him
Good.
down. I would have kept Bagram, the big air base, which right now
Good.
is controlled by
That's the
China,
backup.
one
Perfect.
among the most powerful runways in the world. Thick.
Hey, did you see? That's good, man.
Anything.
I'm rooting for you on the relationship banker one, man. That's a really solid job.
I was keeping it. Outside of that, we were leaving, and I would have been out faster than them, but we would have gotten out with.
Did
sprint
you see
that was the
Top
most
Step
botched up
is no
mess
longer
I've ever
supporting
seen. They
Ninja
left all that
Trader?
equipment behind, and every year they have
Looks like we got a long
parade
coming up here.
running down some third-rate street with the equipment. You know, it's supposed to be Fifth Avenue. It doesn't work.
Yeah, I moved over to Lilu.
With all that equipment that they left, they
I
should
went
have
back to
taken every
Lilu.
ounce of it. I was taking
So I'm
every
trying to
ounce.
qualify. They had a really good sale on a weekly account.
And,
So I'm working that
Millie said, I remember one time.
this
"So
week.
We're better off leaving the equipment. Why? Well, it's cheaper. I said,
Oh, let me go
"Cheaper?
back
I
to
mean,
the
it's cheaper
NQ.
to leave a $150 million airplane.
Everything's. I got
rather fly
everything.
into Pakistan
Snooze.
or
Snooze
India.
showed up this morning, wanted to
fly
watch
straight
the
home.
NQ, so I moved everything down to
Yes,
the
sir.
NQ.
That's when I knew he was an idiot.
Are you working the ES or
It took
NQ?
long to figure that one out, but they left all that equipment, but they left their dignity behind. It was the most embarrassing moment, in my opinion, in the history of our country. Not that we got out, we should have not been there, but that we got out the way we got out with great embarrassment and death. You had 13.
Oh, you're done for the
young
day?
people. I don't
Okay,
know their
cool.
families very well, but you had hundreds of people killed that nobody talks about. Yet the other side, many people were killed. Many people are walking around with no legs, no arms from that whole thing. They left from the wrong airport. They should have left from Bagram.
I don't know
because
which
Bagram
direction
was a
we're
big
going.
base
We're
with
barely
hundreds of
on top
miles
of the VWAP on both.
you know, fencing and territory around it. Nobody would be able to get near it. And they left. So, you know, we've done.
Isn't that how it always
great
goes?
job. And I think people are really starting
You
to
know what
see
I'm
it,
saying?
starting
Isn't
to
that how it
appreciate
always
We've
goes?
done fantastically. That mission was a work of art. And I have spoken to some of our perceived, I don't know if they're enemies.
When
but
you're
they're
not
perceived as
overthinking it,
potential
you're not
enemies.
thinking about anything on
And they
paper.
essentially said the same thing. Very impressive.
That's good, man. Was that your A+ setup you were working on?
We didn't lose an engine. We didn't lose. It just they landed and they were cheered. But the sad thing was they were cheered.
Cool.
And one of
Good.
the pilots said, you know, we were a little concerned because
Yeah.
when we got out,
I missed
we
a
were
short
told that
this
on
morning.
television They were reporting
Short
that
was right
we
here.
may have missed our targets. Sir, we hit every target. That's what I do for a
It
living.
didn't fill me.
We
I
hit
got
every
in too
target.
late.
In fact,
I got in
when
too
I
late.
saw
I've been
the
busy
drop,
this
when the
morning,
bombs hit,
catching up on
a
leads.
yellow haze came over the horizon.
But the
that
short
I've
was
never
right
seen
here.
before. It just
I-
lit up
I
the
can't-
whole
I don't
horizon,
mess with it.
brighter than the sun. It was like looking into the sun. He goes, "We hit our target because you know what that was exploding," and but they were a little downbeat because
Right now,
listening to
stochastics are
fake
way
CNN
overbought and they're
reporting,
rolling
the
over.
fake New
Kind
York
of
Times
want to
put
be on the
together
same side of the
to try and say that it
stochastics.
wasn't,
Right
it
here
wasn't
was the
perfect.
long,
They couldn't say what they missed.
the long
All they could
signal,
say
but
is, maybe it
I never
wasn't
like
perfect.
doing that
You
into the
notify that
VWAP.
reporter immediately. You should fire her.
That's fine, man.
And
Yeah.
I just want to congratulate.
That's
those
fine, dude.
pilots. And, you know, a lot of people
Yeah.
don't like bringing things
Grind it
up.
out,
Like,
get
I
6
always like
months
confronting, 'cause otherwise
in,
the
and you'll
public
be
doesn't
able
know
to maybe move up through the bank, or once you've been at a bank in a position like that for 6 months to a year, another bank will hire you right away.
17% approval.
You'll get in right away somewhere, you know, like at a bigger spot or a full-time spot. That's like a perfect place to get started. You know what I mean? That's really good. Yeah, you'll be more than set. That's
And we really have a corrupt
that's good to
media.
hear.
And nobody really knows why. I mean, why would you want to have open borders?
See, my daughter's a full-time banker,
criminals pouring into our country?
relationship
Why would you wanna
banker,
have
full-time.
men playing in women's sports,
Or
free
every
service
bank
for
calls the
everyone,
position
you know?
something
You'll
different.
have to figure
It's
that out.
You
But,
sit
some
with
of you
people and
don't.
do
I mean,
loans
I'm
and
looking
stuff
at
all
some
day,
people,
and
they love the country, but I look at other
analyze their
people and they
accounts or
can't.
whatever.
But we're really proud of our military. It was, and the people that
Once
maybe
you have a
don't
job
like
like that,
us
you'll always
or
have a
wanna
job,
play games with
no
us,
matter
because
what.
I think that had you not had the situation in Afghanistan, I don't think Putin would have.
It's like being in the car business. Once you've been in the car business for a few years, you'll always have a job in the car business anywhere.
This might be a chance, and he's. We're dealing
Man, I
with
kinda
him now
like the
too.
ES long.
We're not happy with Putin. I'm not happy with Putin. I can tell you that much right now, because he's killing a lot of people, and a lot of them are his soldiers and their soldiers mostly, and it's now up to 7,000 a week, and I'm not happy.
Oh,
with
you're going in 3 hours?
Okay. Any questions? Yes.
Yes, sir.
Well, just be yourself. Don't try, just be yourself, man. You'll be all right.
Well, I wouldn't be telling you.
Virtual
I have a
interview.
little
Okay, cool.
surprise. You know, one of the things we did with the attack is that, and you asked that question. I didn't mean to be rude, but I'm in a rude because I'm looking at some of these crooked people up here, so I'm rude. But your question was asked very nicely.
You'll be good.
But one of the things we did is we went over every fact. We wanted to get every fact straight. We wanted to have the distance straight, the number of pilots straight. Everything had to be correct, because we want to be. This was a very important mission. If we failed,
The
on
market
this
will be
mission,
scared of me
it
once
was
I.
beyond,
That's right.
The
It will.
war that, obviously we had with
They won't
Iran.
want to upset you.
A lot of hatred, a lot of years and years of hatred, centuries of hatred.
Oh shit.
People have never seen anything like it. So we wanted to be correct.
I
with
don't know,
all
man.
our
I kind of
facts,
like
and
the
what
long
we're
here on
doing
the
is just
ES,
asking,
but I'm going to
it would be
hold off
great
just a little
if,
bit more. The markets will
if
be
the media would
terrified.
be
They won't
correct
know
with
what to
their
do.
facts. That's all we ask for. So, go ahead. So finish it up.
Oh, yes, just returning back to Russia, if there's anything that you would signal about your displeasure with them, right?
Well, I'm just.
I think that's
look,
the long,
I'm
man.
very unhappy with that.
Feeling it.
There's no reason for this. It's turned out to be tougher, but it's only tougher. And I will say the Ukrainians were brave, but we gave them the best
Order
equipment
submitted.
ever made. We
comes down
gave
to
them the anti-tank busters that knocked out tanks. I mean, you just aim them in the direction of the tank and the tank is gone. We gave them missiles, the latest and the greatest.
I'm not going to
They were
chase
able
it
to
up,
shoot
but if
down
it
a
comes
lot
down,
of
I'll get in
things.
there to go
Would
long.
have normally wiped out. Probably would have been a very quick war. It would have been
On
a
the
war that
ES,
lasted 3-4 days, but they had the benefit
62, was that
of
6276
unbelievable
possible
equipment. And Europe
entry
gave them far
if
more
it, if
because
it, if it
Biden
comes
should
back
have
to the
done that.
20.
He should have equalized. We should have given them the same, or we should have given
Stochastics
actually
are
less than
pointing
Europe.
my way.
It affects Europe much more than us, but we're in there for over $300 billion. Europe's in there for over $100 billion, but still, Europe gave a lot. And I will say this, the Ukrainians, whether you think it's unfair that we gave all that money or not, they were very brave because somebody had to operate that stuff. And a lot of people I know wouldn't be operating it. They wouldn't have the courage to do it. So they fought very bravely. But we gave them the best equipment in the world. We make the best military equipment by far. There's nobody close. You look at other equipment from other countries, it's not even close. That's why everybody wants to buy our equipment. And that's why we're going to step up these contractors now that make it, and they're brilliant, but they make it too
Alright.
slowly.
Leads have dried up.
And
Be a
we
good
have
time to get
step
in
them
for a
up
trade.
and let them make it at a much higher rate. Unfortunately, we have
Looks
to
like I
do
might
that.
be a little too late
But
to the
if
party.
you look at our Patriots, if you look at our Tomahawks, if you look at our, well, what we do with tanks is, you wouldn't want to be driving a tank. You would feel nice and secure, but they are javelins, they're called. And I gave them the javelins. Remember they said Trump gave the javelins and Obama gave them sheets, right? They called Obama at that time. Barack Hussein Obama, if you haven't heard, did a terrible job. But that was a war that should have never happened, and a lot of people are dying.
Yes.
And it should end. And I don't know, we get a lot of bullshit thrown at us by Putin. For you want to know the truth, he's very nice all the time, but it turns
Trying
out
to look
be
for another stock to
meaningless.
Do you want to sanction him? Lindsey Graham has a sanctions bill.
move some money around.
I'm looking at it. Yeah, no, I'm looking. The Senate is passing and passed a very, very tough sanctions bill. Yeah, I'm looking at it.
Can you sign that?
It's an optional bill. It's totally at my option. They passed it totally at my option, and to terminate totally at my option. and I'm looking at it very strongly.
Yesterday you said you want to see more.
Go ahead, please.
The Council of Economic Advisors released a new report saying that imported goods have actually decreased in price from December through March. Well, my question is,
With the tariffs.
the Fed chairman keeps saying that tariffs are going to cause price increases.
Are
the prices just not
Chairman
passed
of the
through
Fed?
yet? Yes, exactly.
Well,
Are the
you
prices,
do a better job than him.
are the prices
All
just
right.
not passed through yet?
No, I think what's happening is everything's evening out. You know, when we charge, see what people don't understand, the other countries have been charged.
I wonder if it holds
almost
the
every
200
country
or if we pull back.
charges us tariffs. We had deficits with everybody for years, for decades. And we were like this big monolith that made bad deals with everybody. We rebuilt South Korea and we stayed there. It's okay, we rebuilt it and we stayed there. And they pay us very little for the military. I got them to pay billions of dollars, and Biden then canceled it when he came in. I said to South Korea, as an example, we give you free military, essentially, very little. And I think you should pay us $10 billion a year. And they went crazy. But they agreed to 3. So I got 3 with a phone call. And I was satisfied. I said, but next year we have to talk. And then we had a rigged election, and we never got to talk. And you know what Biden did? They probably went to him and they said, listen, Trump treated us terribly, and we shouldn't be paying anything, and he cut it down to nothing.
Hey, Sam, are you working that Ford Trader Profit or whatever one that was?
It's about contributing to the military, not only just paying more in NATO, but contributing. We have 45,000
I missed it.
soldiers
It
in
just
South
bounced.
Korea.
All right,
We have
I'm out now.
45,000 soldiers in Germany, 52,000 actually, and that's a huge economic development for them.
What was the one? What was the prop firm?
It's tremendous.
Yeah, the prop
money
firm.
for
Yeah,
them.
what was that
It's
called?
A tremendous loss for us. So we're talking in a very nice way. We're talking to them about it. It's very unfair. We supply the militaries to many.
My Funded
very
Futures. That's the one I meant.
successful
Sorry.
countries. South Korea is making a lot of money. And
Is
they're
that what you're working? Yeah.
very good.
Oh, no activation fee right
British
now?
will be paying for their own military.
President Trump, I asked you a question about Jerome Powell as well, and then a question
Huh.
to the Attorney General.
They're not
Jerome
rhythmic,
Powell,
right? That's
and then a
web-based?
question to the Attorney General. Jerome Powell, who you've been pressuring to lower interest rates, he's facing accusations
All their
of
accounts don't
lying
have
to Congress,
activation.
which is a potential crime about the
Well, then
opulent.
he should resign immediately. We should get somebody in there that's going to.
And I'm pissed. I talked about this long here for a little bit, and never got myself in. There's nothing I can do now. It's over.
Same with me. I think he's terrible. I think, look.
All right.
I call him Too Late.
Missed it.
T-O-O, Too Late. Like Too Tall Jones for the Dallas Cowboys, right? Too late. He's always late. But he wasn't late with Biden.
It's only
before the election.
12:30.
He
We
was
got a
cutting
few
him
more
like
hours
crazy.
to
Didn't help too much, did it?
wait for another
But he was
setup.
cutting them like crazy before the election with Kamala. And Biden, he was trying to get them in, I guess. I don't know. He was recommended by somebody that worked for me. I like you better.
If I could ask the Attorney General a question too, President.
Sure.
Your memo and release yesterday on Jeffrey Epstein, it left some lingering mysteries. One of the biggest ones is whether he ever worked for a American or foreign intelligence agency. The former labor secretary who was Miami U.S.
Oh,
attorney.
Trump is giving Powell a hard time now.
Allegedly said that he did work for an intelligence
Powell should
agency.
resign.
So could you resolve whether or not he did, and also could you say why there was a minute missing from the jailhouse tape on the night of the staff?
Yeah, sure. If I
Pam,
could,
could I just interrupt for
Sure.
1 second? Are you still talking about Jeffrey Epstein? This guy's been talked about for years. You're asking, we have Texas, we have this, we have all of the things. And are people still talking about this guy, this creep? That is unbelievable. Do you want to waste the time, and do you feel like answering?
I don't mind answering.
I mean, I can't believe you're asking a question on Epstein at a time like this where we're having some of the greatest success and also tragedy with what happened in Texas. It just seems like a desecration, but you go ahead.
Sure. First, to back up on that, in February, I did an interview on Fox, and it's been getting a lot of attention because I said, I was asked a question about the client list, and my response was, it's sitting on my desk to be reviewed, meaning the file along with the JFK, MLK files as well. That's what I meant by that. Also,
Yeah, I
to the
know.
tens of thousands of video.
I was
they
hoping
turned
for a
out
little dive
child
back to
porn,
the 20
downloaded
before
by
it
that
took off,
disgusting
but
Jeffrey Epstein. Child
that's
porn
okay.
is what they were. Never going to be released, never going to see the light of day. To him being an agent, I have no knowledge about that. We can get back to you on that. And the minute
You watching the?
missing
Oh, you're
from
done
the
trading.
video,
You,
we released the video.
were you playing the
showing
NQ or ES today?
definitively
Oh, you were on the
video was
ES. You
not
said that.
conclusive,
Sorry.
But the evidence prior to it was showing he committed suicide. And what was on that, there was a minute that was off the counter. And what
Yeah.
we learned from Bureau of Prisons was every year, every night, they redo that video. It's old from like 1999.
I'm really careful with the
So
price
every night
action.
the video
The
is
only time I'm
reset,
doing
and
NQ
every
is if
night
the
should have
ES
the
is
same
just
minute
not moving
missing. So we're
enough
looking for that video to release
to
that
be able
as well,
to
showing that a
work
minute is
my
missing.
ATM
And
strategy.
that's it on Epstein.
Man, what's going on? This thing just took right off. Took off without me too. Damn it.
What incentives do countries have to negotiate?
Yeah,
Since that deadline
you're
is
right.
moving,
You're right.
April 2nd now.
We didn't move, no. It's always been August 1st, that's when we're paying.
All right, let's see if we
Takeaway
take this
we
fair
put out
value
today,
gap
and I
out.
put it
I'm
in
on the NQ.
Just to make it clear.
ES
It
just
wasn't a
took right
change,
off.
It was August 1st. We don't change very much, every time.
All right, we
put
got
out
the
a
same
statement,
fair
we say we
value
made a
gap on the
change.
ES and NQ.
Clarification, maybe. No, August 1st they pay.
So let me show you
And
the
everybody
ES real
pays,
quick.
everybody has to pay, and the incentive is that they have the right to deal in the United States. If they don't want to,
That's
they don't
tough,
have to
man.
pay, they don't have to deal here.
I just wasn't
But if they
aggressive
want
enough
to,
on making sure I got
buy
in.
and make a lot of money and sell in the United
But we're
States, they
overbought,
have to do
so
it.
we're
You know,
way
you go back
overbought.
and look at,
So we're
some
waiting
of
for the
the
stochastics to
good
roll over.
presidents.
Oh, we
Our
just
country
cleared that
was the
fair value
wealthiest,
gap. Now we
proportionately
got
the
one. Now
wealthiest
we got
from
support.
1870 to 1913.
So we got support to
It
go
was an
higher
all
now. So
tariff
let's see what
country.
happens.
We didn't have income tax. That came due in that came in 1913. We had tariffs, and we had so much money we
just
didn't
gotta
know what to
hang
do
tight.
with it. We had, we had a couple of presidents that were very, very strong. McKinley, I guess, more than anybody, but he was the tariff king. But he was very, very strong. It's sort of sad. He made a fortune for this country, became very rich, and then Teddy Roosevelt went out and vice president, and he spent the money. And they said Roosevelt was a great president. And let's say he was a great president, but the money was paid by McKinley with tariffs. Tariffs are charged by other countries at levels that are ridiculous. And I call those other countries, and every one of them is willing to give us everything now, by the way, just so you know. Sir, we'll charge you no tariffs, nothing. We'll give you everything. We'll give you access to our markets. We'll give you everything. Is that a correct statement, Scott?
Yes, sir.
Howard, would you say that's a correct statement?
Exactly correct.
It's like, they just don't, because they're very spoiled, because for years they ripped us off and we didn't have a president that understood it, or Secretary of Treasury or Secretary of a lot of different secretaries are involved, but certainly Commerce Secretary was, not doing their job. I don't know about Kelly, she's small business, we'll keep it that way, okay? Her small business is bigger than almost all big businesses when you add it all up. But no, they are very respectful of our country, but the incentive is that they have the right to do business with us. Without that, they don't have the right to do business, and that would be okay too.
All right, so it's probably going to be a little bit before we get another real setup. If you're looking, I don't. For me anyway, if
My deal to them.
there's no trade here for me on my strategy. I need to either.
And fair.
We're looking at the NQ. All right.
We're picking a
We either
number
need a
that's
full pullback to
lower
like
than,
this
in
place
most
down
cases,
here.
lower than what they charge
This is
us.
where the support is.
But it's amazing
Somewhere
when you
between the middle
pay
of the
all this
here
money
and
for years
down
and
right here.
They get one president.
Or
that's
a
little
full
bit different,
reversal
a
and then
little
head
tougher
back down. So it's
on
I
the
missed the
second,
long. I just
and
missed
they're
it.
willing to drop everything they've been charging.
I totally
us for
missed the
years
long.
and years. I mean, we have countries going. We will have.
I almost got in on
we
it
don't have to
on
pay
the
any
ES,
tariff
but
to
it
come
didn't
in
come
and
down to get me, and it's okay. I'm not going to
giving us
chase it
total
around.
access to their countries. They gave us no access to the country. They say, well, you cannot go into our country. Okay, good. Now we will give you total access and you don't have to pay any tariffs. But please don't charge us tariffs. And we don't like that deal. So the letters I send out.
All right, I'm going to let a few more bars go by, and then I'll check back in. We just got to let some time go by and wait for the setup.
It just makes it more complicated.
If you got to bounce, SM, before I'm back on, good luck on that interview today, man.
Hard line. But it's
I'm
about
rooting
time
for
the
you.
United States of America started collecting money from countries that were ripping us off and laughing behind our back at how stupid we were. Okay? Thank you.
Mr. President, on the tariff issue, so you've talked about India coming, but then a couple days ago you issued a new tariff threat to members of the BRICS countries for if they aligned with anti-American policies.
10% charge.
That would be India, Brazil,
That's
Russia,
right, they have to pay
South
10% if they're in BRICS. Because
Right.
BRICS was set up to hurt us. BRICS was set up to degenerate our dollar and take our dollar as the standard, take it off as the standard. And that's okay if they want to play that game, but I can play that game too. So anybody that's in BRICS is getting a 10% charge.
Is that immediate, sir, or is
Yeah,
that
pretty
if
soon.
they engage in some behavior?
Well, if they're a member of BRICS, they're going to have to pay 10% tariff just for that one thing, and they won't be a member long. I thought BRICS was, you know, I said this about a year ago, and it largely broke up. But, you know, there are a couple that hang around, but I thought it largely broke up. BRICS is not, in my opinion, not a serious threat. But what they're trying to do is destroy the dollar so that another country can take over and be the standard. And we're not going to lose the standard at any time. If you have a smart president, you will never lose the standard. If you have a stupid president like the last one, you would lose the standard. You wouldn't have the dollar as you. And if we lost the world standard dollar, that would be like losing a war, a major world war. We would not be the same country any longer. We're not going to let that happen. The dollar, you ever hear the expression, dollar is king? The dollar is king. We're going to keep it that way, okay? And I'm just saying, if people want to challenge it, they can, but they're going to have to pay a big price. And I don't think any of them are willing to pay that price.
Thank you, Mr. President. Are you optimistic about reaching a tariff deal with the European Union soon?
Well, the European Union has been speaking to us, Ursula and the whole group, and they've been very nice. They treated us very badly until recently. Now they're treating us very nicely. It's like a different world, actually. They've treated us very badly. They were among the toughest to deal with. Actually, in many respects, they were much worse than China. Look at what they do to our companies. They sue Apple. They sue Google. 17 billion they got from Apple on a lawsuit that they didn't have a case. They have, you know, judges that are European Union judges. And they ruled, they take so much money away from our country in terms of that, in terms of other things that they do. They're very tough. But now they're being very nice to us. And we'll see what happens. We're probably 2 days off from sending them a letter. We are talking to them. I just want you to know, a letter means a deal. You know, a lot of people say, we got 200 countries. We can't meet with 200 countries. We have a few trusted people that know what they're doing, that are doing a good job, but you can't do it. You have to do it in a more general way, but it's a very good way. It's a better way. It's a more powerful way. And we sent them a letter. You read the letter. I think it was well crafted. And mostly it's just a little number in there. You'll pay 25%, 35%. We have some at 60, 70. Those are ones with massive, you know, where we have massive trade deficits because they've treated us very badly. But I would say in every case, I'm treating them better than they treated us over the years. Don't you agree with that? I could have done much. I could have been much harsher. I don't want to do that. We want to have relationships, but in every case, they treated us far worse than I'm treating them. I'm treating them very good. I could go higher with the tariffs, but I don't want to hurt them. That's why when you just read it, you come up with the number. It's so incredible that prices are actually going down. Just so you know, when I got in, everyone said, "Oh, eggs are going through the roof." That was the first. I was in for about 4 days, and they started screaming at me about eggs. They said, "That's Biden's problem." I didn't know about eggs, but eggs went up about 5 times. You did a fantastic job, and we ended up shortly getting. In fact, for Easter, they said, "Go out and buy plastic eggs. You can't use real eggs." Well, we bought 200,000 eggs for the White House for the Easter egg hunt that we have at the White House, and there were eggs. We had the price down, and now the price is lower than it was before. We did a good job with eggs, but we did a good job with groceries. Our prices are down in this country. A big part of it's oil. The oil, you had a couple of places last week, you had $1.99 for oil, for gasoline. Nobody thought they'd see that. I want to get it lower if I can, but we've done a good job. You've done a very good job. Do you want to say a couple of words about that, you and Chris, about what's happening with energy?
Well, absolutely, but I would say on the pricing side, President Trump, the fact that you've endorsed and supported a policy of energy dominance, that sends a signal to the market that we're going to have more supply. You talked during the campaign about inflation being a country buster. You've broken the back of inflation in 6 months, among all the other things you've accomplished.
We have no inflation.
And we've got, and then heading into the 4th of July, these were the lowest gas prices at the pump in 4 years. And again, for Americans, this is like hundreds of billions of dollars that stay in their pockets because we lower the price of gas at the pump. But when we lower the price of energy, it lowers the price of food. It lowers the price of the clothes you wear.
It's the biggest thing.
It's the biggest thing.
It's like a big tax cut. When you get energy down, every 50 cents is like a massive tax cut, and we've gotten it down much below that. You know, we had great energy, great low prices, everything else. When the election turned over, I'm trying to be nice about it. It turned over, shockingly, but nevertheless, it happened. Energy started going up, and it went up really bad, and then he went back to the Trump policy. The problem was they didn't know how to do that, and he lost it. He lost that sucker. That big sucker was out of control, and his energy prices went way up, and that's what caused it. But it was also stupid spending. They spent money like, they used to use the term drunken sailors, but I won't use that term. Although it is very descriptive, I won't use that term. I refuse to use it. But they spent money at levels that nobody had ever seen before, and trillions and trillions of dollars wasted on the Green New Scam, greatest scam in the history of our country, other than maybe Russia, that might have been. But the Green New Scam was the single greatest scam in the history of our country, and continues to be, but it's weakened badly. It's hobbling along because people are they're finally getting it. But they spent trillions of dollars on the Green New Scam, getting nothing for it. Devised by a couple of young people that weren't even good college students, you know? Not even good students. Check out their marks. Yeah? No, not for CNN. Not for CNN. Go ahead.
In the last jobs report, Mr. President, in the last jobs report, the manufacturing jobs actually lost 7,000 jobs. When will the investments that you've been talking about have an effect on
manufacturing? They're building the plants now. About 7 have started. We're going to have hundreds started within a short period of time. Lee Zeldin, who may be the most important man in this room, I'm sorry, but he's the one that gets the permits, whereas he's the one that has to get the permits for the plants and the factories, and permits that used to take 5 years, he's getting in record-setting times. AI, we're leading China a lot in AI, and if we go with this, you know, I'm allowing the plants to build their own electric. I'm allowing them to become an electric utility, so they can produce their own electricity, because we need double the to be successful with AI, which is the biggest thing now. We need double the electricity that we have, which is hard to believe. We need even more than that. And they're building plants with their own electricity substations. They don't have to use the grid. And anything they build extra, they're putting into the grid. So we're supplying the grid with brand new electric sources. And you know, it's funny, when they came to see me, they never even asked for that. I told them about it. The reason they didn't, they thought that was an impossibility. You're not allowed to build your own electric. These are massive investments that are being made in building electricity for their plants. And they're gonna have, I think, Doug, a lot of electricity left over. And that electricity is gonna be passed into the grid and give us no more, you know, like you look at California, they have blackouts and brownouts every week. They're totally out of control. They have a really incompetent governor. Where's Chris? Is he here? Do you want to speak to the subject?
Yeah, I think a huge thing in the One Big Beautiful Bill, Mr. President, because of your leadership, is the ending of these subsidies, as you call them, the Green New Scam. That saves our country $500 billion over the next 10 years. But American taxpayers were paying twice. They're paying that money, $500 billion in the subsidies, and they were paying more expensive electricity price. If you subsidize something, you should at least lower the cost of it. But in this case, we were subsidizing something and paying more for it. So the One Big Beautiful Bill had 2 huge things: ending wasteful spending. Wind, solar, and batteries combined are 3% of U.S. total primary energy. 3% for $1 trillion, another $500 billion coming. It's just not a good investment, hurting our businesses, hurting our consumers. And the one big beautiful bill also unshackled oil, gas, and coal development in the United States, onshore and offshore. Secretary Burgum has been working tirelessly on how, by getting the government out of the way, private businesses will develop more resources in the United States, lowering costs for American consumers and making much better leverage for the United States to help our allies abroad and reduce the power of our adversaries abroad. So just a huge win on the energy front all around, and I thank you for your leadership.
We're setting records now on energy, and there'll be nothing compared to what they'll be in about a year from now, but we're setting records. And wind is a very expensive form of energy. It's very bad for your beautiful surroundings, the plains and the valleys, and the birds are dying all over the place. You know, the whole thing is a disaster. They're almost exclusively made in China. Not that I have anything against China, because I don't have a great relationship with President Xi, but I asked him, how many wind farms do you have? He makes them, but they don't have a lot of wind farms, I'll tell you, very, very few. And wind is tremendously expensive and is very ugly. And if you own a house that's inside of a windmill, your house is worth less than half. And you hear noises. And interestingly, in New England, you probably read, where for 50 years they had 2 wells washed up, 50 years. And last summer, they had 14 washed up. Now, I'm not saying that's the wind farm that was built, but maybe it is, right? Probably is. It's tremendously expensive, and it can only be done with subsidy. You know, I know a man that's in that business, and one of the biggest in the world actually runs a company that builds these stupid windmills. And he said, I hate the business because it's the only energy where you need subsidy. He said, energy shouldn't need subsidy. You should make money with energy. So wind. The other one is the solar, those big solar fields. They're taking our farmland. Our farmers are like mortified by it. They hate it. It's very, very inefficient and very ugly too. You know, probably better than a windmill, but you go around and you see all these things that are 3 miles long by 3 miles wide, and you say, what the hell is that? And it's a lot of plastic from China. It's plastic, black plastic from China. Now, we want to be smart. We're going with, look, China right now is building 58 coal-fired plants, 58 big ones. They have 62 on the books to build. We've reintroduced clean, beautiful coal, because you know you can do a lot with coal now. Clean, beautiful coal, and natural gas, and all of the other things that we have. But we don't want wind, and we don't want solar, because they're a blight on our country. They hurt our country very badly, and smart countries don't use it. Solar sounds good, I will say. And I like, on occasion, you'll see a roof which is made of solar brick, but it's a smaller use. We need the kind of thing that's going to fire up our plants, and it's not going to be wind, you know, that is very intermittent, as you probably know. But they've spent a fortune. They've spent trillions of dollars on this stuff. And I'll just give you one other story. A friend of mine is a very successful guy. He went back to see his mother in Minnesota, hadn't seen her in a long time, and he wasn't back for 10 years, which isn't a nice story. I mean, you don't see your mother for 10 years. She's got some difficulties, which I know the guy, he does have some difficulties. He's very successful, but probably not the nicest person. It was actually longer than 10 years, but he went back and he told me he wanted to go and look at the valley. There's a valley in Minnesota that he thought was so beautiful. And I hadn't seen it in a long time. He's driving along the road. He said, oh my, I'll use the word gosh, oh my gosh. He said, oh. He said, it looked like a junkyard. You had 159 windmills. They were all over the place. Some were old, some were newer, different companies, different shapes, different sizes, different colors. Many of them were terminated. Terminated meaning closed. You can't take them down because the environmentalists don't let you bury the blades because they're made out of a fiber they say is bad for the earth. So they want you to put them up, but they don't let you take them down. But many of them were turned off. He said it looked like a junkyard. Go to Palm Springs, California, and take a look at that pile of junk. And you go into a wealthy neighborhood. Before you get there, you have to ride through hundreds of windmills that are Most of them are turned off, they're rotting, they're rusting, they're 30 years old, 20 years old, and they have a very short life. You know, those windmills have a very short life, especially the ones that are in the nice salty Atlantic Ocean and Pacific Ocean, where the salt just gets under that steel and decimates it. No, it's a horrible, horrible thing for our country. And I speak out. It would be nice to say wind, because it sounds so good, doesn't it, Doug? Wind, wind. But it's not. It's these ugly machines, and they're all made. You got to see, some are a little taller, a little shorter. They're made by different companies. They have different stocks. They have different blades. They have different everything. It is so horrible. And if you look at smart countries, they don't use it. Smart countries don't use it. And we're now a smart country. We're not we're a brilliant country. We're not smart. We're brilliant now. We're going to be a brilliant country. We have to be, because we have to catch up for some really stupid people that did a bad job. Yes, Brian?
Yes, Mr. President, I've got a quick comment, some feedback as a native Texan, someone that I grew up bringing my kids to a camp very near the affected camp now. Thank you on behalf of Texas. I've gotten hundreds of messages that want to thank. It's if you're in the cabinet room, you can tell the president and his team, on behalf of Texans, thank you so much for the quick response and the loving, the hugs. I saw that you gave. Two quick questions.
I saw a Palestinian senator. His name is Schumer. He's a great Palestinian. No, he's a Palestinian. He's become a Palestinian. He's abandoned the Jews. But I saw him say, it's Trump's fault. Yeah, that's right. It's Trump's fault. He was actually, do you ever see John Lovitz, The Liar? Where he goes, yeah, I went to Harvard, that's right. This was Schumer. He goes, yeah, it's Trump's fault, that's right, it's Trump. I actually saw that stupid guy try and blame it on me, and I said, man, that's a tough one to take. But his career is limited, because I hear AOC is going to beat him, and she's no bargain either, by the way. Go ahead.
Well, I'm just saying that's an example of an America First team effort to get this country back. So that's what America First looks like for the viewers watching us at home. My two questions. Looks like we have a rogue judge, an Obama-backed rogue judge that is attempting to block the funding to Planned Parenthood, which the big, beautiful bill cuts off the funding to Planned Parenthood. Any plans to challenge that?
Go ahead.
Absolutely. Yes, we're on it. We're on it. And I texted, I believe, I talked to yesterday Secretary Lutnick and Secretary Besson. I reached out to you to let you know that we were on it in the big, beautiful bill.
Wonderful. And then my
I let her handle that question. You notice? I said, go ahead, handle that.
Toss it to her. Then my second question was Secretary Rollins. You did an amazing press conference today in front of the Department of Agriculture. You talked about the Farm Act and the need to get China out of our country, owning farmland. For the viewers at home that might have missed that, can you recap what that means to national security to make sure we can grow our own food?
Well, thank you, Brian, sir, if you don't mind. Yes, this morning, Secretary Hegseth.
All right, we're long. I'm rolling. I took a little heat, but she came back. I had the call right, so let's see how far she goes.
In case it came up, but obviously.
I already took profit on one one NQ. I got one NQ running.
National security issue, and for the media, you can see the yellow is where all of the farms have been purchased over the last number of years.
So let's run, baby, run.
The red is around all of the military bases where that farmland has been purchased. So this is a massive national security issue. The press conference this morning included 3 of our greatest governors as well, Sarah Sanders from Arkansas, Jim Pillen from Nebraska, and Bill Lee from Tennessee. The states have begun taking a leadership role to ban the purchasing of China farmland. Obviously, Congress needs to step up and catch up, and we're going to be working alongside of them as well. We had some of our members, great members of Congress there, but it is time, and I think that this morning was symbolic of many things. The first of this administration working every day to effectuate President Trump's leadership and unequivocal support of America First. But second, just how close we are as a cabinet. I don't know in any other administration that you'd have 4 cabinet members at the USDA on a Tuesday morning when it's about 110 degrees outside with the sun beating down on us talking about, sir, your vision. So I think it was a great day. It was just the start. There's an executive order coming and some other things coming behind that. But protecting America's farms isn't just about protecting our farmers.
I got taken
it's also
out.
about national security. So that's what we discussed this morning.
I do want to say that I think we have had a really good relationship with China lately.
I'll take my
And,
145.
We're getting along with them very well. They've been very fair on our trade deal, honestly. And I hope we're going to have a great relationship. It's a big, strong, powerful country. We're more powerful than they are. We have much better military equipment than they do. But we are getting along with them very well. I'm getting along with President Xi very well. We speak often. And with all of that being said, and I understand what you're saying, but I think we're getting along with China very well.
Mr. President, you are sending more weapons to Ukraine, as you said last night. Last week, the Pentagon paused some shipments of weapons to Ukraine. Did you approve of that pause?
We want to put defensive weapons because Putin is not, he's not treating human beings right. He's killing too many people. So we're sending some defensive weapons to Ukraine, and I've approved that.
So who ordered the pause last week?
I don't know. What did you tell me?
I think that's a question for
Go ahead.
Mr.
Yeah.
President, on immigration, the Secretary, the Agriculture Secretary, did say this morning that
All right.
undocumented workers would not be covered by any amnesty of who are working on farms. You had said maybe that the ISA folks won't go after those folks on farms. So which is it?
There's no amnesty. What we're doing is we're getting rid of criminals, but we are doing a work program. Do you want to explain that, please?
Yeah, this morning we talked about, of course, this was a top of mind question. This morning we talked about protecting the farmers and the farmland, but obviously this president's vision of no amnesty, mass deportation continues, but in a strategic way, and then ensuring that our farmers have the labor that they need. Secretary Chavez-DeRimmer has been a leader on this. Obviously, this comes out of the Labor Department, but moving toward automation, ensuring that our farmers have that workforce, and moving toward an American workforce. So all of the above.
We've got to give the farmers the people they need, but we're not talking amnesty. Laura, do you want to say something about that?
Thank you, Mr. President. On this,
Kind of liking the long here off to 200.
Never to displace the American worker. What the Department of Labor is doing is focusing on what the law entails now, being more modernized, more streamlining, to work through the H programs. We're going to have a concierge approach to that, where we have developed a new office to answer the need of our farmers and ranchers and producers, and not to displace the American worker, and follow within the law now, and that does not include an amnesty program at all. And we've seen that working, and we'll continue to have that roll out. On the other topics that we've somewhat talked about, the jobs numbers, Mr. President, 4 months in a row we've seen those jobs numbers increase. That's an exciting time for our manufacturers. That was asked earlier. We know it's going to take some time, but through that deregulation process that Lee and I are working on as well, the Department of Labor has rolled out 60.
I don't know which way. If you look at the ES, boy, it looks like we're about to go. We're about, front run the short. It looks like we're doing.
We just rolled out 63 new ones in order to double down on those manufacturing companies to let them know that we have signaled.
I just don't like that VWAP. You bounce so hard off that VWAP.
And getting the workforce that they need. It's an exciting time. That one big beautiful bill, that was the signal to my former colleagues in Congress to get this done. It's been an important time. I spent time on the ground visiting 7 states in 9 days prior to that bill being passed, because it was the most pro-worker piece of legislation that we will ever see really in this country right now. No tax on tips, no tax on overtime, no tax on Social Security. That matters to the American worker, because we don't want to take their money and give it back. We want them to keep more of their hard-earned dollars in their pockets currently, and that's what they're excited about. And as I move forward with this tariff talks, I heard a company, orthopedic company in Indiana, say to me, for the first time since you have taken office, Mr. President, their increase in their bottom line by 8% since these tariff talks have happened. Not one company has said the president is not doing a good job. These tariff talks are working. They're feeling it on the ground. The media has told a false story, because what's happening on the ground is positive, and that's what we're seeing in these jobs numbers. So I really, through the Department of Labor, to come in behind all the secretaries and build this workforce is going to be key to the American worker. So thank you for what everybody did this last week. The One Big Beautiful Bill is a doubling down of this, and we're going to see these workers start to grow. And that apprenticeship program is going to be working.
That's
we'll
right.
have that million apprentices across the country.
We, as you know, we're building plants all over the country now, which you weren't building any plants 4 years ago. You weren't building anything. But those plants, when they open up, it's going to be, you'll see numbers like you haven't seen ever. I don't think in history you'll never see numbers like what we're going to see in the very near future. Many of them are building the plants. Some are just starting right now. You know, it's a brand new administration. But, and they wouldn't be here except for two things. November 5th, the election, and the tariffs. And frankly, I guess the election was more important because of the tariffs. I mean, another person wouldn't have done this. But they're coming in because of the tariffs. They have to, they're not going to pay 25, 30, 40, 50%, 70 and 100%.
Stop filled.
And we'll be announcing something very soon on pharmaceuticals. We're going to give people about a year and a half to come in, and after that they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%. We'll give them a certain period of time to get their act together. But they were all here, now they all left. They went to other places because we allowed, people that sat in this room allowed it to happen. And I don't allow it to happen. The people in this room don't allow it to happen. So we're going to be announcing pharmaceuticals, chips, and various couple of other things, you know, big ones. We did steel, as you know, they're 50%. We did aluminum, 50%. Lumber just came out.
Wrenching, that's copper.
And we did cars. And now, today we're doing copper.
Copper and lumber. What would that tariff be on? The sectional tariff?
I believe the tariff on copper, we're going to make it 50%. 50%.
Any breakthroughs in
See, I'm glad he
Gaza?
didn't question it, because
Any breakthroughs?
I sort of just sort of thought, what would that be? Just a quick one. I didn't have much time, but he agreed with me. That's why he's Howard.
Any breakthroughs on Gaza with the Prime Minister, and there's reports that you're meeting with Netanyahu again tonight. Is that accurate?
I am. He's going to come over again tonight. We're talking about Gaza, mostly Gaza right now. It's he's been very unfairly treated. I think what they've done to him in Israel is very unfair, having to do with this trial. I think, you know, he's a wartime prime minister, had an unbelievable outcome, and I think he's been treated very unfairly. But he's coming over later. We're going to be talking about, I would say, almost exclusively Gaza. We got to get that solved. Gaza is a tragic. It's a tragedy. It's a tragedy. And he wants to get it solved, and I want to get it solved, and I think the other side wants to get it solved. Steve, could you talk on that, please?
We're in proximity talks now, and we had 4 issues, and now we're down to 1 after 2 days of proximity talks. So we are hopeful that by the end of this week, we will have an agreement that will bring us into a 60-day ceasefire. 10 live hostages will be released. 9 deceased will be released. We're meeting at the President's direction with all the hostage families to let them know. And we think that this will lead to a lasting peace in Gaza.
And you're doing a good job. It's a tough one. It's a tough one. A lot of hate, you know. It's called long-term hate. But we think we're going to have it solved pretty soon, hopefully with a real solution, a solution that's going to be holding up.
And can I follow up? This is, I think, the first cabinet meeting since Elon Musk has not been a special government employee, not here anymore. He's now saying he's going to create a third political party. Are you worried about the impact that that could have?
No, I think it'll help us. It'll probably help. Third parties have always been good for me. I don't know about Republicans, but for me.
Are you second guessing any of the cuts that DOJ made? Since you
No,
described him as
no.
off
Look,
the rails
look.
the other day?
We cut hundreds of billions of dollars with those. We could have done it differently. I would have done it differently a little bit, maybe, but it was something that we saved a lot of money. You can always second guess. I guess some of the people in this room maybe would have done it slightly differently, and some would have done it exactly the way it was done. But it was dramatic, and it was important, and we found a lot of things like billions of dollars given to people for environmental protection, where they had $100 in the account, like in Atlanta, Stacy. And then you had another one with 20 billion here, and 20 billion here, and 2 billion here, and 15 billion. And Lee, you might want to mention just a couple of those things. We really got because of DOJ.
At the Trump EPA, the One Big Beautiful Bill was filled with many big beautiful wins for the taxpayer. It delivered a sledgehammer to the Green New Scam. Billions of dollars rescinded. It's a big deal for the American taxpayer who sees money go through pass-throughs,
that are filled with self-dealing and conflicts of interest. They see unqualified recipients. They see reduced agency oversight, and they want accountability with their tax dollars, and they got it. In the example of the Stacey Abrams connected NGO, they received $100 in 2023. They got $2 billion in 2024. They had to complete training on how to develop a budget that was put into their grant agreement. They, out of nowhere, started paying a CEO $800,000, a COO $450,000, 22 people making over 150 grand. Out of nowhere, this is tax dollars. So money go through pastors, through other pastors, through other pastors, and we lose oversight over it. And you see that it's going to former Biden officials, it's going to former Obama officials, it's going to Democratic donors. And we're not here saying we want to take money from a left-wing NGO and give it to a right-wing NGO. We want to give it back to the taxpayer. This is about us being good stewards of American tax dollars without any apology or regret. That's why President Trump was elected last November, because there were a whole lot of people who maybe they hadn't voted Republican in a long time. Maybe they didn't even vote for President Trump the first time around in 2016, but they're regretting that vote from 2016 and they were making it right in 2024. So the One Big Beautiful Bill gave us the tools to rescind billions of dollars more. We're seeing hundreds of thousands of dollars that'll get wasted per electric vehicle as an example of this money that was going through it. They gave $50 million to a group called Climate Justice Alliance. They say that climate justice runs through a free Palestine. The Biden EPA gave $50 million to a group that says the climate justice runs through a free Palestine. We say that if you're going to spend $1 in the name of remediating an environmental issue, then spend $1 on remediating an environmental issue. We say that we can protect the environment and grow the economy. We want to help grow more baseload power in this country. So why is it that it took this long for this team to get assembled, to be able to fix the mess that we inherited? But gosh, we love showing up at our jobs every single day, first thing in the morning, because all day long we get things done for the American taxpayer. And Congress did its part last week by passing One Big Beautiful Bill to deliver this accountability and to cut off the Green New Scam. So maybe it's a bad day for Stacey Abrams. Maybe it's a bad day for all those well-connected Democrats getting paid off. But you know what? God bless America. Because at the end of the day, President Trump is here, J.D. Vance is here, and the greatest cabinet ever assembled to deliver that much-needed and highly demanded accountability.
That was a very good. And that's from the heart. That's from the heart.
On Ukraine, the Ukrainians have asked the International Court to go after Russia for using toxic chemicals in the fight. Germany and Germany and the Netherlands have had intelligence saying that. What does U.S. intelligence believe, and what do you believe about the use of chemical weapons? And would you agree that that's the case for the
Well, ask John maybe to discuss it if you'd like, John.
Well, Mr. President, obviously chemical weapons, if it's documented in its use, it's illegal. It's against all international laws of armed conflict and treaties. And obviously I can't share in this room with this audience the intelligence that I can share with you privately, but obviously you're not going to stand or allow for any violations of international law by anyone.
That's right. Thank you. Could I ask Sean to Department of Transportation, Sean Duffy, former great congressman, very popular, decided to go out and make a couple of bucks. He made a lot. Then he got bored with that, though. He likes serving people better, the people. And could I ask you to just discuss a very important subject to me, and that's the modernization of our equipment at airports so that planes aren't crashing into each other and bad things don't happen. It should have been done many years ago. We were going to do it, and then the election precluded that, unfortunately. But we're doing it now. Could you tell them where we are?
Yeah, if I can start with Newark. You guys all covered what happened in Newark. We had outages for a couple 30-second outages a couple months ago. We have, in 2 months, Mr. President, it's historic speed, laid new fiber lines for communication. and tested those in the next month. So those new lines for the Philly TRACON that controls the Newark airspace, they're up and running, lightning fast speed. June was the most on-time June ever in the history of Newark for air travel. So that's going incredibly well. By the way, we shouldn't have dealt with this because Joe Biden and Pete Buttigieg had moved the center from New York to Philadelphia. They didn't test the lines. They didn't do the work, which is what brought us all these problems. But in the big beautiful bill, we got $12.5 billion. This is a historic investment in air traffic control. And so what the money is going to allow us to do is move from copper to fiber all over the country. So new copper lines. We think we can do that in a year and a half to 2 years. We have radar that dates back to the 1950s, some of it from the 60s and 70s. We get brand new radar across the country as well. We have some infrastructure money to build TRACONs and centers, the en-route centers that control the traffic across the country. So this is a massive new start to rebuild air traffic control. And again, this is dilapidated. Americans think that their government takes care of them and makes the investments that are necessary to make the country work. And for 30, 40 years, the investments weren't made. And so under your leadership and direction, we are making those investments. And per your direction, right now we are interviewing what we could call a general contractor or an integrator. One company to manage, it's a massive project. The FAA is not qualified to manage this kind of a project. So we are now going through the process of finding who that one company will be to manage the whole project. We'll interview those companies together and make that selection. So we'll write one big beautiful check to one beautiful company that'll be responsible for this this whole build. But if I could just make one last point, this is not enough money. We're going to need more. But this is a massive new start. The biggest investment. We'll need some more money on top of it, but a great start from the big beautiful.
Just starter. It was very important to us, and just to cover that, there have been accidents, and my pilots, I would often hear them say, "Oh, good," and they would use a different system, a different country to land in New York. They'd use the radar and other things from a different country. I said, "What's that?" He said, "Oh, our system is so bad," and I knew that we were all set to start, and Boot Edge came in, and what they did was so crazy because they hooked it copper into fiber, into steel, they had all different systems. They had hundreds and hundreds of contractors, different contractors for different airports. They spent billions of dollars, and they made the system worse because you can't hook copper into fiber. It doesn't work that way. You just can't do it. It's not doable, but they tried to do it. Didn't work out too well. And in the end, it was just a complete disaster. We want to have one great company. Now, Raytheon's going to bid, IBM's going to bid. We have 5 or 6 bidders that really are good and do this stuff. And we want one, because I know about overruns. I look at the railroad out in California, headed up by one of the worst governors in our country.
Order submitted.
Who I used to get along with, actually, but he's just, when you lose 25,000 houses and you would have had your cities burned down. If we didn't step in, Los Angeles would have been burned to the ground. But you look at that, and I said, I really know how to build, and you got to have one guy, one contractor, one great one, whether it's IBM or Raytheon is good, but you have 4 or 5 that are really, really great, and they're all bidding against each other. But you don't want to have one doing the wire and one doing the digging and one doing the demolition and then they're all saying, they all blame each other because they're saying they were late and therefore you have to pay me millions of dollars more money. I know the system so well, and we're going to have a great company do the whole thing. We're going to get a fantastic price. Maybe we'll get them, they're very big and very strong, and maybe we'll get them to make a contribution toward getting it done at the right price. But we're going to have a great system. When we finish, we will have the best system on earth, done by one of the 2 or 3 best companies. There are only a few companies can do this. This is not. But if you would have seen what this other group did, they were going crazy. They had, I heard 3,000 contractors. And then when it all came together, guess what? It didn't work. It's a disaster. So we're going to have in a pretty short period of time, so it'll take us about 2 years to build it. And we'll have a contract given out probably over the next couple of months. We have some great bidders, some great companies that want to do the job. You're going to have great air traffic control.
Yes, can I just make one last point on this? So the last administration signed a contract with an American company to fix the copper to fiber, and that contract was a 15-year contract. The system is failing today, but that's how idiotic and incompetent the last administration was. And under your leadership, we're saying, listen, we don't have time. We don't have 15 years. We don't have 5 years. We have to do it right now. And so the president always talks about on time and on budget. We have embraced that. We are going to be on time and on budget. And by the way, you mentioned a train out in California. Stay tuned for, probably give us 5 days and you'll have an answer on what's going to happen with the $4 billion that we potentially have invested on a train that's going to go nowhere. It's going to be $120 billion that'll never connect San Francisco to LA. Again, the last administration wasted so much money on projects that never work. If you're going to have high-speed rail, you're going to invest billions, we should actually have high-speed rail in America, not boondoggles that fund political friends and allies and family
They are
members.
from San Francisco, inside of San Francisco to inside of Los Angeles. It should have never been built because airplanes do it better. And you could drive it. You could drive it. No problem with driving it. The roads aren't even crowded. So they were going to do this, somebody's idea. Somebody got paid off a lot of money and they started it. It was going to cost a very small amount of money, and it ended up costing literally hundreds of times what the original. And now what they did is they said, well, going into the city is too big a deal, so we'll leave it 25 miles short of the city. So now they're leaving it. They're not going to finish it, really. It's not the same project. So now they're leaving it outside of San Francisco and outside, short of each. They just want to get it done, and it's, I've never seen cost overruns. You know, if you have a cost overrun of 10%, you should be ashamed of yourself. 20%, you should not do any more jobs. This is a cost overrun of 2,000%, something like that. It's unlimited, and it's not finished. And maybe it will never get finished. And I told Sean to look at it from every standpoint, but we don't want to, you know, we have federal money going into that, and it's like throwing it out the window. So whatever you can do to stop it.
$15 billion and not one track has been laid. $15 billion and we're 16 years into the project, not one track.
Mr. President,
on New York, you're the most prominent Republican in the country from the city. What do you want to...
Anywhere else?
Well,
I don't want to be a wise guy. Perhaps I can. Maybe Marco.
But how do you want Republican voters in the city to vote in the upcoming mayoral election? Should they vote for Eric Adams? Should they vote for Sliwa? Should they pick someone else?
Look, number one, you have a communist running, and you shouldn't vote for him. He's a disaster. He's leading. He's got the Democrat nomination because that shows you where the Democrats have gone. He actually wants to take over the grocery stores of John Catsimatidis, who's a great guy, a rich guy, grocer, does a good job, wants to take over. He actually called me the other day. He's concerned his stores are going to be taken from him, and they won't be run like John runs them. Believe me, he runs a good operation. But he actually said he wants to run his own grocery stores. No, this is a man who's not very capable, in my opinion, other than he's got a good line of bullshit, and he's convinced them to go with him. Now, as you know, Cuomo, who does have capability, is running, but he got knocked out, and now they're running as, you have Eric Adams, the current mayor, you have Cuomo, and you have Curtis Sliwa. And Curtis runs every 4 years. He seems to be a fixture on the running scale. But you know, it's, I'm not getting involved. But I can tell you this, I used to say we will not ever be a socialist country, right? Well, I'll say it again, we're not going to have, if a communist gets elected to run New York, it can never be the same, but we have tremendous power at the White House to run places when we have to. We could run D.C. I mean, we're looking at D.C. We don't want crime in D.C. We want the city to run well. Susie Wiles is working very closely with the mayor, and they're doing all right. I mean, in the sense that we would run it so good, it would be run so proper, we'd get the best person to run it. The crime would be down to a minimal, would be much less. We're thinking about doing it, to be honest with you. We want a capital that's run flawlessly, and it wouldn't be hard for us to do it. And we've had a good relationship with the mayor, and we're testing it to see if it works. But New York City will run properly. We're going to bring New York back. I love New York. I loved New York for a long time. Then we had a bunch of crooked people in there. You have an attorney general who's a total stone cold crook, New York State, Letitia James, a total crook. All they do is want to go after political opponents. They do what's ever expeditious for them. She's the one that took out Cuomo because she wanted to run for governor, and then she ended up getting 1% of the vote. She polled at 1%. She dropped out, went back to attorney general. You have a lot of crooked things going on in New York. We're going to straighten out New York. Maybe we're going to have to straighten it out from Washington. But when I see a communist who has actually gotten a Democrat, pretty much gotten a Democrat nomination, they also went to that new form of voting, which is a beauty. You go in there in third place, you come out in first. That's that form of voting that they have gone to. You know what I'm talking about. It's not too good. We're going to do something for New York. I can't tell you what yet, but we're going to make New York great again also. We're going to make it great again with the country. What we've done in this country in the last 6 months, nobody has ever seen it. And I told the story, the King of Saudi Arabia, I was over there. They gave us $5.1 trillion between Saudi Arabia and UAE, Qatar. 3 stops, $5.1 trillion coming into our country as an investment, biggest investment ever made. And it's all going to good stuff. I mean, all real big, good stuff. Energy projects, big, big things. But they all 3 told me essentially the same thing. We thought your country was dead, and now you've got the hottest country in the world. We're right now riding the hottest country. We all, and you can all be proud of it. We're in the hottest country. This is the hottest country in the world. There's nobody close. Made hotter by some great pilots and great machines that nobody else has. Those great, big, beautiful machines, they rode those machines right into the toughest territory, and nobody knew what the hell happened. And then they hit their targets perfectly, and it was complete and total obliteration. And that's why that war ended, Steve. They told me that's why the war ended. The war ended when they saw that, it was over. And we're very proud of it. But we have the hottest country in the world right now, from a country that was close to dead. And if I didn't win, if you would have had the other person win, we all know who she is, whether it was she or Biden, they're the same. He may have been more competent than her, and that's hard to believe, right? But if you had that ideology in, I don't believe you would have had a country anymore. I think you would have had a country that was broken up. But we had a dead country, now we have the hottest country in the world, and everybody knows it, and everybody said it. Mr. Vice President, do you have anything to say?
Well, thank you, Mr. President. I just want to say that I'm very proud of the whole team. I think everybody has worked together. You see Pete and Marco and Steve working on some of the diplomacy, Christy and Pam working on the border. We just have a really, really solid team, and we've done a lot of good work. And in particular, I want to congratulate the White House staff led by the President on getting the One Big Beautiful Bill passed. I was personally skeptical, sir. I never told you this, but I was skeptical we'd be able to get that thing done by July 4th. We did it because we worked together and we worked very well. So it's an honor to be a part of it, but I'm really proud of you guys for doing a great job.
The beautiful thing about it, it had something for everyone.
That's right.
Most people said it had to be broken into 7 bills. It's so big. The problem was that some of those 7 have nothing for anyone, but they had to be done for the country. You know, sometimes you have to do things for the country that aren't necessarily popular. We had a couple of them, and that wouldn't have worked. So the One Big Beautiful Bill, many people said it could never be approved. Too big, too everything. There's too much. But it had something very big and very important for everyone, and it's great for the country. And remember, the Democrats have come up with a false narrative, you know, just whatever. It's just a line that they send to everybody and that they print. I think in the case of this, it's death, death. Everyone's going to die. I heard that. Everyone's going to do just the opposite. Everyone's going to live. What we're doing is saving our country and making it much bigger, better, and stronger than it ever was. I'd like to ask, Marco's been doing such a great job. Do you have anything to say?
Well, it's just going through a list here, Mr. President, and I think the Vice President's pointed out to the great team you have, but and all these achievements that have happened domestically. But you think about it, under your leadership, we prevented and ended a war between India and Pakistan. NATO's now at 5% for the first time ever, the highest numbers ever. A peace deal between the Democratic Republic of Congo and Rwanda. A 12-day war that ended with an American operation that we're the only country in the world that could have done. Hopefully, pretty soon, a peace deal between Azerbaijan and Armenia. The entire Middle East and the infrastructure of it has the potential now to change because of Syria and Lebanon, and it hasn't even been 6 months.
Sure.
It hasn't even been 6 months, so it's a great testament to your leadership in this.
Well, thank you very much, and you've done a fantastic job. Could I just ask Linda, she's involved in so much, she's so talented and so good, and she's working on a couple of little things like Harvard, who was given $5.5 billion over a short period of time. We caught him on that one, that's crazy, but you're working on so much, you want to bring education back to the States. How are you doing?
Well, absolutely, and thank you for the opportunity. I think on the big, beautiful bill, what we saw, was school choice, that's finally on a national basis at the state level, but there are opportunities now for scholarships, more and more of them for kids who are in failing schools. It's going to be a big turnaround. I think one of the biggest accomplishments we had over the past week was the University of Pennsylvania with the Title IX ruling that Leah Thomas was stripped of her title, Riley Gaines and Paula Scanlon and other women who have stood so strong against men and women's sports. And when you put out the the executive order, I mean, that just solidified it and gave them the opportunity. So those are a couple of really, really big wins, and thank you for that opportunity.
And how are you doing with Columbia and Harvard?
We're negotiating hard. I think we're getting close to having that happen. It's not wrapped up as fast as I wanted to, but we're getting there.
Okay, good. And you've done a fantastic job. Thank you very much.
It's been a good team.
Yep,
The team
you have a great team.
around this table, a lot of people have helped with that.
That's right. Thank you very much. Maybe just in closing, we spent a lot of time, effort, very little money on this room. This is called the Cabinet Room. It's been here for a long time, and it had some pictures that were not many of them and not very good ones. And I actually spent time in the vaults. The vaults are where we have a lot of great pictures and artwork. And I picked it all myself. I'm very proud of it. That's Andrew Jackson, great Andrew Jackson. That's a gentleman named, and we call him President Polk. He was sort of a real estate guy. He was, people don't realize he was he was a one-termer, but he was a very good president. But, and I'm not sure I should be doing this, he actually gave us the state of California. He was the one. He was the one. So I'm not sure, maybe he won't be there for long. But if you notice, the frame is the exact same size almost as the other one is Andrew Jackson. So that was a part of the reason too, I have to be honest. But Polk was actually a very good president who's got the same frame that I needed, okay? And up here you have the original George Washington right behind the light. And then you have Dwight Eisenhower, who was a very underrated president. He built the interstate system, and he was the toughest president, I guess, until we came along. But I don't mind giving up that crown, because I don't want to be too tough on it, but we want to be humane. But he was the toughest president on immigration. He was very strong at the borders, very, very strong. And sometimes you can be too strong. He was strong on the borders, and during a certain period of time, they were so strong that almost every farmer in California went bankrupt. And we have to remember that. We have to work together, and we have to remember that. But he was a very good president, and a very good general, and a very good president, and I thought he deserved a position somewhere on this floor. And then you have, this is very exciting to me, he was not a Republican, to put it mildly, but he was, he was a four-termer. He was Franklin Delano Roosevelt. And if you notice, there were a lot of ramps outside. We have ramp, people say it's an unusual place for a ramp. It was because of him. He was wheelchair bound, but he was an amazing man. It's an amazing portrait, and we used to have him in the room, a different portrait, and it was a terrible portrait. It was almost like it was done by a child. And I used to say, I can't believe that he would have approved of that portrait of himself. And I was in the vaults and looking at things. I said, what's that? And we have some great curators here. We have 6 curators at the White House. They have 2 for paintings, they have them for furniture, they have them for different things. I guess cost is no object. Okay, cost is, maybe I'd have 1, but that's all right. But we have 6, and they're very talented, though. And he said, that's a picture of FDR. I said, really? Let me see it. They took off the wrappings, very well preserved. And I said, that's the picture they've been looking for years. That was the picture of Franklin Delano Roosevelt. And I said, oh, wow. And likewise, that fit, see frame-wise, it just doesn't work. It doesn't work if you have, I want to be nice, but it doesn't work if you have a big frame, a little frame, and but it's like perfection. I'm a perfectionist. The mirror was down in the vaults also. I said, where is this from? And it's a very old, very storied mirror, beautiful. We put that up. And then over there is Honest Abe Lincoln. And that picture was in his bedroom. And we thought that this would be a very important place because this is where wars are ended. I'm not going to say wars are declared. I'm going to say wars are ended, okay? We'll be positive. And that's the picture of Abe Lincoln from his bedroom, sat in the bedroom for many, many years. That was his favorite picture of himself. And the Lincoln bedroom's very famous. You remember when Bill Clinton had it and he rented it out to people, okay? We don't do that. But it's an incredible room, and we took that picture from his bedroom. That's Abe Lincoln. And then over here you have John Adams, and it's, they were the first occupants of the White House, 1800. And John Quincy Adams, Mrs. Adams, they were the first occupants. So we have them looking at each other, and in between their stare is Abraham Lincoln trying to make peace. And that picture was in a room that I have that was not important like the cabinet. I gave it up. I said, I have to give it up because that's one of the greatest pictures of the White House. The White House is tremendous art. And the Oval Office, when we're there, we'll go over that. That's really been something. Then we got the drapes, so we got the whole thing. We got new drapes. We got new, wasn't a big expense, very, very small. And we took some of the Chinaware and silverware and trophyware, they call it, from the vaults, and we had it cleaned up, hadn't been shined up in 100 years. Some of this has sat in the vaults for over 100 years, amazing. Over 100 years. Many of the pictures that were put up in the Oval Office as an example, those two as an example. So he was president, they moved in 1800, and he won the election, I believe, in November of 1800, John Quincy Adams. And we thought that would be, he was considered to be a good president, and he was the first occupant of the White House, so it sort of made sense. And I love the frame of those pictures. Look at those frames, you know? I'm a frame person. Sometimes I like frames more than I like the pictures. And we have the flags of the Marines, and Space Force now has its own flag. I'm very proud of Space Force, but the Army, Navy, Air Force, Marines, Space Force, the whole thing. And Coast Guard is right there. You never forget the Coast Guard. They do a great job. So we have the flags throughout the office. And it's really become quite a beautiful place. I don't want to tell this, Marco pointed it out. I was going to leave the clock. So as president, you have the power. If I go into the State Department or Department of Commerce or Treasury, if I see anything that I like, I'm allowed to take it. Do you believe this? So I'm in Marco's, I see this gorgeous clock, grandfather clock, and there it is. I said, Marco. He didn't know about it. I had to read him the rule and regulation. I said, Marco, I love this clock. Look at it. It's beautiful. He said, what clock? I said, the clock that's in the other room is incredible, and nobody gets to see it there. Marco, I tried to talk him into it first, and it sort of worked, and then I had to use a little more. I said, I'd love to take that clock out and put it in the cabinet room. He said, no, are you serious? I said, Marco, I have the right to do it, Marco. And he said, all right, what the hell? So that's his contribution to the cabinet room. But it's, by the way, it's an incredible clock. And, you know, it's an important room. So you may see it again. Maybe we'll move it back sometime. Anyway, so that's pretty much it. But it really is great. here we put on, you know, these lamps have been very important, actually, whether people love them or not. But they're, if you see pictures like Pearl Harbor and Tora Tora Tora, you see movies about the White House and where wars are being discussed. Oftentimes they'll show those lamps or something like those lamps, something that looks like them, probably not the reals, because I don't think they were allowed to. This is a very important room. This is a sacred room. And I don't think they made movies from here. You never know what they do. But they were missing medallions. See the medallions on top? They had a chain going into the ceiling. And I said, you can't do that. You have to have a medallion. They said, what's a medallion? I said, I'll show you. And we got some beautiful medallions. And you see them. They were put up there. It makes the lamps look better. So we did these changes. And, you know, when you think of it, the cost was almost nothing. We also painted the room a nice color, beige color, and it's been really something. The only question is, will I gold leaf the corners? You could maybe tell me my cabinet could take a vote. You see the top line moldings, and the only question is, do you gold leaf it? Because you can't paint it. If you paint it, it won't look good because they've never found a paint that looks like gold. You see that in the Oval Office. They've tried for years and years. Somebody could become very wealthy, but they've never found a paint that looks like gold. So painting it is easy, but it won't look right. And the question is whether or not we should gold leaf it. Linda, do you have an opinion?
I gold leaf it.
You like it the way?
No, I gold leaf it.
You'd gold leaf it?
Yeah.
Who would gold leaf it? Could I raise you? How about, would you gold leaf it?
Scott McKinley, one of their favorite presidents.
Well, McKinley was a great president who never got credit. In fact, they changed the name of Mount McKinley, and I changed it back because he should have been. The people of Ohio were he was the governor of Ohio. The people of Ohio were very happy when I did that. I heard they were very insulted. They took the name of Mount McKinley off. That was done by Obama a little while ago, and I had to change it back. I changed it back. He actually was a great president. He was a president. He was the tariff, the most, I guess, since me. I think I'm going to outdo him, but he was a tariff president. He believed that other countries should pay for the privilege of coming into our country and taking our jobs and taking our treasure. That's the way he explained it. They took our jobs and they took our treasure, and for that they should pay. And he made them pay, and he built a tremendous fortune. In fact, in 1887, they had the Great Tariff Committee was set up in 1887 because our country had so much money, we didn't know what to do with it. And they set up a committee of, as they called them, elites, a term that we have to change because I think a lot of the people that are elites aren't elite. I think the people that aren't elite are elite, so we're gonna have to maybe switch that around somehow. But they had a committee that was set up to spend the money because it was such a large amount of money at that time. It was, nobody had seen anything like it. And it all came in from tariffs. And people didn't pay tax. There was no income tax system. I told you that came back in 1913. That came back and lived well for a while. And then you had the Great Depression. And then later they tried to bring back tariffs, but the whole thing was, this was after the Depression. That was one of the great misconceptions. Is people like to say, oh, but it was during the no. The country had a Great Depression, and then after the Depression, long after it started, they brought back tariffs to see if they could save it, but it took them really 25 years. When you say about 25 years to get out of the Great Depression, a lot of people don't understand that. But I thought it would be interesting for you to get a little view of this room. This is a very important room, very powerful room, great room. And we've done similar, but even beyond this, in the Oval Office, we brought back pictures of some of the great presidents. Many of them were in the vaults for over 100 years. Originals all, beautiful, beautiful things. And rather than sitting in a vault downstairs for 128 years, I thought we should display that, and we did that, I think, in a really good way. We've gotten very high marks. But it's interesting. People walk into that room and they look around the room. They don't even want to talk to me. They could look at it for hours. It's funny when people come into the Oval Office. It's such an incredible. It's a sacred place. When people come into the Oval, from the biggest people in the world, presidents, prime ministers, kings, queens, one case at least, Queens, and the biggest business people in the world, they walk into that office and they always say, there's no place like this in the whole world in terms of the power. I mean, it's beautiful and all, but there are other beautiful offices. You have businessmen that have offices that are, you know, full floors of office buildings, floor-to-ceiling glass, and they walk in there and they say, there's no place like this anywhere in the world. There's no place. And, you know, it's what it represents maybe more than the physicality of the room itself. So it's an honor to have you all, media. It's an honor to have you. I just want to say we have a fantastic cabinet. Every one of them is a star in my book. And if they're not, I'll let you know about it. I don't I'll throw them to the wolves. I'll throw them to the wolves in 2 seconds, because our country comes first, right? But I just want to thank you all for being here. It's been a lot of fun. Thank you very much, everybody. Thank you.
Thank you, press, everybody. Thank you, press. Thank you, press. Thank you, press. Thank you, press.
I'll tell you some other time. Thank you. Yeah, I will. Are we talking about next week or in a year? I'm gonna go. I'll be going to the game. Yeah. I'm gonna deliver it. They have it in my office. You're right.
You're giving it up?
She's special. Oh, she's special.
is a president who is now clearly gone with the hawks, both in Iran and now it seems to be as you look at Ukraine and Russia. And this is at a time when, of course, the isolationists and the far right wing of the MAGA are unhappy about another thing they talked about, which was Jeffrey Epstein. So not a good day or a good week for the more far right on the MAGA wing here.
He got really upset with the Jeff Epstein question, in fact, and asked the reporter why they would even ask such a thing. Rick, we learned that Benjamin Netanyahu is coming back to the White House tonight. This was another tidbit that the president dropped. We later learned from Netanyahu's government that they would meet at 6 p.m. That meeting has now been moved up to 4:30 p.m. What do you make of the return trip to the White House? Will it result in a ceasefire announcement?
Well, a lot is on the risk for the ceasefire. One, I think the president is sincere in wanting to get peace in the region. And I think that there's a great reward for that because if he can establish a ceasefire and an end to the war with Gaza between Israel and the Palestinians, then it unlocks potentially a Abraham Accord, not just with Saudi Arabia that the president has really been anxious to do, but also with other potential countries like Syria in the region now that diplomatic relations have been renewed with them. So he's got a real gambit going in the Middle East, and he wants to ride the momentum that he's got. And I don't think Bibi is getting out of town until he gets a deal on these ceasefires with Gaza.
Well, and for President Trump, Jeannie, it's also the pursuit of the Nobel Peace Prize, right? Is that ultimately what he wants with everything we just discussed? Ukraine as one example, but the Middle East is another.
That's right. And we've also seen he would like to get it for the peace between India and Pakistan, however long that lasts. And that was one of the notable things we heard from Benjamin Netanyahu and the president last night. But to me, the most notable thing we heard last night was the question about the day after, when Donald Trump deferred to Benjamin Netanyahu, and then Benjamin Netanyahu talked about sort of a removal or a choice that Palestinians could make about their future, but left off that choice was a Palestinian state. And so, missing from Benjamin Netanyahu's idea of what the future and choices could hold is this idea of a two-state solution, which is probably the only solution we should be thinking about long-term, of course, as it pertains to the Middle East. And so that was, I think, the biggest news last night, and why Donald Trump is deferring to Benjamin Netanyahu on that. I think that's a major question that the U.S. and the administration has to answer.
All right, Jeannie Sheehan Zaino and Rick Davis, Bloomberg Politics contributors in our political panel today. Thank you for joining us here on Balance of Power on Bloomberg TV and radio. And we're joined by a guest we haven't seen in a while. Mick Mulvaney is back here with us in our Washington, D.C. studio now. He's, of course, former acting White House chief of staff, former OMB director, former Republican congressman from South Carolina, co-founder of the House Freedom Caucus. Welcome back, sir. Good to see you. As always, with this conversation we just had, knowing that President Trump is fresh off of a massive legislative victory, the one big beautiful bill having passed, hard fought, yes, but ultimately passed by the deadline he wanted. Is the hardest work still ahead of him with everything we've just discussed, trying to get what he wants on trade in the world in terms of geopolitics?
The hardest legislative work is done. I don't see anything else passing of any real significance. Now, they do have another reconciliation bullet. I know that's real deep in the weeds, but keep in mind there's actually 2 chances at reconciliation this year. So they've got another sort of bullet in the gun if they decide to try and do something else with reconciliation. I've not heard much about that. But I think the legislative work is done. Everybody knew once the big, beautiful bill passed, that was pretty much the end of it. So now it shifts back to what Trump really likes doing anyway, which is the executive stuff. Look, is going to be dealing with Vladimir Putin hard? Yes. Is trying to negotiate peace in the Middle East hard? Yes, it is. Is it harder than the one big, beautiful bill? Probably. So listen, it's not going to get easier, but it's not an easy job to begin with. But I think the legislative work is probably finished. Certainly the appetite, I think, in the House and the Senate to do with anything else that massive is very, very low. They want to start running for re-election. But there's going to be a lot of stuff to do, to your point.
I want to ask you about the influence or lack thereof of the Freedom Caucus, which you helped to found.
Yeah.
You watched all of this unfold last week, from Andy Harris to Chip Roy. Hell no was the answer. We're not going to get jammed by the Senate. And we know there were a lot of side
if I had
deals.
$1 for every time I had said that.
Well, listen, so bring us home on this, because there are a lot of questions about whether the Freedom Caucus that you helped to found is still relevant.
Well, it's certainly relevant. Any group that can sort of stick together is relevant, especially when you've got a margin of just a handful of votes in the House. Any group of 4 or 5 members who can really stick together can sort of change an outcome. And I think the Freedom Caucus, individual members of the caucus did play important roles. I think Chip Roy played an important role in trying to, make the bill better when it was in the House. Yeah. And certainly the fear of the Freedom Caucus sort of of walking on the bill when it came out of the Senate did influence how far to the center maybe the Senate would go. But if the criticism is that the Freedom Caucus is different with Donald Trump in the White House, the answer is yes. It is. We started as a fiscally conservative group. If Barack Obama had offered that exact same bill, I don't think that the Freedom Caucus would have supported it. Now they are the sort of the foot soldiers for the Trump presidency. They have been since the first term. So they are less about spending now and more about MAGA. One of the pieces I read that I thought was very insightful was that this is absolutely Trump's party now. Okay, it is. There are still going to be folks talking about spending less money and all that and efficiencies and so, but this is Trump's party. Whatever Trump says Republicans are for, now the party is for. We are now for massive tariffs on copper, period. Wow. End of story. Until next week when we're not, right? But right now we are. And I think the Freedom Caucus is along for the ride, just like everybody else.
But on the subject of spending cuts, which obviously they did not get as many as they wanted in the reconciliation bill, do you see real opportunity for them to get it elsewhere in the form of rescissions? Because we aren't necessarily seeing much advancement on the rescission package that already passed the House and the Senate. Major question as to whether you can get adequate support.
I will buy Joe dinner if the Senate passes that rescission package.
Kayleigh?
So, well, like if I say I'm going to buy a nice young lady dinner, people are going to accuse me of being inappropriate. So, I'm going to no, I'll buy Joe dinner but whatever. Like, no, the rescission package is not going to pass.
Just this one, or will any?
No, I don't think any of them will.
Because Democrats are needed to write a budget.
Here's why. Okay, spending is bipartisan. It has to be, because a spending bill takes 60 votes in the Senate. A rescission vote only takes 50, okay? It's a special rule. It's another one of those, it's like reconciliation in that sense. So if you're a Democrat and you cut a deal with the Senate, your Republican members just a year ago to get a spending package passed, and then the Republicans go off by themselves without you and sort of thumb their nose at you and say, well, we're gonna undo this spending that we just agreed to. What do you think that does for next year's spending package? It kills it. Then you end up with CRs and all this kind of stuff. We talked about, is there any other legislation if the Senate can sit on their hands for the next 10 days and say, oh, well, we just ran out of time on rescissions? I just don't see them doing it because of the dynamics within that building.
Do you believe Donald Trump when he says August 1st, even if this was always the date, doesn't move again? There's no extensions?
I think somebody said yesterday, it might have been on this network, that the market just has given up now. They throw their hands up and they don't even listen to what Trump says anymore because they don't rely on it. If you relied on July 9th, then you're off. You can't invest based on that.
That's right.
You can't invest you can't trade at least based on the August 1st. You throw your hands up and say, look, it's gonna come as it does. Do I think the August date can change? Sure, it should. Did I predict that the July 9th date would change? Yes. Why? Because this is the reason no one else got. He doesn't like strange numbers. He doesn't like July 9th. He likes July 1st. He likes July 4th. He likes August 1st. They're easier to sell. It's a black and white. It's sort of thing. July 9th is what is that, like a Wednesday?
It's tomorrow.
Yeah,
tomorrow.
Wednesday, yeah.
That's not good for news. That's not good for marketing. So look,
that's why he brought Japan from 24 to 25%, right?
Well,
make
listen,
it round.
we talked about you joked. Did he do that, by the way? I haven't heard that.
Yes.
So I go back to 2017 when we're trying to negotiate the corporate taxes on the first tax cut, and I think Cohn came back. We wanted 20%, and Gary Cohn and Stephen Mnuchin, who were leading the negotiations, came back and said, well, Mr. President, we think we get 21. He's like, 21? I can't sell 21. 20 or 25? 20 or 25, guys.
Wow.
It's not 21. So yeah, that's how he operates. It works for him. But the point is, you can't trade off of it. Could August 1st change? Yes. It's not going to be August 8th. It could be September 1st. But yeah, there's going to be a certain uncertainty in what comes out of the White House. It is the cultivated, he loves the term strategic ambiguity. He doesn't want to get pinned down, and he's not going to. If deals go forward, great. If they don't, we might look at changing the date. We might not. Who knows?
Right. Another 2-3 months before we see you?
I hope not.
Okay, well, so no.
Are you guys here every day?
Yeah, we try to be.
Oh, yes.
Mick
Twice a
Mulvaney,
day,
if you don't recognize the name or the voice, you know the business card. We don't have to do that right now, do we? Thank you, Mick. It's great to have you. Alongside Kayleigh Lines, I'm Joe Matthew. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, live on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is a Bloomberg Business Week on this Tuesday, July 8th, 2025. I'm Tim Stenovec. Carol Masser is out today. Bloomberg News cross-asset reporter Emily Grafeo is here in her place. Emily, the market's doing, well, kind of a whole lot of nothing.
Yeah, the S&P 500 is basically flat. Bonds are moving a little bit more, at least on the longer end of the curve. But overall, it seems like even amidst all the tariff headlines, the stock market is relatively calm, Tim.
Well, those tariff headlines are our focus for Bloomberg Business Week Daily today. We are going all in on tariffs and trade policy, and we got a great lineup of folks joining us. We're going to be joined by our Bloomberg Economics senior geoeconomics analyst for Asia Pacific on the latest when it comes to trade policy. Also, for what investors are doing and should do, Libby Cantrill from PIMCO is going to be joining us.
We're also talking oil and a muddled picture for demand. We'll be joined by Ellen Wald of Transversal and the Atlantic Council. And Bloomberg Opinion's Mark Gongloff asks, are we prepared for the next deadly floods? The answer, unfortunately, is no. He'll explain.
All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of that trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. We're looking at a mixed market right now with the Dow lower, the S&P, NASDAQ both higher. I got to begin with copper, though. Big story. President Trump, you heard it on Bloomberg television and radio. He says the U.S. will impose a tariff of 50% on copper, lifting futures on the COMEX by as much as 17% to a record right now. Looking at copper, and copper is trading higher by 9%. Freeport-McMoRan and Southern Copper among the names moving higher there. On the equity side of things, FCX, Freeport-McMoRan up now by 4.3%. Southern Copper up by 1%. The Chile peso, the Peru sol at session highs on those copper tariff comments. Also ECH, that is the iShares Chile ETF, up now by 1.4%. Stocks, however, fluctuating as hopes President Trump is still open to trade talks offset his remarks that the U.S. will not offer extensions to the August deadline for reciprocal tariffs to kick in. S&P now higher by 2, up just under 0.1%. The Dow slumping 125, down 0.3%. NASDAQ up 39, up by about 0.2%. 10-year 4.42%. The 2-year 3.90%. Spot gold down $29 the ounce, down 0.9%. West Texas Intermediate crude oil up 0.8%. Bitcoin now higher by 1%, 109,017 on Bitcoin. Again, WTI, a topic we'll be exploring on Bloomberg Business Week, up 0.8%, and cannot ignore the move in copper. Bears repeating copper right now, surging by 9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Sort of to build on some of those headlines that we just heard from Charlie, that tariff situation evolving quickly. We did hear from Charlie just now on copper, reaching a record after the president said that he planned to implement a 50% rate on copper as part of a set of looming sectoral tariffs. Also threatening a 200% tariff on pharmaceuticals. Now, earlier, and this is what got markets moving a little bit, earlier in the day, the president said on social media he would not offer any extensions for the implementation of increased tariffs on many goods imported into the U.S. He pledged that new rates would hit at the beginning of August. In other words, no extension. Here's the president during his cabinet meeting earlier this afternoon.
Almost every country charges us tariffs. We had deficits with everybody for years, for decades. And we were like this big monolith that made bad deals with everybody. We rebuilt South Korea and we stayed there. It's okay, we rebuilt it and we stayed there. And they pay us very little for the military. I got them to pay billions of dollars and Biden then canceled it when he came in. I said to South Korea, as an example, we give you free military essentially, very little. And I think you should pay us $10 billion a year. And they went crazy. But they agreed to 3.
Well, there's President Trump earlier in his cabinet meeting. For more on the evolving tariff situation, we're joined by Adam Ferrer, Bloomberg Economics senior geoeconomics analyst for Asia Pacific down in our Washington, D.C. bureau. Adam, the letters that the president has posted over the last 24, 26 hours or so, does it offer clarity on the situation with tariffs? Is it certainty now?
I think in many ways it's the opposite, right? We now have another tariff deadline of August 1st, and the president insists that this tariff deadline won't move. But we've seen already 2 tariff deadlines move, and there's certainly a possibility that this new deadline can move as well. The big takeaway is that countries that are in tough negotiations, particularly larger trading partners like Korea and Japan, that were reaching real difficulty in their discussions as they reach the complex issues like agricultural imports and auto tariffs, have been given a lifeline of 3 weeks to further negotiate with the U.S. government and try and find a solution before that August deadline. But overall, I think we need to be careful to be clear that the letters really were not news. Overall, they changed the tariff rate marginally in a few cases, with some going up and down. But they remain, reciprocal tariffs are not on the table right now and aren't scheduled to come on until August 1st.
So what does this mean now for at least the rates that we've seen already negotiated, particularly Japan, South Korea? As you mentioned, they're kind of the same numbers that we saw Trump announce a couple months ago back on that Liberation Day. What has changed this week as that July 9th deadline approaches?
So honestly, we can't speak to why we had these marginal changes in the reciprocal tariff rates, the differences between April 2nd and these letters. But we can say that we know that there are lots of detailed ongoing trade discussions between these countries and the administration, at least countries like Korea and Japan, and to some extent Indonesia and Thailand. It is worth noting that in addition to those major trading partners, we also saw letters go out to tiny trading partners like Bosnia and Serbia, which have a trade deficit under $1 billion with the United States. So it's unclear why they were grouped in the way they were or what comes next in terms of the additional letters. But with Scott Bessent saying that we're going to see 100+ letters over this week, we should expect to see them for most countries.
Mexico, Canada, and China are the 3 most important, I think it's fair to say. They're certainly the 3 largest trading partners with the United States. In a sense, are really the top 10 trading partners really the only ones that matter, Adam?
Depends on what you mean, but I think overall for imports and the impact on U.S. consumers, it certainly is far weighted in the direction of those countries. But as you just highlighted, China, Canada, and Mexico are not part of this reciprocal discussion. Exactly. and have different dates. Although now we have merged the China deadline to some extent with the rest of the world. Obviously, Canada and Mexico continue to move separately, and lots of attention going to those discussions, but they're happening quietly on the sidelines, and we don't have updates on where they stand.
What about these rates on various commodities and pharmaceuticals that Tim mentioned at the beginning of the show? Trump said he planned to implement a 50% rate on copper, and then he also threatened this 200% tariff on pharmaceuticals. How different is that from what he had proposed previously?
So we've been waiting to see where the administration was going to come out on these new sectoral tariffs, particularly related to copper, semiconductors, pharmaceuticals, and there are a handful of others, including on lumber, that we haven't heard about. The reality is that copper's probably at the lowest end of the spectrum. It accounts for about $17 billion in U.S. imports. At the same time, that demand is probably relatively inelastic. Companies and producers in the United States that rely on copper are still going to need copper, and so they're likely to just see a big increase in their costs if and when this goes into effect. I would highlight that the president didn't give a date as to when this would go into effect. On the pharmaceutical side, obviously that's a much bigger deal. We're talking about over $200 billion in U.S. imports, and obviously a key item for U.S. consumers and the general economy. But again, here we see a big number, 200+% threatened, but also the potential for a year plus of delay as he works with pharmaceutical companies to address the inequities that he sees in the market.
The president has often spoken of countries themselves paying for these tariffs. What's the view that you have? Who pays for these tariffs?
I think time and time again we've seen in the data that while there is some split going on, and it depends a bit on the product in question, overall consumers and importers are the ones paying that fee. And so at the end of the day, it accounts for a tariff, an additional tax on consumers in the United States. And particularly for items like pharmaceuticals, where you're not going to have a lot of people who can go without. They're just going to pay higher prices.
Adam, what do investors, people who watch markets and headlines, need to be keeping in mind right now when it comes to just how much more change are we going to see in these tariff rates that have already been set from now to potentially August? Should investors be basically preparing for many, many more headlines of deals still being negotiated and these rates changing?
Well, at the start, we're expecting these additional letters, and in those letters we could see different rates than we had seen originally from April 2nd. So that's something folks will have to take into account. But again, those don't go into effect in theory until August 1st. I say in theory because obviously the president has shown a willingness to adjust on the fly depending on what he sees both in the market and in his engagements with these countries. But I think the biggest takeaway needs to be the reality that what we're seeing today are not so much trade negotiations, but rather the implementation of tariffs and locking in those tariffs. In the few agreements we have seen between the United States and the UK and Vietnam, the administration successfully locked in tariffs at 10% for the UK and 20% for Vietnam, and potentially up to 40% for items that are transshipped. So what we're seeing here, again, are not traditional trade negotiations, but rather a discussion of how tariffs will be implemented and how high that wall will be.
Perhaps, though, Adam, if somebody from the Trump administration were here, they might say, this is a negotiating tactic, or this could be a negotiating tactic. We could at any moment pull those tariffs that you speak of if we get what we want to see. What do you make of that?
So that's certainly possible, but I think what we've seen so far from the administration, and certainly from what the president has said, is a desire to reset the trading order and to do it via tariffs. And so while there's a possibility on the table that they could go in any direction they see fit, the reality seems to be that they want at least a 10% baseline on the table for most countries, and that in many cases it would be significantly higher. The question does become when those tariffs really start to bite in the economy as we move into the latter half of the year and into 2026. Will they be willing to kind of hold their nerve and continue those tariffs, or will we see them start to fall?
Yeah, a lot of people still waiting for those tariffs to bite. Adam, thanks so much for joining us this afternoon. Really do appreciate it. That's Adam Fair, Bloomberg Economics Senior Geoeconomics Analyst for Asia Pacific from our Washington, D.C. Bureau. So that was the latest on the evolving tariff situation. For how investors are trying to weather this and figure it out, let's bring in Libby Cantrill, Managing Director and Head of Public Policy at PIMCO. She joins us here in the Bloomberg Business Week studio. Libby, I want to start with trade policy and tariffs, and then we'll get to the president's domestic policy win. I'm going to ask you the same question that I just asked Adam. For investors, though, is this a moment of clarity?
I'm not sure if it's a moment of clarity. I think in some ways it reinforces the president's conviction around tariffs. I could wholeheartedly agree with what Adam was saying. I think that there's sort of this view in the marketplace that Trump doesn't really mean this. There's sort of this whole taco meme, right? That Trump always chickens out. I think on trade in particular, that has not been the case. If you just look at where the effective tariff rate is right now on all U.S. imports, the average effective tariff rate is around 14%.
Right.
So
that's up from what, 3% or so
going in
earlier?
as of January.
Okay.
So regardless of what happens on August 1st, and we do think that there will be some sort of sacrificial lambs, if you will, but I think that the sort of the signal from the noise here is that tariffs are already high and they are likely to go higher.
So you don't think the extension to August 1st that we learned yesterday and even got more information on today, you don't think that's, some people are saying that's taco?
Sure. Is it more of a window
It's not July 9th.
for further negotiation? Sure. But I do think that maybe even with some of our negotiating partners, they weren't taking Trump very seriously. And I think this is, in many ways, he's trying to reinforce that this is not just a threat. And again, I guess from an investor perspective, the reason why you care about tariffs is you care about what's going to happen with the economy, the macroeconomy, with companies, with inflation, and in the case of bonds in particular. And I think that the bottom line here is that tariffs are already high. So regardless of what happens on August 1st, we do think we'll start seeing some fragility from an economic perspective. One thing that has not been mentioned that I do think is worth maybe reinforcing for investors is that, and this is getting a little wonky, but the statute that the president is using to impose these tariffs, something called IEEPA, the International Economic Emergencies Powers Act, that has already been found in court to be unlawful to impose tariffs. We do think that the Supreme Court will likely hear this, and they could also decide that this is unlawful, meaning that come December, whenever the Supreme Court were to rule on this, if they were to overturn this, all of these tariffs, the reciprocal tariffs, the 10% baseline tariff, all of those would go away. So I think this is something that's also important, is that while we think that the president should be taken both seriously and literally in terms of his tariff threats, we think he really believes this. He really does have conviction and commitment to sort of reshaping the global trading order. There is a possibility, and probably a high possibility, that come December or January, whenever the Supreme Court does hear this, is that they could overturn this. And that could obviously cause just another inflection point. Now, the last thing I'll just say on this, again, kind of wonky, is that the president has other tools, other legal tools that he can use to impose tariffs. One is this, what's called Section 232, and that is going to be the tool that he's going to impose things like the copper tariffs. He's already imposed aluminum and auto tariffs using that tool.
Do you think that's why the market has been relatively calm in the face of all of these headlines back and forth about the different tariff rates, that investors are maybe holding out hope that we won't have that much of tariff policy change come end of the year?
The equity market, right? I mean, of course, we're a bond house, and so we look at the equity market, but I think bonds are probably taking the president a little bit more seriously. I think the equity market, is wanting to believe what it wants to believe, and I do think there is this assumption that President Trump doesn't necessarily mean this. And of course, I mean, to the credit of the equity market, we haven't necessarily seen the pass through from tariffs to either consumer prices or hurting sentiment necessarily. So there has been reason to be bullish, and of course. We just got the one big beautiful bill done. There wasn't much time for celebration of that in Washington or in the markets for that matter. I think it's a little surprising that President Trump isn't spiking the football on that one a little bit more, because that is a huge accomplishment, honestly, regardless of what you feel about the bill, to get something that big over the goal line with such a small majority is a real accomplishment.
Well, we only have a minute left with you. Let's talk a little bit about that and the idea of widening deficits. And I'm curious, given the fact that PIMCO's a bond shop.
Yeah.
Why do you think that we're not seeing bonds react to the idea of this widening deficit?
Well, you have, and I think you have seen over the last 6 months, you've seen a steepening of the yield curve. You've seen, obviously, that, April 9th sort of temper tantrum, if you will, and the long bonds selling off by a very significant amount. So I think
that was a tariff over tariffs, wasn't it?
That was over tariffs, but it was, I think it had to do with the fact that there was already questions about deficits, about fiscal profligacy, about the institutions, all of those things. I think that there are a couple of things. One is that the U.S. dollar continues to be the reserve currency, that treasuries continue to be the reserve asset of the world, and that real yields also look pretty good. I think our view is that there's probably more value in the kind of the belly of the curve, the shorter durations of the maturities of the curve versus the long out. But you have seen, again, it sort of depends on where on the yield curve you're talking about. You have seen the long end, I think, digest some of these deficits.
Libby Cantrell, great to see you.
Great to see you.
Thanks so much for joining us. Libby Cantrell is Managing Director and Head of Public Policy at PIMCO, joining us in the Bloomberg Business Week studio. Coming up next, we are talking all oil and the effect of tariffs and trade policy on what's going on with the oil market. That's coming up next with Ellen Wald. This is Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are fluctuating as hopes President Trump is still open to trade talks offset his remarks. The U.S. will not be offering extensions to the August deadline for reciprocal tariffs to kick in. The S&P trading higher, little changed, again swinging between gains and losses. Right now up by 1 point, little change there. The Dow down 127, drop there of 0.3%, while Nasdaq higher by 27, up 0.1%. We've got the 10-year yielding 4.41%, the 2-year 3.90%. Spot gold down $32 the ounce, 33.04, and West Texas Intermediate crude oil trading higher by 0.7%, 68.41 for a barrel of WTI. President Trump, meanwhile, says the U.S. will impose a tariff of 50% on copper, lifting futures on the COMEX right now by just about 10.5%. J.P. Morgan Chase, Goldman Sachs, and Bank of America all cut at HSBC on valuations ahead of earnings. J.P. Morgan Chase reports a week from today. Shares down 3.3%. Goldman down 2%. Bank of America down 2.7%. And this headline from the Bloomberg Professional Service: SpaceX valuation said to hit around $400 billion in a share sale. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. I want to talk oil and energy. Oil fluctuated as traders weighed President Trump's latest wave of tariff threats against French tensions in the Middle East. West Texas Intermediate crude flipped between gains and losses, hovering around $68 a barrel. This is a key psychological level that prices have only briefly breached in recent weeks. Meanwhile, another ship in the Red Sea came under attack. Also, traders have to understand exactly what's happening with tariffs to get an idea for demand. Watching all of this is Dr. Ellen Wald, president of Transversal Consulting, also senior fellow at the Atlantic Council. She's also the author of Saudi Inc. She joins us from Boca Raton, Florida. Dr. Wald, always good to check in with you, especially on a day such as today. I want to start with tariffs and really the way that traders are trying to understand oil demand for countries that have had tariffs implemented on them. How does this change the view of oil demand in the coming weeks, months, and years?
It's kind of contrary to what you might think it would be. Essentially, the idea is that if tariffs are going to go up, then that will mean lower economic activity in terms of trade. So if a product you're trying to buy from another country has a very large tariff on it, you're less likely to buy that product. That means there will be lower shipping, fewer products being shipped, for example, and therefore lower demand for the energy needed to ship those products. So the idea is that then if demand is going down, then oil prices will go down. But if tariffs are lower and lots of people are buying lots of stuff from all over the world, then demand will be higher and therefore oil prices will rise. So it's a little bit of the opposite of what you would think it would be, but that's generally how we conceptualize the way that tariffs impact oil prices.
I want to talk about OPEC as well, because they're increasing oil output, increasing supply. Just to help us understand in context how investors are supposed to understand what that's going to mean for worldwide oil supply and prices.
Yeah, it's a very interesting situation we're in right now, because we're coming off of this Iran-Israel war where prices kind of shot up and then went down, and then we had this kind of resolution, sort of, which led to essentially eliminating the war premium that had been on prices. So prices were down. Now we're coming off, then we head right immediately into this OPEC meeting where OPEC decides to increase more than probably was expected. And most analysts, I think the market expected that OPEC was going to increase maybe by another 400,000 barrels a day. They increased that. It's now almost it's closer to almost 600,000 barrels a day starting in August. And then there are some pretty sure signs that they're going to increase again in September. So that means we're going to see more supply on the market. I think they have some pretty pretty good ideas that, at least in OPEC's mind, that demand is going to be going higher, and so that's why they're looking to increase. But they've also, it shouldn't come as a huge shock because they've made no secret of the fact that they've wanted to unwind these voluntary cuts for a long time, and so this is essentially their plan. I don't think we'll see any deviations from it, and it's supposed to send oil prices lower. But then you have, it didn't actually send them as low as we might have expected. But again, I think we're going to see another increase from them next month. So you've got that on one hand, you've got this tariffs on the other. I think that the pressure is really on to get deals done. And if they can get deals done, then that indicates the demand is going to go up. And so there's really a lot of pressure now to see if we can get these deals done. Can they get done in less than a month? Not so sure if that's even really feasible at this point.
But Dr. Wald, even if deals get done, if high tariffs, say, 20 to 25%, 30% in some cases, if those remain in effect on these countries, even after a deal, that's bad for demand, right?
It's not good for demand. I think the idea is that if we see trade deals being done, then the tariffs will go away essentially. And I think that in a lot of cases, we've seen these tariffs get implemented and then say, 5 days later or less than 5 days later, they get, taken back down. I think what's interesting though is you have to remember that people might be putting in orders now for things that would come in a month or 2 months or 3 months. So they're having to plan ahead, and all of this uncertainty basically screws up everyone who's trying to buy something or sell something from overseas. So anyone who's dealing in global trade, which is essentially almost any business, is facing a massive amount of uncertainty right now. And demand does not like uncertainty. And so I wouldn't be surprised if we see prices start to decline in the short term, particularly because of all of this uncertainty, general economic uncertainty surrounding the tariffs and tariff issues and trade negotiations.
Dr. Wald, what are your current views on the state of geopolitical tensions? I know you had written previously about potentially the Strait of Hormuz closing and how that would affect the global economy and oil output. Should investors still be concerned that there are more geopolitical tensions to come that would affect the oil market in the near term, or is that risk not really present anymore?
I think there's always a risk of geopolitical tensions, especially when you're talking about countries like Iran and Israel and other countries in the Middle East. You're talking about China, for example. The risk is always there. I do think that the risk that the Strait of Hormuz could be closed, which is not something I think is really a feasible thing to do at the moment, but it could be the safety of shipping through the Strait of Hormuz could be threatened at some point. I think that likelihood is way far down now. As long as Iran is exporting oil, they really don't have any cause to threaten any other shipping. And President Trump has made it pretty clear that he gets it. China's going to keep buying this oil. Iran's going to keep shipping it to them. They're doing what they can to try to thwart it according to sanctions, but at some level, they're not going to be able to stop it. I think he wasn't saying he's going to relax sanctions, but it's going to happen. He knows it's happening. And in some respect, it does keep Iran from kind of having nothing to lose. As long as Iran can sell to China, in some respect, they have skin in the game. They're not going to really try to hurt anyone else going through the Strait of Hormuz. I do think that the Red Sea is an ongoing serious issue that really demands a lot more attention than has been given. And the fact that this is a really important waterway, it's not the only way to ship oil across the world. It's a lot, you can go around you can go around Africa, but it's a lot easier to go through the Suez Canal. And the fact that this is still an ongoing issue with ships being attacked there, I think that's a real threat to all of the global shipping, not just to the oil market, and that it really is a much more serious issue than perhaps the market is taking into account.
So that's the international view. I'm wondering about the domestic view. And certainly these are all tied together when it comes to the global energy market. But when we think about the United States and the president's stated goal of more energy production and more drilling here in the United States, in fact, we did hear from the energy secretary during the cabinet meeting talking briefly about this and about oil and gas. Is $68 a barrel, especially just a few weeks after oil was $58 a barrel here in the U.S., is that a high enough price for companies in the U.S. to start exploring more, to start drilling more, to start increasing production, especially given that we saw that increase in output from OPEC Plus over the weekend?
Yeah, I think that's a really good question. I think that for some companies, it's enough, and for others, it's not. And I do think that the real question here is if the price of oil is going to be remaining around that $68 barrel mark, what else can the government do to encourage drilling that isn't necessarily related to the price of a barrel of oil? What can they do to make it easier for these companies to deal with regulations? What can they do to decrease the length, the time, and the significance of lawsuits, for example? These are all things that companies spend a lot of money and time dealing with in order to just get to the place where they can even drill. And so what the government can do is the government cannot change the price of oil all that much. They can't, say, oh, we want it to be high enough, this high so that everybody feels comfortable, drilling more. But they can't change that. I mean, I guess technically they could set, they could try to price control, but that's a bad idea, and we're not going to do that anymore. But what they could do is they could help in the regulatory aspects. And if they can decrease red tape, help things move more smoothly, then companies will be much more inclined to go out there and do exploration and do drilling and things like that, because they don't have to spend as much time and money dealing with all the red tape. So that's one way they can make that $68 a barrel more valuable to companies.
Do we know if the government has plans to do any of that anytime soon?
All right.
Well, they say they want to. I mean, I've heard that they want to get rid of NIPA
I forgot to say,
entirely. That's
with the Lilu account, I had a $1 reset that you can only use once. So when I took that loss, I decided to go crazy
3 months. Now they're saying, oh, we want to get rid
and
of
just
them
take my
entirely.
reset.
But we need to see
So
some
I'm just waiting for
actual,
that to come through.
concrete
Back
steps
at
taken
it.
to do this, because companies can't just.
That was a pretty good deal.
They can't make decisions
It was
about
like
whether
$50
to
for the
allocate,
account.
massive capital
And then,
expenditures based on something that the government says that
got
it
a
might
free
do or
reset
that it
and
wants to do.
a couple other
They're going to need to see,
one
we're
day,
doing
one
this.
day.
You
If I
know,
make
if
$3
you
grand in a
apply
day, I'm
for
already
a permit to do
so I can
X,
do it one
you can
day.
expect that it will be approved within,
Once
Z
I took
amount
that
of
first
time
loss, I was like,
and have that actually occur.
But that's the
And I
downfall
think
of
that
these
if
prop
we
firm
saw
accounts, because
something
you're only
like
in
that
it for
happen,
$50
you'd see
bucks. So
companies much more willing
it's
to
like, well,
go
fuck
out
it
there
anyway.
and to to drill more, to explore more,
So
because they
I'm
wouldn't
just waiting
be
for that
so afraid
reset.
of all of the
I'll start
expenditures and
looking
the
for
time
another entry,
that
but
goes
we
into
might
that.
be just about done for the day.
We only have 30 seconds left, Dr. Wald. How would you say demand is looking here in the United States? Because we like to look at that as a measure of how consumers are doing, how they're feeling, and what they're buying.
I do think demand
Got
is
about another
fairly
hour.
strong. We have seen price forecasts decrease
If you want to get
slightly,
in a trade,
but I think
today.
that's more an indication of supply than it is demand. I'd say demand is looking pretty strong and pretty good, at least for the rest of the year.
Dr. Ellen Wald, always good to check in with you. She's president of Transversal Consulting, also senior fellow at the Atlantic Council. Her book came out a few years ago, Saudi Inc. Check it out. Joining us from Florida this afternoon, taking a look at how stocks are doing. We're seeing little movement. The S&P 500 down not even 1/10 of 1%. The NASDAQ is higher by about 1/10 of 1%. The Dow down close to 0.4 of 1%. Coming up next on Bloomberg Business Week Daily, we're going to be joined by Mark Gongloff. He's a Bloomberg opinion editor who covers climate change on lessons learned, if any, from the tragedy in Texas.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index higher right now, barely. Stocks have been fluctuating as hopes President Trump is still open to trade talks offset his remarks that the U.S. will not be offering extensions to the August deadline for reciprocal tariffs to tick in. S&P 500 index right now up by half a point, 6230, up by less than 0.1%. We'll call it unchanged on the day now. We've got the Dow down 126, down 0.3%. NASDAQ higher by 24. The NASDAQ Composite Index up right now by 0.1%. 10-year 4.41% with a 2-year 3.90%. Gold down $32 the ounce. Spot gold just above $3,300, $3,304, down by 1%. West Texas Intermediate crude up 0.7%, 68.40 now for a barrel of WTI. President Trump says the U.S. will impose a tariff of 50% on copper, lifting futures on the COMEX by as much as 17%. Right now, looking at copper futures up by 10.3%. Amazon shares down 1.4%. Amazon's Prime Day sales fell almost 14% in the first 4 hours of the event, compared with the start of last year's sale, that according to Momentum Commerce. Prime Day does stretch over 4 days this year. And sources tell Bloomberg SpaceX is discussing plans to raise money and sell insider shares in a deal that would value Elon Musk's rocket and satellite maker at around $400 billion. Recapping, S&P little change, now down by 1 point. We've got copper surging by 9.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Do appreciate it. Well, more than 100 people in several counties died in the floods that swept through the Texas Hill Country over the weekend, including dozens of children and counselors at an all-girls summer camp on the Guadalupe River. The proximate cause of the disaster was a brief but unbelievably intense deluge of the sort that has a 1 in 1,000 chance of happening in a year. In some places, 20 inches of rain fell in a matter of hours, and the Guadalupe surged more than 20 feet. Beyond that, Bloomberg Opinion's Mark Gongloff writes, there were few potential ultimate causes. Mark is Bloomberg Opinion editor who covers climate change. He joins us here in the Bloomberg Business Week studio. Mark, you have a new piece out on this. You write that this part of Texas is called Flash Flood Alley. You also write that flash floods were happening here long before the climate began changing. Is it too early for us to say that climate change attributed to this disaster?
Well, a day has passed since I wrote that, and we've actually got a new study out that does attribute a little bit of the rain to climate change. So there are rapid attribution models and companies that do this now. They say it was 7% more rain because of that. It's true that we've had huge floods in this area. Flash Flood Alley in Texas is not named that for no reason. And so they do get a lot of water. This was made more intense. So we're in this weird thing where we still don't know everything that happened in this tragedy and all the reasons that contributed to why it was as bad as it was. But the lesson I took away from it is that, climate change is making these things more devastating and intensify more rapidly. And this had the hallmarks of that, even if you can't get the thumbprint of it right away.
When I was reading your column, I was thinking to myself, who really is in charge of informing citizens, Americans, of extreme weather? If this thesis holds, there's going to be more extreme weather events. Who's supposed to be in charge of telling Americans what's coming next and how to prepare for it?
Yeah, and your question gets at the heart of one of the mysteries here that we still don't quite know all the answers to, but it's a daisy chain that starts with, say, the National Weather Service. You got meteorologists who say, oh my God, there's a big thing coming, and they tell somebody who tells a local authority, and the local authority then has to figure out a way to tell all the people. Now, one of the problems with, say, Camp Mystic or these places along the Guadalupe River is that this has been a thing that they've talked about for years because they have had big, devastating, deadly floods there. They've for years talked about, well, we've got these things that send text messages to people if there's a flood coming, but not everybody gets the text because they're in these hills and they don't have good cell phone coverage. And so maybe we should put some big sirens on the river that sound off so nobody can miss it when it goes off, but they haven't been willing to pay for that yet. So it's somebody dropped the ball along the way. People didn't get text messages. Some did, but many didn't. And unfortunately, you need everybody to know that a disaster is headed their way. And right now, we are dropping that ball somewhere along the way.
You know, the National Weather Service has come under scrutiny in the days following this. We did hear from Department of Homeland Security Chief Kristi Noem, who said that President Trump is upgrading the National Weather Service. What do we know about that?
Well, again, the first thing we know is that far from being upgraded, the NWS is being downgraded. It's losing a bunch of jobs, losing a bunch of people. It's not able to launch weather balloons as often. There are a whole bunch of pictures to the mosaic, pieces of tile for this mosaic that helps us build a picture of what the weather's going to be that we're starting to miss because of this. Now, that said, various sources have suggested that the NWS did the best it could do in this situation. It did its job. There were enough people there. It gave dire enough warnings. It was like, look, guys, the rivers are going to flood. There could be deadly flooding. Get to higher ground. It said that. Now, not everybody got that message. It didn't predict 20 inches of rain, but there's only so much it can do right now. But with the degradation that we're seeing under Trump right now, we are going to see more and more instances potentially in the future where people don't get the right messages, where people don't get the right warnings. And that's the fear that I have.
What about this idea of warning fatigue? And I can tell you right now, on my phone, messages today have popped up. It's 93 degrees in New York City. I've already gotten a message about severe thunderstorms tonight pop up on my phone. I've also gotten one about flooding until 2 a.m. tomorrow morning. But I just swipe these aside because I get these so much.
Yeah. I mean, fatigue, warning fatigue is a huge potential risk here because you are getting these alerts. You're like, oh my God, here we go again. And if we have worse weather forecasting, the risk of that rises because you might be told, get out of your house, it's going to flood, and then it doesn't. It's the boy who cried wolf again and again, and then the fifth time it actually does flood, and you should have listened to that warning. The thing that we can't do, it's sort of like climate change writ large to some degree. The thing we can't do is become inured to the disasters, become inured to the changes, become inured to the suffering that people are going through, because it's very easy to do. We're adaptable human beings. It's just our evolution. We adapt to anything, but there are some things we don't have to adapt to this. This flood didn't have to be that deadly. We may have a lot of floods, but we can figure out a way to get people to higher ground and save lives. We don't have to have campers drowning, God forbid, in storms like this, but it happens all the time, mainly because of our failures. Now, we are also failing to protect the climate. We need to stop burning fossil fuels more quickly because these disasters will become more intense in the future if we don't do that. But right now, we already have intense disasters, and right now, we're not doing everything we can to protect ourselves. It's just that simple.
Help clarify, there have been people talking online about layoffs at these various levels of government, people speculating that maybe DOGE played a role in this because if people lost their jobs, there weren't enough people in the chain of command to alert people of this tragedy. Can you just help us clear up, what do we know so far about the potential role that job cutting could have played in this?
Yeah. So it seems like maybe when we're talking about dropping the ball, getting the message from the NWS to the people on the ground, maybe that's where the layoffs had an effect. Again, we're still trying to sort all this out. There are also reports that we've said that these were some of the best staffed NWS offices in the country, but that means they're only, say, 80% staffed as opposed to 50% staffed, So it's kind of a low bar at the moment because a lot of places have really been gutted. So for this particular emergency, we still don't know exactly 100%, how much this affected it. We could say that, the NWS did the best it could, but I think, again, looking to the future, it's these kinds of low staffing circumstances are going to lead to more of these situations where fewer people get warned, more people die, more property is at risk, that sort of thing.
Just 20 seconds. It seems like climate resilience has to be a big part of this. I mean, if you go to Lower Manhattan, you see that there are essentially berms being built on the coast to prevent a storm surge during Sandy from happening again.
Yeah.
Is that the answer?
Resilience is the answer. The problem is you need money, and these states, Kerr County in Texas, didn't have the money to build its sirens. A lot of these places need federal dollars, and the federal government right now is cutting those dollars off, so we need to change that.
Mark Gongloff, he covers climate change for Bloomberg Opinion. Check out his columns and everything from Bloomberg Opinion, OPIN Go, on the Bloomberg terminal, and at Bloomberg.com/opinion. Up next, stocks on the move. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. I'm Tim Stenovec. That is Emily Grafeo. She is in for Carol Massar this afternoon. Carol back tomorrow. And like I said, stocks not really moving so much on the index level. The S&P 500, that's pretty much flat right now. The NASDAQ composite has been moving between gains and losses for much of the day. It is higher right now, just shy of 0.1%. The Dow Jones Industrial Average down 0.3%. Let's take a look at some stocks on the move today. I'm Tim Stenovec along with Emily Grafeo. We're joined by Bloomberg News equities reporter Nora Melinda. Nora, the indexes might not be moving much right now, but kind of hide some big moves taking place if you peel back the layers, no?
Most definitely. And talking of a big move, I'm looking at Fair Isaac, which we all know as FICO. That's ticker FICO. We're seeing shares pointing lower, tumbling double digits actually, as the worst performing stock by a percentage basis in the S&P 500. And this is after Bill Pulte. He, of course, is the Federal Housing Finance Agency director. He said that Fannie Mae and Freddie Mac, which of course we know these are government-sponsored enterprises that are really, really integrated in the mortgage market. They're saying that these lenders, or Fannie and Freddie will now allow lenders rather, to accept the Vantage 4.0 credit model to increase competition in the credit score ecosystem. So what now is currently used, of course, is FICO, which we know that's a compilation of what TransUnion, Equifax, Experian. So Vantage is actually a competitor that's trying to come in, kind of knock FICO out the way. And we're seeing shares of FICO down about as much as 19%. That's its worst day since the pandemic, March 2020. So not a great day for them right now.
And that's ticker FICO. Vantage is a private company.
Correct.
So we can't see those shares move, but
no, we can't.
I guess a good day, most likely, if you're a shareholder.
Most definitely. But I'm also looking at CoreWeave, that's ticker CRWV. And of course, we know this was an IPO back in late March. We've seen shares of the company that have surged more than 280% so far since they IPO. But we're looking at shares that are lower today. They were downgraded to a neutral equivalent rating at both Stifel and Mizuho. And this, of course, is after the company had some news that came out about the fact that it was going to be buying Core Scientific in an all-stock transaction. So the companies, these banks are actually not super enthused about what this means for the shares of CoreWeave. And of course, those investors, Stifel is actually pointing toward pending dilution and potential pressure, especially as we think about some of those multiples and whatnot, as CoreWeave really moves from being a light asset, an asset light company to asset owned or more or less hybrid.
You might think CoreWeave, a company that works in this space, might be based in Silicon Valley or New York or Texas.
But
Livingston, New Jersey.
What?
Yes, which is like a suburb of New York City.
Okay.
That is where the headquarters are.
We have to bring them in here.
Right, they're just down the road, right?
They really are, yeah. It's like, I was always surprised to find that CoreWeave is based in Livingston, New Jersey.
The more you know.
Yeah.
And that's ticker CRWV, the second day of losses in a row for that stock.
Most definitely. So we're going to have to see what really happens here in terms of whether or not that pullback extends. But another company, I'm bringing you lots of red today, but another company here, we're looking at Bank of America, that's ticker BAC. And I'm looking at that along with a lot of those peers in the banking space. We know bank earnings kick off next week. But before that, we have HSBC coming in saying that downside risks are not currently factored into the stock prices of a lot of these companies. We've seen a pretty intense rally right now between what things have looked like for the banking sector. And we have Wall Street a bit divided right now. I mean, Mike Mayo saying game on for banks, but then we also have other analysts that are really just flagging what the macro environment looks like for these companies and whether or not that could be a potential headwind for them. But we do have HSBC in particular here turning cautious on the company, as well as JP Morgan and Goldman that were also downgraded.
Speaking of the banks, earnings season kicks off next week.
It does.
The 15th, we hear from JP Morgan. That is, today's the 8th, so that is next Tuesday. Next Wednesday, we'll hear from Bank of America, and then we're off to the races. Yeah. Like, we're going to hear from everyone.
Are we ready?
Oh, I'm ready. I'm always ready for earnings.
Game face is on.
Emily, are you ready? You'll be here. You'll be here in the studio with me.
I'll be here. I'll be waiting for those earnings.
Nora, are you ready? You'll be here in the studio with me.
I'll be watching a lot.
Okay.
I'll be watching a lot.
All right, cool.
Everyone else is like having their European summer.
Yeah,
but we're here.
We're here.
We're here.
We are
Buckled
here. Stock movers, Nora Melinda, Bloomberg News equities reporter. For more conversations like this, listen to our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Well, the S&P 500 is still flat right now, down ever so slightly, less than 0.1%. The NASDAQ in the green, but pretty much flat as well. The Dow, a little bit of movement there, Emily, down 0.3%.
Do you know what's moving, Tim? The
What's moving?
Russell 2000. It's up 0.8%. Those are small cap stocks.
You know what else is moving?
What?
The SOX.
Okay.
The SOX is up more than 2% right now. Got some favorable analyst commentary on chip stocks today from a couple different analysts. So you have a bunch of semiconductor stocks that are outperforming the market.
That's interesting because usually if you see small caps, it's more of like a broadening out type of day. And semis are usually rallying when, tech stocks, mega caps are rallying. So now I guess we're seeing, a little bit of both today, but not on that index level.
Right, that's a good point. Copper also rallying. If you're sticking with us on Bloomberg Business Week Radio, Bloomberg Business Week Daily, continuing on radio on YouTube and Bloomberg Originals, Joe Doe is going to be stopping by. He covers economic statecraft. He's going to be giving us the latest on trade and tariff policy. We'll also be joined a little later by Paige Smith. She covers consumer finance on everything happening with crypto. If you're sticking on TV, the close starts now.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The death toll in Texas is at 109 now from the devastating floods, and there are more demands for answers. Chris Fox reports.
More questions about when local leaders were made aware of the flooding on Friday and what they did. Sheriff Larry Letha.
And we're in the process of trying to put a timeline. That's going to take a little bit of time. As I've told you several times, that is not my priority this time.
With County Judge Rob Kelly not in attendance, Game Warden Ben Baker was asked about the failure to call evacuations.
You have many questions. The judge is not here. We understand that, but right now, this team up here is focused on bringing people home.
Chris Fox for CBS News, Kerrville, Texas.
It's been 4 days since anyone was found alive, but rescuers like volunteer Louis Depp keep going.
We're tired, but running off adrenaline, and it's for a good cause, and trying to find people and bring some closure to those who may not be alive anymore. And so that's kind of where we're at in the search.
President Trump is defending his latest move on tariffs. Linda Kenyon reports from the White House.
President Trump has sent letters to the leaders of several nations saying his 90-day pause on tariffs is ending, and soon countries will have to pay up.
We don't change very much. Every time we put out a statement, they say, you made a change. I didn't make a change. A clarification, maybe. No, August 1st they pay.
Speaking at a cabinet meeting, the president said pharmaceutical companies also will have to pay.
They're going to be tariffed at a very, very high rate, like 200%.
But first, he says they'll be given about a year or a year and a half before those tariffs kick in. Linda Kenyon, CBS News, the White House.
Trump lashed out at Russian President Vladimir Putin.
We get a lot of thrown at us by Putin for you want to know the truth. He's very nice all the time, but it turns out to be meaningless.
Yesterday, the U.S. resumed military assistance to Ukraine. Someone's been posing as Secretary of State Marco Rubio, as Michael Wallace reports.
We are at the beginning of an era, and we are poised to recover American greatness.
That was the real Marco Rubio in his July 4th message. An imposter has been using AI to impersonate Rubio's voice and writing style. Last month, the person called or texted 3 foreign ministers, a member of Congress, and a U.S. governor through the Signal messaging app. Investigators believe the imposter was trying to gain access to other accounts. The State Department has sent a cable to all diplomatic and consular posts warning staff about the fake Rubio. Michael Wallace, CBS News.
On Wall Street today, stocks are mixed as investors wait for more clarity on the latest tariffs. The Dow Jones Industrials are currently down 138 points. This is CBS News. Lots of people like to watch sports at a local bar, but reality TV, it's a hit too.
The Worthington, a restaurant in Baltimore, has hopped on the reality TV train, and with the help of local influencer Angie Williams,
every piece of juicy drama and gossip
is packing the place with people who want to watch reality TV shows with others.
Day one, we filled up on a day that we normally wouldn't really have this back area filled.
General Manager Jason Johnson.
We had a lady last week that said, quiet down, boys, this is our Super Bowl.
He says as many people come in to watch a reality TV show as they do to watch a big football game.
It's bringing a new crowd in.
Christopher Cruz, CBS News.
The IRS says pastors who endorse political candidates during services should not risk losing their tax-exempt status. The agency and a Christian media group are asking a Texas court to stop enforcing a 1954 rule. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. We are 1 hour away from the closing bell, and stocks, yeah, well, they're still doing a whole lot of nothing. Charlie Pellet's going to have an update for us in just a minute, but suffice it to say, the NASDAQ composite, it's orange, Emily Grafeo. It's not green. It's not red. It's orange.
Okay, on the print side, we call it gray. Like, if it's unchanged, it turns gray. But
mine turns orange.
Really?
Yeah.
Oh, I didn't know that. Okay.
I guess we have different terminals or something.
Well, that's certainly right, though, that the indexes are flat. I will point out that small caps are getting quite a bid today. The Russell 2000 is up almost 1%, broadening out of the rally here.
Okay, let's not forget about those small caps. That voice you hear is not Carol Massar. It's Emily Grafeo, who's in for Carol Massar this afternoon. It is Bloomberg Business Week Daily. We are in the Bloomberg Interactive Brokers studio. We're streaming on YouTube. We're also on Bloomberg Originals. We've got a great program over the next couple of hours.
Yeah, we're going to talk all things tariffs and trade policy, and we have our economic statecraft reporter with the details up soon. We're also going to talk to Mark Gurman with yet another exclusive. Gurman is on fire consistently. Today he's talking about Apple's loss is Meta's gain.
Also, it's day one of Amazon Prime Day. I don't know if you have your calendars marked for this.
No, I feel like it's always Amazon Prime Day.
Thank you for saying that. It's now a 4-day event. At least one early measure, though, says sales are lagging. We're going to check in with our man in Seattle a little later in the program. First up, though, a check on the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much. Right now we got Amazon down by 1.6%. You talked about Gurman and Apple. Apple shares right now, they are trading lower by 0.1%. Bottom line here, we've got U.S. stocks trading lower, gray, whatever color you want to choose, orange perhaps. I'm looking at red on my screens with the S&P right now down 3, drop there of just under 0.1%. NASDAQ, I'm calling that flat on the day right now with the Dow down 141 for the Dow. A drop now of 0.3%. Tariffs front and center today. We've got the 10-year yielding 4.41%, the 2-year 3.9%, 3.90% on the 10-year. Spot gold trading lower by $32 the ounce, down by 1%. And West Texas Intermediate crude up 0.6%, 68.37 a barrel on WTI. Copper surging now by 9.6%. Libby Cantrell is head of public policy at PIMCO. She was a guest on Bloomberg Business Week Daily and says when it comes to tariffs, investors do need to take President Trump at his word.
There's sort of this view in the marketplace that Trump doesn't really mean this. There's sort of this whole taco meme, right? That Trump always chickens out. I think on trade in particular, that has not been the case. If you just look at where the effective tariff rate is right now on all U.S. imports, the average effective tariff rate is around 14%.
PIMCO's Libby Cantrell interviewed right here on Bloomberg Business Week Daily. Boeing says it delivered 60 aircraft in June, its best showing in 18 months. And just getting word from sources at Meta Platforms bought a minority stake in EssilorLuxottica, increasing its financial commitment to the smart glasses industry. Recapping, S&P down 3 now, down just under 0.1%. Copper surging 9.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, cryptocurrency companies, I'll try that again, are rushing to bridge the gap between mainstream finance and digital assets under the Trump administration. From stablecoin company Circle going public to, Emily, more and more so-called altcoins being offered in traditional exchange-traded funds.
I know about that.
That's like your thing, right?
That's like my thing.
Do you write about that, altcoins and ETFs?
I do. You know, my editor, I think he pitched this altcoin crypto ETF summer. I'm like, okay, we don't need to make these little.
So I've heard of Brat Summer, and
right.
What is it again? What did you say?
Crypto ETF summer.
It doesn't have the same ring to it. It doesn't roll off the tongue.
No, it doesn't.
What is the color associated with it? You know, with Brat Summer, there was like the green.
It was like lime green.
Yeah.
I guess crypto would maybe be gold.
Okay.
I don't know, because it's digital gold. In any way, in the latest moves of this crypto to TradFi bridge the gap closing, payments and stable coin firm Ripple Labs and also crypto custodian BitGo have applied for national bank charters. Paige Smith, she's the Bloomberg News consumer finance reporter, joins us now in the Bloomberg Interactive Broker Studio. You wrote the story. Maybe we could just start with, what are Ripple Labs and BitGo, and why do they want bank charters?
That is a great question, Emily. And I do think I agree. Let's not try to make Bitcoin or ETF summer happen, but it could be the summer. I campaign for bank charter summer.
Ooh.
Okay. That sounds better.
I think that's better. And it's just
sounds
perfectly
wonky.
nerdy for my kind of beat. But so as you said, BitGo and also Ripple, but there are a number of folks who want bank charters right now. It's fintech firms, it's cryptocurrency companies, it's automakers. This is just to step back for a second. This is not a new phenomenon. There have been companies that have been wanting to be banks that are not traditionally banks for a very long time.
Okay, this is what I don't understand. You've covered fintech companies. You do cover fintech companies. Chime, for example, doesn't want to be a bank, but they want to offer banking services. What's the delta here? What's the difference?
So Chime is different because they make their money off of payments specifically. So every time you swipe your card, they make a fee off of that, and that is, or tap your card, whatever, that is how they make their money. But if you make your money in that way, you have to work with a bank. And if you lend to anyone, you have to work with a bank in order to, Chime cannot officially accept deposits yourself. You have to work with a bank to accept it.
So I thought the reason that these fintechs don't want to be banks is because then they're regulated under a different set of rules also.
That's correct. That's part of it. But if you apply to be a bank, you do have, as Emily said, you have more stability in the financial system. You can do other things that previously you would not have been able to do. And you don't have to rely on that third party. You just have more control over the situation. And it's changing because under the Trump administration, there's actually an appetite to essentially give these bank charters out. Under the Biden administration, that was not the case. There was no forward movement on the regulatory landscape. Even if you wanted to be a bank, your shots of becoming one were slim to none.
So is this about the Trump administration being looser, more friendlier to the crypto industry, or is this bigger than that? This is the Trump administration just wanting to hand out more bank charters at large.
I think it's a little bit early to say. We have seen a heck of a lot of applications. We haven't seen these applications approved just yet. We've seen some approved, but no, there's not enough information, I would say, there's not enough information out there to say, yes, definitely the Trump administration is, totally okay with giving every crypto company that applies a bank charter. That's not the case yet. However, you can look at the other indications from the Trump administration's regulatory agenda to surmise that there's certainly a lighter regulatory touch, or a more welcoming approach, if you will, to cryptocurrency firms generally.
In the United States, when you have money in a bank, you have an understanding that this money is protected by the Federal Deposit Insurance Corporation, the FDIC. Could we start to see some sort of guarantees on digital assets as a result of these bank charters?
So it depends on the kind of bank charter that they're applying for. Not to be super nerdy, but I I forget exactly which company it was, but one of the firms that have recently applied for a national bank charter, in which case you would also need to apply with the FDIC to get that kind of insurance. That is not the case for all kinds of bank charters. So, some folks may apply for a sort of more narrow bank charter, sort of like an industrial loan charter, as Nissan, for example, is applying for. So it would be from an automaker's perspective, it would more easily allow them to lend or hand out auto loans for their customers. They wouldn't have to work with we'll pick on Ally for a second, an auto lender. But in terms of to go back to your original question, for digital assets being essentially guaranteed by the FDIC, I think it's a little bit early to see on that.
What about, I know it's very early in the stages of this potentially getting approved, but for Ripple and BitGo, for these crypto companies, have they said anything about ideally what they would want to be able to do with the bank charter?
Yes, there are extensive filings that sort of clarify exactly what they want. But again, I think it really is, it's sort of this sense of inertia, right? Like, if they want to do this and this is on their strategy roadmap, now is the time to do it. This process takes time.
What you wrote about and what you've been writing about are these not necessarily digital upstarts at this point, but they're not the incumbents by any means when it comes to digital asset companies or asset managers. We see these companies trying to become more traditional. Are we going to start seeing the big banks become holders of digital assets or start to serve and service this group of clients? We know what Jamie Dimon has said for years about Bitcoin. He's not a fan.
I think that it is early in the stage and it's early in the game, and I wouldn't rule anything out at this moment in time. If you look at folks expressing interest in stable coins, for example, you've seen big banks express interest. You've seen big retailers. There have been reports of retailers expressing interest. I think there is a lot of runway here of sort of decentralized finance wanting to be more traditional, but also traditional finance wanting to be more decentralized and a little more hip and modern. That's very nerdy, sorry.
Hip and modern banking summer.
There it is. I was waiting for that. Thank you, Emily. Thank you, Paige. Paige Smith, Bloomberg News consumer finance reporter. Check out her story and more on the Bloomberg terminal, also at Bloomberg.com. Well, President Trump said he planned to implement a 50% duty on copper imports as part of a set of looming sectoral tariffs, while also indicating he could offer pharmaceutical manufacturers at least a year before applying a crippling 200% tariff on their foreign-made products. We've got Joe Doe with us, economic statecraft reporter for Bloomberg News. He joins us here in the Bloomberg Interactive Brokers studio. Before you covered economic statecraft, you covered metals and mining. And that's where I want to start with you, because we have these global, correct me if I'm wrong, but global minerals companies or copper producers, Freeport-McMoRan, for example, among the best performers among the best performing stocks today, I should say. But these are global companies and they have mines all over, right? So if you put a 50% tariff on copper, then copper you import will be more expensive.
Right.
So it could affect companies that, even if they're American companies, if they import it.
Right.
What am I missing here?
No, this is the debate in the industry, right? So many months ago, Trump said, we're going to do copper tariffs. And it was just like one of 30 things he said in an Oval Office conversation, right? And copper came out of nowhere. That was a big deal because steel and aluminum we did 8 years ago. Copper never hit like that roster. So for it to hit suddenly, that was a big deal in the metals and mining industry because the United States consumes about 1.6 million tons of copper. 850,000 tons of that is domestically produced. So you're still talking about half of your consumption coming from abroad. That's a big question mark for consumers, right? Think about it. Like, copper goes into literally everything. Almost literally everything. It is ubiquitous in the United States. It's ubiquitous everywhere in the world. We rely on a major ally for those imports, Chile. 38% of our imports come from Chile. That's a big deal. But they're a great trade partner, right? Maybe the best trade partner in South America. The idea that you're suddenly going to be putting a 50% tariff on those imports is significant because ultimately the consumers are not just you and I. It is the fabricators, right? The people who make copper pipes, copper wiring. They have questions too. And those copper wire producers, for example, might have something to say, saying, "Whoa, hold on. We produce in the United States. We are majorly important. We, in terms of actual revenue, in terms of actual profit, because it's more downstream. That's the ball game." So I don't know how this ultimately plays out. The president said it's a 50% tariff, but what does it actually look like on paper? Do we get 50% across the board? Do we get something that says, well, it's a 50% tariff on raw copper imports and it's a lower percent tariff or a higher percent tariff on copper products? Are there some sort of export controls? These are the questions that the market actually cares about. And I think for your listeners who are saying, Joe's all over the place with this, I can't keep up with it. I think what I'm trying to say to you guys and to anybody who's listening, who's a smart person on Wall Street, it is complex. And to come out and just say across the board 50% tariff on copper doesn't say a whole lot to the people who trade this thing. They still need more detail.
I think this is very helpful to smart people on Wall Street. I don't think you're all over the place. I think you're hitting the nail right on the head. But I mean, when it comes to the companies, like the U.S. copper companies, this is good for those stocks or not necessarily?
To be determined? Right, back to the point. These copper companies are global. So Freeport-McMoRan's biggest mine is not in the United States. They do mine here in the United States, but their biggest mine is not here. So yes, on one end, it's a benefit for them, but on the other end, it is potentially harmful. And so you ask yourself, what are the conversations happening inside the C-suite of a place like Freeport-McMoRan or Rio Tinto, where they're saying, okay, great, so this helps our operations in the United States, but we have all of this other production outside. We had many customers inside the United States, and we're trying to figure out how to square away that issue.
How does the supply chain work? Obviously, there's still a lot of uncertainties, but is this a scenario where the tariff ultimately would be likely to get passed down to the consumer if this is a material that is, as you said, in like literally everything, phones, cars, etc.?
I guess we'll have to see. I think this has always been the issue with even steel and aluminum. How much did the end consumer actually end up paying more for various products? Like we heard way back in the day, in 2018, 2019, people who were buying new windows for their houses, have the window frames are all aluminum. They were paying more for their window frames. But it's not as clear if, like you say, buy an iPhone, right? Like how much copper is in the actual iPhone. I don't have the number off the top of my head, but I think we're going to have to get the actual details of what actually gets put into the Section 232 decision. And then we're going to, if it, whatever goes into place, we're going to have to see how it actually impacts these downstream consumer products all the way down to wiring in your house.
I want to talk about economic statecraft. And there's a paper from the Hoover Institution about this from H.R. McMaster, who served in the Trump administration, and Andrew Grotto as well. And they write that when a country uses an instrument of economic statecraft, it aims to produce an economic effect within its domestic market or in global markets to achieve a geopolitical objective. Economic statecraft in the context of your beat, I imagine, has a lot to do with the United States and what the United States is doing to achieve certain outcomes.
Yeah.
How's it going right now?
It's a tough call, right? I mean, listen, I think it is easy. We've all known Donald Trump for a very long time, and we know the bluster that he puts out into the market and the different things he says. There are things he says that there are a lot of smart people who say, he's actually right. It's just the way he said it maybe is not the way to communicate it, right? But at the same time, there are things that you do that aren't actually good, right? Like these reciprocal tariffs obviously were received very terribly by the United States markets and global markets. And I think we've seen that play out over the past 3 months in the markets. On the other hand, if you look at something like rare earths, critical minerals, what we saw between the United States and China was the negotiation for the trade agreement between the United States and China actually became about rare earth magnets, these permanent magnets that are needed in all sorts of the electrification and EV vehicles and everything else. That is important. And there is a concern among automakers. Ford has come out and said it very publicly. We reported a few weeks ago that quietly many aerospace-related companies are coming out and saying there's a concern around this. When they say there's a concern, they're saying we do realize maybe we need more domestic production of these things, of these rare earths and these rare earth magnets. And so in that regard, that's just an example of where maybe Trump is right. Maybe you do need to build out some sort of domestic industry. I'm not saying you just build the industry,
Right.
you take it all away from China, but like an executive once told me years ago, 5 years ago, you know, Joe, the point isn't you take 50%, you know, China has 80% market share in the world. It's not that next year or 5 years from now you take 50% of that market share. It's you take 1 to 2% market share each and every year, little by little.
Joe Doe, economic statecraft reporter for Bloomberg News, joining us in the Bloomberg Interactive Brokers studio. Check out his work and more on the Bloomberg terminal and at Bloomberg.com. Coming up in just a minute, another exclusive from Mark Gurman of Bloomberg News. This time about a big move from Apple to Meta Platforms. We'll be speaking to him in just a few minutes. In the meantime, we are a little more than a half hour away from the close of U.S. equity trading here in New York. For an update, let's head on over to Charlie Pellet.
Hi, thank you very much indeed. 35 minutes to go until that closing bell clangs on Wall Street. We got Apple coming up, down now by 0.3%. We'll have the latest from our Mark Gurman. Right now, the Dow, the S&P, NASDAQ, they are all very much in the red. S&P down 6 now to 62.23, drop of 0.1%. Dow Industrials down 157, down 0.4%. NASDAQ down 12, drop there of 0.1%. 10-year 4.41%, the 2-year 3.90%. Gold now down $32 the ounce, holding just above 3,300. 33.04 on the precious metal, down by 1%. West Texas Intermediate crude up 0.6%, 68.36 a barrel on WTI. And just talking copper with our Joe Doe, right now we've got copper up 9.7%. Tesla shares up right now by 1.4%. The EV maker yesterday fell nearly 7% on the first trading day after CEO Elon Musk announced he's forming a new political party today. Again, Tesla up by 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, Apple's top executive in charge of AI models is leaving for Meta Platforms. It's another setback in Apple's struggling AI efforts. Mark Gurman is Bloomberg News managing editor for Global Consumer Tech. He broke the news that Apple's losing its top AI models executive. Mark joins us from the Los Angeles Bureau. Mark, how big of a deal is it that its top AI's models executive is leaving for Meta Platforms?
I mean, I think it's a huge deal, right? This is Roming Pang, the most respected AI researcher and AI executive at Apple. He's basically holding everything together there. It's an upward battle where they're developing these models, but they're struggling because they don't have enough GPUs to train the models, right? They have pushback from the software engineering department. They also have this privacy stance, which means their models can't be as effective as the models that you're seeing from ChatGPT, you're seeing from Anthropic with Claude, you're seeing from Google Gemini. Now at Meta, right, the gloves are off. He's going to be able to develop models and train them to the extent that he wants to be able to mitigate the privacy concerns to the extent that he wants to, along with everyone else they're hiring for Meta for superintelligence. And so this is a big setback for Apple. Internally, they claim they have a deep bench behind Pang in order to fill that gap, but the reality is they really don't. And the other reality is I'm told a bunch of these people are probably going to follow him out the door to Meta, OpenAI, Anthropic, and others. Apple pays measly amounts compared to the competition. I would guess that Pang was making around $5 to $7 million a year at Apple in his position running the foundation models team. At Meta, probably making well north of $25 to $50 million per year. I'm told his pay package is probably somewhere north of $200 million over 4 to 5 year contract. And so Apple, not in a great space right now when it comes to AI research.
Wow. Okay, so I was going to ask you about compensation, but you answered the question. You should see Emily's face and my face when you said measly $5 to $7 million a year, because I think for a lot of people that sounds like quite a bit of money. But we're talking about an AI arms race where we've seen reporting, Mark, that shows that Meta Platforms is offering $100 million signing bonuses plus annual compensation of $100 million. This is unprecedented.
When I said measly about the $5 to $7 million, I was referring to your point, in comparison to what you're seeing in terms of those offers. I don't think that's
I don't know how things work out in Los Angeles, Mark. Okay.
Yeah, I was comparing to Meta.
Okay, good. Go ahead, Emily.
Well, Mark, so you reported last week that Apple is considering using AI from potentially Anthropic or OpenAI to power Siri. So how much of that is going on in this executive departure? Is it essentially Apple just saying they're kind of seeding in this AI arms race? I mean, do they really need the top talent if they're going to make all these plans to outsource a lot of their AI operations?
It's no coincidence that Peng is leaving a week after I broke the news about this change. He runs the team that Apple is seriously considering demoting or replacing. He runs the team that Apple's top executives have essentially blamed for the mediocre performance of Siri and the LLM technology as part of Apple Intelligence. Obviously, one team believes this, another team believes that. The truth probably lies somewhere in the middle. And he's running that team. He gets an offer worth, I don't know, 10x what he gets paid at Apple, right? His team's being blamed and he's being offered 10x more money. How could you stay in that situation? You know, what Mark Zuckerberg is doing is making job offers to people that even if you don't want to work at Meta, you would be foolish not to take the money, right? I mean, they're offering generational wealth for your entire family tree for the next 300 years, potentially. You can't really say no to that, even if you don't want to work there. So he's putting people in those types of positions.
What is Meta going to do? Like, what are they trying to build here that is worth all this money?
Well, they're trying to get to AGI, right? They're trying to get to a point where the AI tools are even smarter than a human, right? And with this amount of money that they're throwing at the problem, they're probably going to end up being a big winner here, right? I think that on one hand, it's a completely ineffective solution from a cultural standpoint of building a team where you're getting people solely because of how much you're paying them rather than people who genuinely want to be there and work together, right? On the other hand, if you get the right people and you actually get them to work together effectively, you're probably going to end up with a winner here if you bring all the best minds together. So I definitely think that OpenAI and Google and Apple's not even in the AI conversation at this point, as far as I'm concerned, really should have some concerns regarding Meta's standpoint right now.
I think people don't necessarily understand the opportunity AGI presents. You know, they know that Meta Platforms is a company that still makes the vast majority, I mean, close to, you know, in the 90% we're talking about here, of the money that it makes from selling ads, targeted ads to us on Instagram and on Facebook and WhatsApp, and increasingly WhatsApp at this point. What is the market opportunity for Meta Platforms to achieve AGI? Like, how is that going to make this company even more trillions of dollars?
I mean, this could add, if they get to AGI first, and you think of everything they can do with that, I mean, this could add $5 to $10 trillion to their market cap easily. They could become the most valuable company in the world. The advantage of Mark Zuckerberg and the voting and share control he has over Meta as one of the co-founders and being the CEO and basically owning the board there is he can do whatever he wants. Shareholders are not necessarily going to push back, and it's not a shareholder-owned company like you see, like an Apple, like a Google, right? This is a company where he can make the decisions, and if he wants to throw tens and hundreds of billions of dollars at this problem, he wants to throw $100, $200 million pay packages to bring in whoever he wants, he can do that. So he does have that inherent advantage to do whatever he so chooses.
Mark, who are the names that we watch next? Now with Peng out, who is in charge? And can you maybe share with us who you're potentially watching next to be leaving Apple?
I mean, for Apple, the AI work has now been spread amongst the company. They had an AI chief named John Giannandrea. He ran AI at Google till 2018 when Apple brought him over, and he's been extensively demoted over the last several months. They removed Siri from his command. They removed robotics from his command, a series of AI-related frameworks called CoreML and AppIntense, and a bunch of other AI-related things. He essentially runs research for AI at Apple and some annotation and analytics and testing teams related to Siri and artificial intelligence. At some point, he's no longer going to be there. That's the name that a lot of AI industry people have been watching. And obviously a lot of the other researchers who reported to Peng clearly probably on the way out as well.
Mark, these are wild times. I mean, you know, I think it's fair to say unprecedented in terms of compensation. I think a lot of people are saying, is this money, you know, going to amount to something? And we'll certainly have to wait and see. In the meantime, thank you as always for joining us, Mark Gurman. He is Bloomberg News managing editor for global consumer technology. Once again, he broke the news that Apple's losing its top AI models executive as companies battle it out for dominance in AI. Check out Mark's reporting and more on the Bloomberg terminal, and give Mark a follow on the social media platforms. He's on them all. You should also subscribe to his newsletter. Comes every weekend. Power On with Mark Gurman. Coming up next on Bloomberg Business Week Daily, we are driving to the close on a day where stocks overall are kind of doing nothing. This is Bloomberg Business Week Daily.
Oh, hey guys, how you doing? Did you lock in that green snooze? Oh no, that Henrik. Make sure you lock that in. No, I took an L, and when I bought my account with Lilu, I had $1 reset and I could only use it one time. So I said, F it, and I went crazy. So I'll have a reset for tomorrow. I have a reset. It was only $1 to reset. So that was irresponsible, but I didn't want to waste it. Hey SM, how you doing? How'd it go? You feel good about it, dude? Oh. When's the position start? Are you taking summer classes? Or are you talking about in the fall? It was a, what was it? A relationship banker. He's going for like a relationship banker. Yeah. If you can get in and make it work, you'll be set for when you graduate. You'll be ahead of everyone trying to get positions. I kind of wish I'd have started out like that instead of grinding it out in sales. Don't get a sales job where you make, you know, high commission. You have a few good paychecks, you'll ruin yourself for life. Yeah, you'll get sales experience. Okay, cool. Cool, you get the in-person. All you got to do on that one is just make sure, all you got to do is show up and make sure you show them you're not like Down syndrome or anything. You just got to like, you just got to not fuck it up if you get to that one. If they tell you to come in, it's looking good. All right. What are we doing? I'm done for the day. Oh. I'm gonna work my dollar reset tomorrow. I don't want to fuck that up because I'll have to pay for another room one if I mess that one up. So I was playing around in the VWAP again when I was on the phone. ES is about to break down. You want to look at the ES? I believe you. We got nothing stopping it on my chart till 62.56. We think MOC touches 52.56. MOC. MOC's in 10 minutes. Let's watch the ES for MOC.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're all trading in the red.
Did you get out with some green there, Henrik?
20 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in a choppy session today. The Dow's currently down 149 points. The S&Ps are down 5 and NASDAQ is lower by 10. The U.S. 10-year yield is at 4.41%.
Yeah, I did.
Gold
I had a...
oil is in the green, but Bitcoin, that's higher by 1%.
Are you talking
Among
to me
the
or
SB
SM?
sectors, leaders were energy and materials, consumer staples and financials were under pressure. And leaders to the upside in the Dow, Chevron and 3M, while Nike fell 3.5% and led to the downside. Among the banks, the Kuwaiti Sovereign Fund is set to sell its $3.1 billion stake in Bank of America. And in other news, SpaceX.
How'd you finish out? Oh, you blew it.
Around $400 billion. Wrapping things up, Trump said the August 1st tariff deadline will not be extended. Live from the first to breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. One additional headline out of Washington. The U.S. Supreme Court is letting President Trump proceed with sweeping workforce cuts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
Been away from most of the
Look at
session.
that.
Took
Stocks
like
in the red, but not by much. We've got less
like
than
a
20
pedal
minutes to go
bike
until the close of equity trading
or a
here
motorbike,
in
like a
New York City.
motorcycle.
The S&P 500 down 0.1%. The Nasdaq down. We can go ahead and round that down to 0.1%. The Dow down 0.3%. We've got with us back in the Bloomberg Interactive Brokers studio, Chris Brigatti, Chief Investment
You pedaled
Officer
for
at
75 friggin'
SWBC.
miles?
They manage more than
Jesus.
$1 billion.
Was a Tour de France in
Chris,
town?
good to have you with us. You were last with us in March
Everybody's
before
on the
the
road
April
during the
2nd
Tour de
so-called
France around
Liberation
here.
Day, before the pause.
I love
a little more
watching
than a
the
week
Tour de
later
France. It's
of
like
those
peaceful.
tariffs. Before
You know, going through the
what
hills
we
of
heard
France
just
or whatever.
recently, which was the extension
The
to
Alps.
August 1st, so that July 9th deadline would not hit tomorrow for many of these countries. A lot has changed in the last few months. Have your picks changed in the last few months? Where you find opportunities?
A little bit. I'm a little bit more thoughtful about some of the downside risk. We've had a new.
Are you
high
doing
for
are you doing a
example,
top step
we've
tomorrow,
had
Snooze?
New highs of late. I'm thoughtful of the fact that the European market has really outperformed. So there might be a little bit of room to cut back
Cool.
and be more thoughtful about the value picks in Europe as well. But generally speaking,
I'm gonna
there's a lot
redo
of
my
good
Lilu,
positive
but
momentum for the
I'm not
overall
gonna-
market, and some of the tech things are going to still kind of ride the wave and really do well.
I want to talk about individual stock picks, but I first have to get
I rolled the
your
dice to
thoughts
use my
on just kind of like reflecting
basically
on the
free
market
reset.
action that we've seen since Liberation Day, because the S&P 500 is up
So I need
almost
to buckle down
25%
tomorrow and just get it done.
since
I only need $3
April
grand.
8th. And a lot of the tariffs
I got 8 contracts.
that we're seeing now are pretty similar to what we saw back then. So why has the market rallied so much and now not reacted? Is it all, I guess, priced in? Or are investors shrugging off what they previously were very panicked about?
It's kind of funny. We were talking about this earlier and discussing the fact that the market is kind of underreacting to negative news along the lines of the tariffs, for example. and almost overreacting to positive news and kind of shooting up. That's why we keep seeing these new highs. So the net effect is that the opportunity is made it very volatile. Volatility creates opportunity, but the markets generally don't like uncertainty. So we have all these kind of things coming together at the same time, and we're trying to dig through all of that and figure out where the opportunity lies. The net result
I'm on the
fact that
weekly
investors
account.
should not overreact to any change either way. Don't dump.
You
out
did
there,
186
concerned about the
miles.
market. Don't
Did you do that in
overindulge
one
and
day?
Extend into things that might be riding too high of a wave. because
That's like a
eventually
whole
they're
leg
going
of the
direction.
Tour de
We're
France.
very
That's
thoughtful of
crazy,
that down
dude.
the road and wary of when that could happen.
The president.
I
has
probably
vowed
could have
to
done
push
that
forward
when I
with
was
his
younger.
aggressive tariff regime,
I could do it
stressed he
now
would not
if I
offer
worked up
additional
to it.
extensions on
I'm in pretty good
country-specific
shape.
levies set to hit in early August.
That's crazy.
Essentially,
How
he's
long
saying
it take you to do
August
that?
1st, that is the deadline. It will not be extended.
Well, I guess it's not. Well, if you
believe
do
it?
20 miles an hour,
I put a little faith in this. 'Cause
5,
I'm
6,
so
7,
adamant
8.
about it.
Was that
So
8,
I
9
do
hours
expect
to
there
do it
be
in one
pushing
day?
of the tariffs. I do expect
186
to do it a
miles.
little harder of a line. I thought that the 90-day
Yeah.
deadline was aspirational.
That's
maybe
cool,
90
dude.
deals in 90 days.
Do you do competitions or you just like doing it?
It's so complicated. All the
Or do you have like a
minutiae
group,
details.
like a
Not to
group that
mention
goes riding with a
the
bunch of chicks in
number
it, so
of
that's why
little
you do it?
offsetting type of tariff situations that you could be
That's why I
aware
would
of
do it.
In terms of, well, we need to import more steel. We need to export more electronics.
So for Lilu
There's
SM,
so many different things that can really be offsetting
hey,
and deals could be made around.
so for
I think
I took the 50K weekly account.
expect there to be a little bit more
So
progress as we
I
move
just
into
gotta
tomorrow.
qualify. I gotta
I
make
expect
3
some
grand
of
before I
these
go back
deadlines
2,500, and I can do it in one day. Then once I'm on the
harder
payout,
to meet for some of the trade partners in terms of getting something that Trump will be satisfied with.
Steve,
So I do expect the
Steve
existing
shaved his
tariffs
beard and his head for a check 1 hour ago.
He could say, well, I'm going to dial back the tariff, but he will have something on the first.
Oh
What is
shit,
your
man!
outlook for investing in European stocks?
Fucking women will
that
get you to do fucking
outperformance
anything,
gap
man.
has shrunk. If you look at the S&P 500 has done year to date,
Oh
it's up-
shit!
up 6%.
Nice white and shiny,
Europe is
right?
up-
Not even
up
time
maybe
to tan it.
7.5%, where it previously was outperforming a lot more.
So,
It was. If you include the currency
so what was
play,
I?
though, the
Oh,
currency
the
play
payout.
added a little bit more than that, so you're getting almost 14-15% if you had the currency.
Oh, that's cool.
That's pretty good.
I not tanned it
A
off.
little more cautious on Europe, a little bit more thoughtful about
Be
where
careful,
their value
man.
in Europe
Fucking
is
put a hat on for the first couple
kitchen
days.
sink investing, buy an index,
7,600 people on different routes, road ravel. That's pretty cool, man. That's a cool thing to be part
My
of.
thoughts are along the lines of the defense industry with the geopolitics that kind of become
It's like a
have become
like a
little bit more
7,600
relevant of
person
late that really
marathon.
kind of
That's a
spurs
lot
some
of
the
bikes.
investments
Jesus.
in the
There are probably some people pissed trying to drive around in
I
cars.
think the banking industry, we've seen rate cuts
But
in Europe that we have not seen in the US that has helped outperform some of the banking sector.
So how it works?
Barclays, for example, Deutsche Bank, really good at
Yeah, that's right.
PNC was
She-
one of your picks last time you were on with us. Still on your radar?
Still on the
Oh,
radar.
shit.
Hasn't done as well as I would have thought, but I think the opportunity set is still down the road. We haven't had those rate cuts in the
That's
US yet,
hilarious.
so,
That's
they
fucking
were
funny.
also a pick simply because of the fact that they've got some opportunity to expand into the Sun Belt, Southeast, and Texas area, which really
The
we've
beard,
seen a lot of
yeah.
influx of people, and they're going to need more banking.
What about Nestle?
Yeah, I got a beard. I
Nestle,
keep it
I'm
pretty
really
good though.
disappointed
It was
that
long
it
for a
came back
while, but
correct.
I
When
figured
we
out how to
spoke,
keep
it
it
was
trimmed.
really what rode a wave. It really performed very,
So
very
to get
well.
paid
Now it's come
out
back a little
on
bit. I
the
do still think it's got some
Lilu
benefits,
50K
especially with the
weekly,
tariff situation that
after
can
you
ride through
qualify
in
it,
such a geo-national type of
you can
virus,
request a
let's say,
payout
business.
every Saturday.
It should do
And
fairly
I
well,
gotta
but I'm
check
less
how
high
much.
on it as I
I
would
think
be.
they want you
What
to
about
get a
energy
base
stocks?
amount
'Cause
in
you
there.
had picked
Let me
Entergy,
check the rules. I forget
ENT,
exactly.
back in March. Is it different now, given the big beautiful
I
bill?
think you
and
can
what
take
that
a
means for
max of
energy?
1,500
No,
out.
because the thing with energy specifically is the fact
take
that
a
we
max
have
of
a consolidated
1,500 out, I
overall,
think.
that's
Let me
going to be a
double check.
constructive thing, and any corrective pullback, utilities are a defensive type of sector, generally speaking, should a pullback occur.
Yeah, I got my
The
reset.
other
I'm good
factor
for
is that
tomorrow.
they're really
I'm not
well
going to screw
positioned in
around
an
at
area where
MOC.
Meta is putting in more AI. We're going to need more and more energy to support the AI.
Yeah, I don't
industry
think it's
as
going
we
to drop now,
continue to
dude. There's
expand
not enough
the US
volume.
and the globe, really.
But you never
So
know. It could
Meta
come
is
out of
bringing some
anywhere.
new
Oh,
factors
wait,
and
2
new
minutes, so you got
warehouses
2 minutes to
from their
MOC.
technology. They're going to need the energy to produce, and that's happening in the area that energy is very strongly present in.
Where do you not want to be?
Some of the things that I'm really a little bit more concerned about are things that are a little bit more high flying. I think you can have some pullback in some of the tech stuff. NVIDIA has done really, really well, continues to outperform, continues to perform really well. I wouldn't say I'm negative on it. It might be time to pare back a little bit, because what people tend to do is they keep riding that wave, and eventually you get to a really big correction and you give up a lot of the gains you might have had. So it's a matter of rebalancing portfolio. So I'm more thoughtful about a rebalancing situation with some of the higher tech flyers.
All right, Chris, good to see you.
Likewise.
Thanks
Glad
for
to be
joining
here.
us today.
Thank you.
Do appreciate it. That's Chris Brigatti, Chief Investment Officer at SWBC. Those were some of his stock picks, at least back in March. How he's looking at them now as well.
All right.
As far as stocks look right now,
MOC.
they're not doing a whole lot of
Mandatory
anything.
order contract. So all the people that are on leverage, that the rules for borrowing the money on leverage, they have to be out.
Is basically unchanged as
They have to be out of their positions before 4 o'clock Eastern Standard New
We're
York
also
time.
getting other headlines. The U.S. Supreme Court.
And so they all pile out
President Trump
on
moved ahead
mandatory
with
order
plans to
close.
dramatically reduce the size of the
MOC,
federal
as in
government,
Charlie, close.
lifting a court order that had
So here we go. We
blocked
just
19
hit.
departments
We
and
just hit it.
agencies
That's
from
it gets
slashing their
crazy. It's
workforces,
just like the
granting a
open.
Trump request
You know, when
over
everybody
1%
piles in
businesses
at the
on Tuesday
open.
cleared the administration to implement Trump's February 11th executive order, which opponents say could cost hundreds of thousands of federal workers to lose their jobs. Coming up next, we drive to the close. This is Bloomberg.
Oh, this is good. You know what I like with Lilu too is they only let you reset the next day, so they don't let you reset 10 times a day. So you can only use a reset. See what the payout. I think it's $1,500 a week you can take out or something like that, and then after like 5 payouts, you can do whatever. Just double check. Let's see. Oh, big nothing burger, really. 8 minutes to the close. Maybe it'll drift down. A lot of the times, MOC will just kind of rattle around a little bit. And then, it'll rattle around a little bit. And then it'll drift one way or the other. Let's see what happens into the close. But you really got to be out by now anyway, unless you got like you've got a big cash account and you're gonna swing it into the evening sessions.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. That is Emily Grafeo in for Carol Massar this afternoon. As I mentioned, well, actually, I think I said coming up next, it's Drive to the Close. I was a little confused. It's our cross-platform coverage.
Right. We
coming
just
up next.
did
Drive to the close. Yeah. So
Well,
apologies if
someone
folks
was
out there are
very
confused.
They're waiting for that music.
They are. Well, they better wait for tomorrow. Did you see or did you hear President Trump talk about Jay Powell today?
No. So he was in a cabinet meeting?
Yep.
Where was he? Or in a social media post?
This is a cabinet meeting today.
Okay.
Okay.
We were doing Bloomberg Crypto
shit,
on TV,
okay.
and we decided.
So you
also
got to
talking
go
about
10
Powell to go
days
over to
at 200 a
him,
day.
and he
And
just
then
made
you
these
have 4
comments.
trading days between
He said
each
Jerome
request.
Powell should, quote, resign immediately if allegations from an administration official that the Federal Reserve Chair misled lawmakers prove true, while deepening his personal attacks.
So you
against the
do
head of the
have to
central
go
bank over
10
interest
days
rate policy.
He called
at
Powell,
profit,
quote,
or
terrible
10 days
and told
traded
reporters
for
that his
first
allegations had
request. Then
deceived
you can go
Congress over
4 days.
renovations
Payouts
to
are
the
done
Federal
on
Reserve's
Saturdays.
headquarters proved true. It would be grounds for a swift exit. Trump
Yep.
really wants Powell.
No
Is it
scaling.
about him wanting Powell to leave, you think, or it's really just about Trump wanting to get somebody else in there to cut rates, like someone who's
Okay,
going to
after
just do
10.
whatever Trump says and cut rates? That's not really the role of the Fed
All
chair.
right,
though.
so
They're not-
you
their
have to
role
go
is
10
not to
days
listen to
and
the president.
have
Look, you read my mind, and they also don't act unilaterally.
You gotta have
just because the Fed
2,600,
let's say a Fed
and
chair
you can
was
take
in
out
there
a
who
maximum of
wanted to cut rates if the voting
1,500.
numbers
So you
didn't
got to have a
agree.
minimum of
That wouldn't
2,600 in
necessarily
your
be the case.
account after 10 days.
This is what I
Trading
would
days.
Tell Trump. Do we need to cut rates?
And then
so
you can take
urgently?
1,500 a week.
We've already had a couple cuts. The Fed markets
Every
are
Saturday.
expecting a couple cuts this year. Like even if we won't get one in July, we could still see them
You
this
keep
year.
the first
The market is up.
12,500. After that, it's at
GDP is looking
90%.
Pretty good. Job market is healthy. Why do we so urgently
Yeah.
need the cut? But I don't know.
I also
That's
think
how that one works. So you can make
the
1,500 a
Federal
week
Reserve
after
only
10
has so much
trading days.
control. You see what the bond market does
And
when it does or does not agree
you know,
with
trade
a
copiers.
decision.
Yeah.
Not necessarily from the central
that's
bank,
good.
but we saw in the words
So all
of
you got to do is
the
have a few
president
good
himself, the
days
bond
and
market
just
got a
not
bit yippy
go
back in
crazy, and you
April
can just collect your
over
money every week
concerns
until they invite
over
you
his
to a
tariff
live
policy,
account
and
where you're
reporting
trading real
indicated
money.
That indeed
You know,
helped
for
the
50 bucks, man.
president come to the conclusion that he should put that.
You know, if I
90-day
can get that
pause
qualified for
on
50
those April
bucks, that's
2nd
pretty
tariffs.
reasonable. That's like,
So,
it's not really
I don't know,
that
I think-
hard.
Look, this is not any different than
The
what
only
we
hard
said
part
about
is
Jay
not
Powell
going full retard.
resigning in the past few months. A reminder that he was the person who did appoint the Federal Reserve Chair,
2,600?
during
Not
the
really.
Bush
They give you
administration,
8
and he was up,
contracts.
again during the Biden administration. President
Yeah, and
Biden
Top
at
Step,
the
you
time
automatically go to
reappointed
live
him, and it was
after 5
confirmed
withdrawals. I
by
like that,
Congress.
though.
He did
That's
mention
why
a
I'm
social media post. He
disappointed
did-
that
the
I can't
president did
use
come out with
Ninja
a
Trader
subsequent
anymore with
social
Top
media
Step.
post. He accused the Fed chair
Activation fee is
whining like a
one.
baby about
Oh no,
not
I got
using
a
inflation
discount
pronouns
on my
and refusing to do
activation
the right
fee.
thing. Cut interest rates, Jerome. Now is the time.
And that was in
What
all
is it? I
caps. I
paid.
don't know.
They had
I
a
don't know.
deal
I have
on
to admit,
activation
I don't
fee.
know much
Hold on, I'll
about
tell you
the
what it
Federal
is.
Reserve headquarter renovations. Our Bloomberg News writers have written that some media reports have asserted that the Fed's renovation of its headquarters has seen swelling costs and includes several extravagant features.
I think
And
it's
Fed-
like
Fed budget documents for
$120 or
2023,
something.
did
It's not a
attribute
lot.
rising renovation costs to increases in raw materials. So the Fed is also not immune to, of course, rising inflation and
What was it?
commodity prices rising. So maybe that's why it was more expensive. But we'll have to tune back in.
Hey, just wanted to bring everybody a headline that we got in the last few minutes. The
give me a
Supreme
minute,
Court has
check.
let the president proceed
got a
with
lead,
a
hold
broad
on.
workforce cut. The U.S. Supreme
Yeah,
Court
the
let
trailing
President
is
Donald
yeah.
Trump move ahead with plans to
Yeah, you
dramatically reduce the
you gotta
size
keep
of
it
the
tight.
federal
You gotta
government,
keep it tight and
lifting a
take
court
profit.
order that had blocked
But they
19
release that
departments
once you get to the
agencies from slashing
2,600, that gets
Granting a
released.
Trump request over one dissent, the justices on Tuesday
Like in the paid account. So you just got to make 3,000. You got to make 3,000 before you go back a total of 2,500. So that means if you're up 3, 4, 500, you just got to get behind it and take it off and make another good trade.
Terminal. Coming up next, we're joined by our Bloomberg TV team for our cross-platform coverage. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Shonali Bassick here to take you through that closing bell with the global simulcast. It has already started. There's Tim Stenovic
So,
in the radio booth, Emily Grafale.
really, dude?
For Carol Masser. Welcome to our audiences across all of our Bloomberg platforms. An unchanged
What is
day
it?
on the S&P 500, Tim Stenovic, but a little bit more activity in the small and mid-cap.
My
stocks.
funded
Yeah,
futures.
We've been talking about the Russell 2000 all day today. We are seeing some activity there. I think investors still have a lot of questions about tariff policy. I've been asking our guests throughout the day
3,000.
today,
But you,
are
yeah,
these
you can
letters
do 3
providing more clarity?
contracts.
And one after one, people are saying not necessarily.
Yeah, this is kind of like
You know, it's funny. I wanted to look at
reset
the
fee is
Russell
97,
year-to-date, and
scaling
the
rule.
little bit of a bid you're getting today brings you to almost flat.
What's
Now,
it cost?
isn't that a fascinating stat?
Also in the commodity space, there has been some movement. Look at copper prices up over 9% right now. Of course, coming after that tariff news from Trump.
Yeah, I think
50%
SM is
tariff
used this,
on
or somebody else. Somebody else
Yeah,
was
and of
telling
course,
me
the
about it
tariff
too.
news, I mean, we did see a big down.
I might try it.
stocks when we
I
started
mean,
to get
honestly, I'm gonna
some
like I use
comments
Lilu.
first
Lilu was the
from
first
a
people I
social
used.
media site, and then later at that cabinet meeting, and it really is
So,
just a reminder, Tim, of this idea that
If I don't
the tariff
pass the
issue
one
is
I'm
far
on
from resolved, and
and the sale is over, I'll
potentially
probably try
poses a
this.
risk.
What's the activation fee,
I think that's
Henrik?
what, you know, the big
Yeah,
question
SM.
people
Didn't you
is
have
the
one through
obvious
them, or
first
was it
step, I think.
Bullinox?
I mean,
You
speak
you
to
qualified
folks
one, didn't you, SM?
every day who basically say, well, he hasn't necessarily followed through on these tariff promises, and we just spoke to
0.
Chris
Well, that's a good
Pagani
deal.
over at SWBC.
Like, how
He's
long
like,
can you
this is
take
one he's not going
payouts,
to extend
or
August
is it
1st.
is there a
That
limited time
actually
for
gonna mean
payouts?
something.
And if you listen to his comments
Or
at that cabinet
future
meeting,
funding.
and I actually
What
really
is this?
encourage
My
people to go back
funded
and listen to
futures.
it. A lot of rambling, but in between that, he did make some very salient points about his philosophy on tariffs and trades. Of course, harkening back to President McKinley, and in his view, how that tariff situation, in his view, worked out. Let's take a look at the numbers across the board. Not a
5
whole
green.
lot of action there with the S&P and
Okay.
NASDAQ. We're just going to call it an unchanged. The S&P
Yeah.
does have a red arrow, but only down about 4 points. The NASDAQ does have a green arrow, but only up about 6 points. The Dow Jones Industrial Average decidedly in the red, down more than 160 points or 0.4%.
Yeah,
And the
I'm
Russell
just gonna-
2000
I'm gonna-
decidedly in the green.
I'm gonna
up
stick with
100
Lilu.
up
I built
14
my whole
points,
strategy
or
off
7/10
Lilu, basically trying to
Still
take
did have
profit off.
269 stocks in
You
the
know what
S&P
really fucked
500
me up,
moved
man,
higher
is
today,
going to
whereas
Apex, because
231
they'd let you do anything for like no money.
Sectors
When they
as
were
well,
running that
because even though
250K,
the
you'd have like
sectors
30
here show you
contracts.
a little bit of red on screen. Obviously, it was enough
You
to
know,
drag
you
down
had
the
like
index here. You did have the
$4,500
which was yesterday's gainer, and the
drawdown.
safety trade in the market
So you
down
could just
more
let
than
the
1%
trade
on
run,
utilities
add
and financials
contracts,
also
and
lower
get
by
through.
almost 1% or
And
more.
then they
NG
fucked
was
me
your gainer
on the
of
ghost
about
trading.
2.7%
That whole thing
on
really
the
messed
day,
me
so
up for a
very,
while,
very
man. I gotta be
mixed
honest
trade,
with you.
even though you had
Yeah, I
an
know.
index that showed roughly flat.
I wish I
Well, let's get
hadn't
to
have
some
went
of the
over
gainers
from
today. I wanna
Lilu.
start
It just
with
really
semiconductor
messed up my
stocks.
whole
I just went
thing.
and chose the entire stocks, the Philadelphia Stock Exchange semiconductor
But if you can just
index.
take profit
We saw
off
shares of
and have
semis,
and like use your
rise
A
today.
plus
The group
setup,
outperformed as analysts expressed
you can get through at
optimism
Lilu.
about
I
the
passed
group's
many
prospects
many
as
at
U.S.
Lilu, and
Securities
then
raised its
I'd
price
just
targets
go
on a
and
number
blow
of
my
chip
fucking
makers, KeyBank
PAs.
Capital Markets also raised targets on a number of chip makers. If you look at the stocks right now, of the 30 stocks in there,
But if you can only take
27 of them
1,500 a
are
week
higher,
out
3 of them
and they let you
lower.
have 8
Intel up
contracts,
7.2%,
you have a
Foundries
couple of
up
really big
7%
trades.
on the downside.
Then you
Broadcom
just
trading
gotta
down
like make a
9
couple
tenths of
$100 a
1%.
day and just collect your
Also,
money
Emily
out. You
mentioned
know what I
copper
mean?
stocks.
Until they
I'll go
invite
with
you to
Freeport
live.
McMoran. The shares jumped as much
You know,
as
you just gotta-
8% earlier in the session. They
You know,
moved lower after that.
Can't be trying to hit home runs every day, but if a home run's there, grab
Finished the day
it. You
down
know?
over. Finished the day higher rather by over 2%. This after President.
Did you
Trump's
try
plan
them yet,
imposed
or did you just read the
50%
site?
Tariffs on copper.
Did you know there are people?
I'm not trying to sell Lilu or anything. It's just they happen to be the first ones I tried, so I stuck with it.
You know, it's funny you say that. I did not know that.
Okay.
But I did learn something about coins today, and I'm glad.
But
you
this
brought
my
this up.
funded futures
Charlie
thing,
Pellet told
that looks
me
pretty. I have to read the
that in
rules
the
on that,
US,
like how the
we do not
payouts,
have
like how much they.
the actual number of cents that a coin is worth on that coin. Like a dime doesn't say.
Well, the
10.
trailing
A quarter
draw,
doesn't say 25.
or the what's it called, the static draw,
Hey, you know what? We're a little different. We're a
is
little
hard.
different.
I ain't gonna lie, it's hard.
Hey, I want to end with a stock.
And
that really
honestly,
has
the only
success
account I would do with them
rotating.
is the weekly.
Shares
I would
soared
only do the
the
weekly
most ever. Look at this, up more than 500%.
because then I could collect money every every week.
It's a drug
Otherwise, they
developer
make
gave
you wait a whole
top-line
month.
results
So
from
with
a mid-stage
Lilu, the
trial
only way I
of
would do
its
it
experimental
is
therapy
on
to
the
treat
weekly.
kidney disease. The company reported statistically significant and clinically meaningful positive top-line results from a full Group 1
Well,
meat
I might
intent to
try.
treat population of a phase
I might
2
try
trial.
doing Top Step X and just
It was
enter
good
the
news.
trade on their
Investors
DOM
loved it. Look at this, up more than 500%
based off
ticker
the
PROK.
NinjaTrader strategy I had,
That
you know,
was
off the
incredible, Tim.
forecast
Let's go to
strategy.
the decliners, though. FICO, Fair Isaac, but known colloquially as FICO, fell 9% today after federal regulators said government-sponsored mortgage entities Fannie Mae and Freddie Mac will be able to use an additional firm when determining borrowers' creditworthiness. So they were using FICO. Now Fannie and Freddie will allow lenders to use Vantage 4.0, their credit score, to increase competition in the credit score ecosystem, at least according to what the regulators had to say. Vantage is a private company, so we couldn't see how the shares performed, but we did know that this was weighing heavily on FICO. I'm also watching shares of Hershey, down 3% closing the day. Yeah, down about 3.2% after some management changes. The snack food company named Wendy's CEO Kirk Tanner as its CEO, replacing Michelle Buck. This is going to be effective August 18th. The reason why the street was so negative on this is that Hershey announced back in January that Buck would be retiring in June of 2026. And so the timing of the appointment is somewhat surprising, and the transition was almost a year early, so shareholders didn't like that. So we saw that stock falling. And then finally, First Solar. It's been a wild ride here for the solar stocks. Today we saw First Solar down, closing the day about 6.5% lower after President Donald Trump called for new rules that would
Yeah, but I wouldn't
restrict
use the
access to
chart,
tax
SM. I
incentives
just
for solar and wind
I wouldn't use the
projects
chart
that
at
were
all.
already pared back in that big beautiful
The strategy I use is completely programmed.
Movement that we saw in the S&P 500. One up
Like
here,
if I
take a look at the
if I
bottom
could
of
have
the
somebody
Treasuries,
program
basically
it to
doing
work on
nothing
Top
today.
Step
Yields are
and then
higher across
license
the
it, I
board, but
might
only
do
by
that. But
about
they're
1
not.
to 2
They
basis
don't do
points
stuff like
as you
that.
pick your point on the curve here. So
I'm
a
married to
little bit of stasis that
NinjaTrader,
we should
dude.
point out.
I
Most
just
of
got
the
too much
activity
money in
the
it.
Treasury
I'm married
market
to
actually
it.
came during the European hours here, so it's basically been stasis.
The only way I could do Top Step X is just build their ATM strategy out and enter the trade on there.
But there's a little technology in it as well.
Does it involve rats?
It doesn't. No, New York City is one of the biggest ride-hailing markets in the United States. And now, if you're in New York, you might start seeing Google's Waymo vehicles driving around because they're starting to test them here.
Oh, yeah?
But they have people behind the wheel. They're just gathering data.
Yeah.
The company sent out a social media post. They said, be sure to give us a wave and snap a pic if you see us in the
That's what
city.
they said?
And you're not just giving the Waymo a wave. You're giving the person sitting in the driver's seat a wave
Do they know we don't give waves here?
Yeah, I was about
in
to
New
say,
York
I
at
mean,
cars?
they're going to get a wave, but I don't think it's the wave that they're looking for.
Exactly.
So as somebody that drives daily in New York City, the problem is actually not the cars, right? Like there's so many people.
It's the drivers?
And the people, right?
Okay.
I mean, jaywalking is a real thing in New York City. So it's a really interesting city to be trying this in. There are a lot of bikers, as you say, too. So again, I drive every morning in the city.
Can't trust those guys.
It's a lot to handle for a driverless car out there.
Yeah, I'm actually looking forward to this. I think anything possibly to improve traffic in this city, I'm definitely all for. I'm also keeping an eye on gold, Timothy. We were just talking about copper. But did you know that Tether, this is the big stablecoin issuer, basically one of the two big publicly traded ones out there, apparently they've been hoarding $8 billion worth of gold in a secret Swiss vault. And I'm glad it's secret, because if it was public, that would be trouble. But it really gets to this idea. This story really captured my attention because there's been all this talk about stable coins, of course, with Circle recently going public. And the idea that you can't have a stable coin unless it's, actually backed by real assets, presumably dollars.
Yeah,
or
well,
maybe in this case, something
You
that
see
they
the guy
can
I kind of picked this up from, he used NinjaTrader, and that's kind of why I used it.
What was backing Tether or what is backing
And then I
Tether?
just built it
That's
out
been a
from
big
there.
concern.
It's been a huge concern for a while. And
Well,
think
I
it's also
understand why
the
people
run-up
don't
we've
like
seen in
it.
gold prices.
1,000%.
Remember, there was a big
I know
period
pretty
where it
much
just didn't make sense,
everything,
economic
every
sense,
bug
as to
in
why
it and
you were seeing
everything,
such a
but I
surge.
completely
And maybe
understand
this
why
helps
people
to
don't
start
like it.
explain and
I
it
can
might
tell
not
you
just
that
be
for
Tether.
sure.
There might be a lot of other
But
folks
you
out
got,
there
but
that
it is an older program,
what
so
happens
it's
then to
been
the
in
price,
development
or
for
how
I
much
think
that stablecoin is worth if the
15,
price
20
of
years
whatever
now at
asset you
least.
have underlying
So it
it
does a
goes
lot
up.
of stuff. So if you're new to it, it takes takes some time to figure
I
it
do.
out.
I was asking Shonali because she
Make it
hosted
work for you.
We've seen depegging, but just another fun fact to leave in your minds, guys. Tether itself was the 7th largest buyer of U.S. Treasuries last year, even ahead of most major countries.
And you can develop with it. It's like open
safety
source, so you can develop stuff for it. So I think a lot of people like it for
If I buy
that.
a stable coin, does it say
But-
on the coin how much it's worth?
There's no stable.
There's no right way or wrong way if you're making money.
Romaine always brings it back.
That was good.
All right, we're going to have to leave it there. That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We'll all be back tomorrow, same time, same place.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Emily Grafeo. I'm Tim Stenivek. Emily in for Carol Masser this afternoon. Happy Prime Day.
Yeah.
Do people say that?
I don't know. I think we're kind of grasping for straws here, but yeah, I guess happy Prime Day.
I don't know. Happy Prime Days. Here's an interesting stat. Ed Harrison passing this along to us. Remember what he said yesterday about Prime Day sales? Watch them closely. Amazon's Prime Day sales fell almost 14% in the first 4 hours of the event compared with the start of last year's sale. This is according to Momentum Commerce. It manages 50 brands in a variety of product categories. Merchants and analysts alike are watching the sale closely for clues to the strength. Of the
I
US
agree.
economy,
That's probably why
as
they
well
broke
as
it off,
consumer
so people
sentiment.
couldn't.
Also
So people
watching
have
the
to
sale
commit
closely,
to
Bloomberg News
Project
technology
X.
and e-commerce reporter Spencer Soper. He joins us from our Seattle bureau. I like to call him our man in Seattle.
I never really
who
tried
covers
to use it.
Amazon
I
and
never
all things
played with
e-commerce.
it.
Spencer,
But I
is it-
might.
is
I
it
might
fair for us
if
to read
if
into
I f up
these
this
first
Lilu
4
one,
hours,
I
at
may
least
go
according to
over
data
and
from
just
Momentum
experiment
Commerce?
with
Not
to see
really
if.
but we did anyway
Okay.
because it's a 4-day event this year, as opposed
But
to
I
2
like
days.
having the chart
So it's
trader
still
on
interesting
Ninja
to see
Trader,
that
though. You know
out
what
of
I
the
mean?
gate, it
I
was
like having the
soft,
chart
but
trader.
they've spread this over 4 days now. So the question
Oh, okay,
is,
dude. All right,
is there
Henrik.
less of a sense of urgency among shoppers, like, oh, that's a
We'll
good
see you
deal, I
tomorrow
better
if
buy
you
it
stop
now
by, man.
before we run out
Have a
of
good
time.
night.
And has that been replaced with more of like a treasure hunting? Oh, let me
Make
put
sure
it in
you
my
turn your
cart
light on in your
come back
bicycle.
later and see if there's something better. That
If
sort
you're
of
riding
thing.
home.
Might be a little bit more of a laissez-faire attitude toward the toward
Take
the
it
deals
easy.
this time because it's 4 days.
Why is it 4 days? And then additionally, Tim and I were talking, and we
Yeah,
we
I
feel
think
like it's always
I think you're
Prime
right. I
Day.
think the
Maybe that's because now there's more than one.
I think
day,
there's more
but
traders,
It feels like it's always Prime
like
Day.
more
Is that a
online
coincidence?
traders.
Are we going crazy? And we're
Probably.
just
I think
noticing?
there's more coming in
You've
that
just
are
given
younger
us a
than
window
that
into the
have
void
been
in your lives.
that have been in the
That
space.
day is Prime Day, but but it's a fair point, right? Amazon's got these sales all through the year now, pretty much like quarterly, catered around different things. But this is still the original Prime Day that they launched in 2015 to try to get sell more Prime memberships and retain existing Prime members and offer them something. But yeah, there is some fatigue here. And in response to your question about why is it 4 instead of 2, it started as just 1, it grew to 2, and that now they're going for 4. Competitors like Walmart has like a 6-day deal that kind of overlaps with this. Target has a week-long deal. So it just seems like they're trying to stretch it out a little more, maybe thinking that that they're losing sales on these other non-deal days when competitors are offering deals.
Spencer, you also wrote a story today, published early this morning, about how Prime Day is slamming into President Trump's trade
let's
war.
see here.
Ever-shifting tariffs are prompting some brands to
All right,
sit
that's
out the
pretty much
summer
it, in the
sale
center of the
and some
chart.
shoppers to drop hints that they plan to pull back. How have tariffs affected what's sold on Amazon?
Yeah, well, you just think about how, tariffs, they're here, they're there, they're everywhere, they're on again, they're off again. It just made planning nearly impossible. And so if you're a brand and you're heading into what might be a soft, holiday season, do you want to unload inventory now that's already in the country at a lower tariff price point? Or do you want to hang on to that stuff a little longer and sell it for a higher price and maybe protect your margins? So those are the deliberations that a lot of brands are doing now. And you're also seeing that the shopper appetite, shoppers are inflation battered. And I think we saw a survey that 1 in 4 shoppers were just going to skip Prime Day, not even really look. Is that people are buying like groceries and essentials. It's like, all right, let me just stock up on the stuff that I need if I can get a good deal, but I'm not really shopping for a big ticket item.
Libby Cantrell from PIMCO on our air earlier today reminded us that at the start of the year, tariffs, the baseline tariff rate across products in the U.S. had an average of 3%. Now it's
it's 120 for the lifetime.
Kind of changes all the time. Have we actually seen prices go up on Amazon products that are imported to the U.S.?
Amazon said that they haven't noticed any appreciable price increase. And yeah, then that's another
If I don't
thing.
make
We
this
haven't
account
really
work
seen
and the
price
sale
increases.
goes
But
away,
when
I
you talk about
probably
brands
will
planning for a
try
big
something
event
different.
like
I might
this,
try that
for them, they're
futures
thinking,
funding
okay,
or
you know what,
whatever.
I'm looking at probably having to gradually
gonna
ratchet up
save
my
that.
price on this, $35 item to $45 to offset the tariffs. Do I really want to discount it to $30 when I'm about to do that? So a lot of them are just sitting out because of this tariff uncertainty and not knowing precisely where prices are going, even if we haven't seen a sharp rise as of yet.
Spencer, I don't know where you found the people that you interviewed in your story, because this
It's
is such a
11?
niche
Jesus,
product,
dude.
but I love it, and I want you to tell us about
That's late, man.
this Amazon
I
seller
appreciate you
who-
hanging out,
who
dude.
makes
That's awesome.
decorative ice cubes. Or no.
Are you in
They
trade like the London
sell
market? Is
aluminum
that what you do? You
trays
get up
that
early,
make
trade
decorative
London or
ice cubes
something?
for a cocktail connoisseur. But it sounds like this is giving us a window into how brands are reacting to tariffs. So maybe you could walk us through this very niche
Yeah,
product.
this is
Shit,
a
man.
really good example of how a business might think. And this is a
Do you
small
sleep during the
business who's trying
day?
to find a niche.
Or are you
It's sort of like a
probably
nice Father's Day gift or something. It's an
midday
aluminum
US Open?
tray
Oh,
that'll
okay, yeah.
carve, like, squiggly
That's a good
lines with
schedule
different
if you can do
patterns
it. That's pretty
into an
good.
ice cube. So it's a nice. It could be like a nice gift if someone is really into their
NOP.
bar, into making cocktails. And it's made of aluminum, so it's subject to these 50%
Like
tariffs.
1 at night
And,
till 9 in the morning,
ordinarily,
so
he's
8
been selling on
hours.
Amazon for
Oh,
years,
okay.
and ordinarily he will sell
That's
his
your
products at
sleep.
price just to try to.
Well, that's
almost as a
that's
marketing
that's
campaign,
cool.
So he'll sell them at cost to try to generate some awareness. He's just saying, I can't afford to do that this year. He's looking at.
That's
raising
like
prices,
working
starting
midnights
about
at the
$10.
or you're
He's like, I'm
sleeping.
not gonna
So
try
you're
to
sleep. Yeah,
discount
so
it
that's
when
like
I'm,
work.
2 days
That ain't
later, I
bad.
have to turn around and raise the price.
How important is Prime Day?
It's
to
like working
Amazon
4
these
o'clocks at the
days?
plant.
I'll remind everybody.
My dad used to
the
work the 4
profits
o'clock
that
shift.
Amazon makes are still at AWS, right, Spencer?
Yeah, most of the profit comes from AWS, but Amazon Prime Day is still an important day, and now it's just kind of cooked in. I mean, every year they've got to meet last year's threshold or do a little better to keep the top line
Yeah, that's
growing.
good.
So it's a very important thing. But the main thing is about Prime memberships, because that's where people who pay $140 a year for Prime membership, and they have very good penetration in the U.S. population with that. Those people spend, somewhere like 2
It's
times
good till you find a woman that
more
nags
on
and
Amazon
complains
for a year
about
than
the
non-Prime
hours.
shoppers. So a lot of this is about attracting those new Prime members and retaining the existing ones by offering them some exclusivity around this deal.
How is Walmart doing in competing with Prime, and how's Target doing?
Oh, I gotta find. I'm gonna save that.
Walmart's doing better than Target, and
Funded
Walmart
futures.
definitely gets the grocery spend, shoppers' grocery spend, and that's something that people are really focused on. You got to
Let's check this thing
You
out.
don't necessarily need the ice cube tray. So Walmart's doing quite good, and also has its own competing membership program with Walmart Plus, and so that comes in at a lower price point than Amazon Prime. And they also offer free grocery delivery, which Amazon doesn't offer in a lot of areas. But you're also starting to see this kind of geographic distinctions between Walmart country and Amazon country. Largely
All right,
centered
funded
where Walmart
futures.
stores are.
When we get some information from Amazon, will we get a good window into how consumers are doing? Like, how do they typically communicate how well Prime Day is going?
We won't get much of an indication at all. They like to say, like, record breaking. They'll find some record that they broke, and they'll like tell us how many Instapots sold per hour or some kind of metric like that. That's kind of like funny to talk about, but they don't really give the clearest indication of how the day went overall.
Yeah, I remember covering Amazon years ago, and we'd get these like charts or graphs from them that it would have no labels on the y-axis.
All right, what do we
so
got
you would really
here? How it
never know, like,
works.
how much it was selling of a certain thing. But I'm kind of dating myself there. Spencer Soper, always good to see you. Thanks so much for hanging out with us this afternoon.
Dude is,
That's Bloomberg News technology and e-commerce reporter Spencer Soper. He covers Amazon and more from our Seattle bureau. Coming up next on Bloomberg Business Week Daily, we
the dude
are
looks like
talking
who is
about
that?
small business
Kid and
with
Play.
the head
This looks like
of
Kid and
GoDaddy
Play back in the day, but with
Independence. That's
glass,
next
but
on
with
Bloomberg
glasses.
Business Week.
So okay, so so this is you can do a rhythmic connection with them. It looks like. Payouts as often as weekly. No max or min. All right, let's look at the different plans. So what are the different accounts? They only give you 2 minis. Yeah, that's okay. Max end of day trailing. Okay, so after 5 payouts, are you just done, or do they send you to live? I wonder.
It's 421 on Wall Street. We
You go
check markets
directly to live?
all day
Well, that's
long.
not a bad
Bloomberg,
deal,
The Dow, the S&P lower, NASDAQ higher today. Copper surges. And this Bloomberg Business Flash brought to you by Oracle. Attention, growing
With
businesses.
what's left in your
Oracle
account.
is offering to cut your current cloud bill in half if you move to
It's a milestone.
Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. S&P 500 index today did decline 4
1
points.
second, I gotta make an email.
62.25. A choppy day with the S&P ending lower by less than 0.1%. We'll call that a little changed on the day. The Dow down 165, down 0.4%. NASDAQ up 5 points, also little changed. 10-year 4.39%. The 2-year 3.89%. Spot gold down $33 the ounce, down 1%, holding just above 3,300, 33.03. West Texas Intermediate crude up 0.5%, 68.32 a barrel on WTI. Big news in the commodity space elsewhere, with copper surging today by 9.3%. Again, recapping here, stocks lower, S&P down 4, drop there of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Small and medium-sized businesses help power this economy. According to the U.S. Chamber of Commerce, small businesses in the U.S. are responsible for providing employment for half of the American workforce.
Stocks taking
and they
off.
represent more than 43% of the GDP of the U.S.
It's really inspiring.
It's
Tim.
huge.
Yeah. People come out, they have a small business, they have an idea, and they scale it. We see it a lot in the ETF world. So I always think
Increasingly,
about
what they're
small
doing
businesses.
these days is they're doing it online.
Mhm.
And that's where Gaurav Pani comes in. He's president of independence at GoDaddy. A reminder, GoDaddy provides a broad range of online services for small and mid-sized businesses. Think internet domains, website hosting, and more. The company's got a market cap of around $25 billion and serves more than 20 million customers around the world. Gaurav joins us from Seattle. Good to have you on the program today. President of independence at GoDaddy. Can you explain what the independence portion of GoDaddy is?
Thank you for having me here, Emily and Tim, representing GoDaddy. Independents are businesses that make up to $1 million a year in revenue. They are the hyper long tail of small businesses in this country, but it's remarkable to see how resilient they are and how successful they have been by just demonstrating their tenacity.
So how are they doing in the US right now? I understand it's a global company. You serve customers around the world, but we're constantly trying to use alternative data, get anecdotes from people such as yourself about how companies are weathering what's happening right now.
Look, this is a shopping moment right now that we're going through that is no different than Black Friday or Cyber Monday. And these micro businesses have become very innovative. They've figured out that this is an opportunity for them to reach audiences across platforms. And the reason they work
All
with
right.
GoDaddy is
So are these all different plans?
whether it's
Mile
in the
installment
marketplace
plan.
or on social media or on their own website. And they've figured
Phase
out
one,
that
focus
by
on
using
researching.
retail techniques with pricing and promotion, they're able to bring customers into their website and then help them by messaging post-purchase to retain
How much does
and
it
get
cost to do this?
additional bookings directly so that the lifetime value of their customers goes up.
See, they just don't
We
want you
also
to
talk a
make
lot on this
like
show
all your
about
money in
AI
one
and
day
how
on an all in,
various
like a
businesses
YOLO
are
or
leveraging
a
it. A
fucking
lot of times we're
full
talking
port.
about
They don't want you making all your money on full port
companies
Friday.
and their AI strategy. When we're talking here about micro businesses, though, where is that AI opportunity? How right now in 2025 are these like ultra small businesses that you're working with actually using AI? Can they afford it? Can they afford to use it at scale? What are you seeing?
The beauty of generative AI is that it's a great leveler. It's trained by data that is available in the internet. And in the past, this type of information was only available to large corporations. And now small businesses are able to use generative AI to create content for social media, for their email campaigns,
funded.
merchandising on their website. And they have become
Now I wanna
very
see the
savvy
plans.
and adept at using these technologies
Where's the
really
plan
fast
pricing?
and get their message out to the masses. And in fact, what we've seen with our product GoDaddy Aero is that our customers who use GoDaddy Aero for their marketing and sales functions end up selling 43% more than those that do not. So there's a clear line between the usage of generative AI and the value that our customers are getting as sellers on the internet.
We understand about 3 million customers were using GoDaddy Aero in early 2025. Can you update us on that number?
We're really close to earnings, and as soon as we get there, we'll reveal more information. Obviously, because of the timing, I'm not able to share that. But what I can tell you is that GoDaddy Aero has been really successful in helping our customers adopt generative AI and also to automate their businesses in ways they had never done before.
What about average revenue per customer as a result of GoDaddy Aero? Are you realizing a price lift from Aero at this time?
Where's the pricing?
I think, again, being so close to earnings, it'd be very hard for me to give you that information. But what I can tell you is that the value that our customers are getting and the verbatims that we get back from them make it very clear that we must continue to invest in generative AI and GoDaddy Aero and create more value for our customers.
What AI are you incorporating here with Aero? Are you using
good question.
ChatGPT? I mean, that's the one that comes to mind.
We have so many different models underneath the covers. what we do is we look for individual functions or workloads for customers and find the best capability out there across many different models. You mentioned ChatGPT, but Anthropic has other models, and we use models from.
Do I gotta
Amazon.
just
There's
make a like an
lots of different
account or
capabilities
whatever,
that
or
we
put my
use
information in to see what it costs
text,
to
images,
sign up for
other
these?
types of content, video. So it's not just a single model that we're using. We
Guess I
do
will if I
invest
have to.
quite extensively, and what we do that's our differentiator is our own data helps
Signups.
enrich what you would get out of traditional models that are available on the internet to give much better results to our customers.
I'm sure this is definitely an evolving kind of project. And I'm wondering what early adopter feedback you've gotten so far, and whether on Aero specifically, and whether that's influenced, how you're developing this product.
We
All right, I'll be
do
right back.
customer surveys, and obviously the first question we ask is how many of you use generative AI?
Well, I'm not gonna
in
sign
your
up. I'm
business?
just gonna see what
And
it
when we first
costs.
started
I'm gonna
asking
wait
this
to see if
question a few
I'm
years
gonna
back,
like. I like the
there were a
Lilu one I'm
handful of
on,
people
but
who would say
only
yes.
with
And at this
the
point, when you
special.
look at any forum,
So
there'd be a handful
for
of people
50
who
bucks,
would
I'd
say
rather do the
yes,
Lilu.
yes. And so the
But I want to see
shift
what it
has
would
been
cost because I
quite
think I'll try this
remarkable,
next. If the
when we
like,
look
if I
at
blow up the
adoption
Lilus, I'll
rates for
probably
small
try this
businesses
next.
in using
Yeah, I'll
AI.
write down the
What they
the
are doing
promo
right
code.
now
All right, I'll
is
be right
looking at
back.
many
I gotta
different
take a
products
leak.
to solve their problems. And based on that being a fragmented experience, what we've focused on is bringing everything together in GoDaddy Aero into a single umbrella, single product, so that our customers don't have to jump screens and change context when they're trying to solve their jobs to be done.
How much human input is needed for Aero?
It depends. I think some of the things, like when you buy a domain, obviously you have to describe what type of business you want to start and where you want to start it possibly, and it recommends a bunch of domains for you. But once you pick the domain, the website is built completely with automation, with generative AI, without the customer having to provide too much context, because just identifying the domain is sufficient for us to build an entire experience for the customer without them having to do any additional work. Now, we always allow customers to edit and change to make it more personalized for their needs, but ultimately, we want to make sure that we can solve our customers' problems as fast as possible, take away the blank slate problem so that they're not starting with something that inundates them with too much demand, and they can move faster by looking at a prototype that's built for them in seconds.
When you talk to your small business customers who are now using AI, do they mention potentially needing less employees because the AI is replacing some of that work? Or are they potentially maybe hiring more engineers or people who know how to use the AI?
When you look at our customer base, these are micro businesses that have up to 10 employees at most. So they're already very unsure
All right.
in solving the problems they need to today. The problem
I'm
that we're
back.
solving for them is not by reducing their workforce, but by giving them tools and capabilities that
I'm
makes
feeling-
their workforce even more efficient.
Filling this
Typically, when you
out.
look at someone who's solopreneur or they have 1 or 2 employees, the problem they're trying to solve is not how they reduce their workforce, but
I'd like to find a
how they
place
make
I
their
can get
workforce more
actually
efficient.
funded live,
So
and
what
then like
happens is now AI becomes an
they can
ally
maybe
for them
sponsor
to
the
grow their
stream.
business and scale out versus it being a cost reduction
And
mechanism.
I'll pimp
You
their
guys have
stuff
some
and
serious
sponsor. They
competitors
can
out
sponsor
there.
the stream.
GoDaddy definitely has the name recognition, but Wix, when it comes to
That'd be cool.
design, Shopify in e-commerce, I would say Squarespace perhaps is considered a competitor to GoDaddy. How do you differentiate yourself?
Look, I'm sure there are people out there beyond the names that you listed that are doing an incredible job. But what I do know is that we have over 20 million customers in our base, and they have been sharing information with us for over 2 decades. And so our data tells us what we need to do to set our customers up for success and help them completing their jobs to be done. Our focus is very much on our customers. We don't look at competitors really. I personally look very much at our customers and get their feedback on an ongoing basis. And I'm sure our competitors do the exact same thing. Ultimately, it is a huge opportunity in the world, and there's enough for everyone to grow.
Gaurav Pani, president of independence at GoDaddy, joining us from Seattle. Gaurav, come back after earnings. You can talk more about the numbers. We appreciate your time this afternoon. Thanks so much for joining us. If you are watching us on Bloomberg Originals on YouTube, you'll probably see a picture of the White House imminently. President Trump is saying he would meet again with Israeli Prime Minister Benjamin Netanyahu today to further efforts to secure a ceasefire in Gaza following new momentum after a U.S. proposal to temporarily halt the fighting. We are expecting Prime Minister Netanyahu to arrive at the White House in the next few minutes. The meeting was set to happen at 6 o'clock, but it was pushed to 4:30.
Okay. Well, we did have Netanyahu meeting with Trump Monday evening when the president hosted him for dinner at the White House. And of course, this Washington visit comes as Trump pushes for an end to the fighting between Hamas and Israel. And it's raising hopes that a deal is near to end the conflict that has raged since Hamas's attack on Israel in October 2023.
Right.
It's now 4:34. So what did they say, 4:30? We're still waiting.
Still waiting. Hey, while we're waiting, we're getting other headlines. A big headline from Apple. Apple has named Sabiq Khan as COO, succeeding Jeff Williams. It's part of a long-planned succession. Jeff Williams will oversee design and health initiatives until the end of the year when he retires.
And he'll continue reporting to Apple CEO Tim Cook and overseeing Apple's world-class design team and the Apple Watch alongside the company's health initiatives.
Apple calls it the world-class design team, right?
Well, yeah.
That's what they're...
They don't call it the world-class AI team, that's for sure.
Oh, there we go. Check out Mark Gongloff's report, or
like
Mark
this.
Gurman's reporting on this, excuse me. Coming up next, more coverage.
Which one evaluate to live? What's the eval? So which one do you do, SM? You just do the starter for this? You did the starter, like this one here? You can draw down to $2,000. Starter plus. You did the starter. Why is the starter plus better? There's probably a YouTube video explaining this. So this is what you gotta. One to two drawdown. Starter plus is better. Okay. max drawdown's only 1.5K. So you got to do 3,000 before. I got to figure out the difference between these. It's giving me a headache. Ugh. All right. I gotta log out. Log out. Start challenge. There we go. All right.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P both lower today. NASDAQ higher. The NASDAQ Composite Index ending with a gain of 6 points, up by less than 0.1%. That perhaps the key takeaway for today's equity market trading. Little changed all the way around. S&P down 4, down less than 0.1%, ending the Tuesday session at 62.25 for the Dow, a drop of 165. That was a decline of 0.4%. Our Mag 7 index did move lower today, down 0.1%. Tesla, by the way, up 1.3%. 10-year yield 4.40% with a 2-year currently yielding 3.89%. Gold down $35 the ounce, just above 3,300 right now. 33.01
in
down
my
1%.
funded
West
futures
Texas Intermediate
evaluation
crude up 0.4%
process and prove that you have what it
68.21
takes.
A barrel on WTI, and
Take the
surge
challenge.
today in copper. Copper up by 9.4%. As for market sentiment, Chris Brigatti is Chief Investment Officer of SWBC,
verified.
and he was interviewed right here on Bloomberg Business Week Daily.
The market is kind of
This doesn't move back and forth.
underreacting to negative news along the lines of the tariffs, for example, and almost overreacting to positive news and kind of shooting up. That's why we keep seeing these new highs. So the net effect is that the opportunity has made it very volatile. Volatility creates opportunity, but the markets generally don't like uncertainty. So we have all these kind of things coming together at the same time, and we're trying to dig through all of that and figure out where the opportunity lies.
Chris Brigatti, Chief Investment Officer of SWBC, interviewed on Bloomberg Business Week Daily. Amazon's Prime Day sales fell almost 14% in the first 4 hours of the event compared with the start of last year's sale, according to Momentum Commerce.
So what do you think's the best
four-year
account?
event, of course, this year does make year-over-year comparisons tricky. Shoppers may be holding off in hopes that discounts will deepen as the sale progresses. Amazon today lower by 1.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks for that update, Charlie. Do appreciate it. Some breaking
Starter
news this
Plus.
afternoon. The U.S. Supreme Court let President Trump move ahead with plans to dramatically reduce the size of the
Why do
federal
you think
government,
that, though? What's the
lifting a
difference?
court
Is it the
order that had
price?
blocked 19 federal departments and agencies from slashing their workforces. Granting a Trump request over one dissent, the justices on Tuesday cleared the administration to implement Trump's February 11th executive order, which opponents say could cause hundreds of thousands of federal workers to lose their job. The Supreme Court decision will apply while the litigation goes forward. Joining us now is Elizabeth Wasserman.
Well, this
She's
looks
Bloomberg
good
News
because you can
Supreme
get it
Court
in one day
editor.
if you got a big trade.
Elizabeth, a decision such as this, or at least an allowance such as this that applies while litigation goes forward, How does this? What does this mean for the people whose jobs are at stake right now?
Well, it means more insecurity. While the court said that they weren't making a decision or taking a position on the underlying
4.5
plans for how to carry out this workforce reduction,
drawdown.
they did say that the Trump administration is likely to win their battle in the end.
I totally get it.
If you recall, Trump had signed an executive order back in.
What's the difference between the
February,
starter and the
Trump
starter
agencies
plus?
to carry out these, large-scale reductions, and then his Office of Management and Budget and the Personnel Management Office came up with some plans for that. And those plans were put on hold by a lower court in California, and this effectively lifts that.
The daily loss limit? Yeah. Oh, okay. You only get to, you can't let it roll. If you're taking a loss, you can't let it roll.
What was the makeup here?
Yeah, I
of
totally get that.
Which Supreme Court
Eval
justices
to live.
dissented and joined the majority? And did anything stand out?
So if you
in that
pass this
decision-making
eval,
to
you go straight to live? Is that what they're saying?
Well,
Or-
with these kind of emergency orders, we often don't get a head count of how each justice voted. But Ketanji Brown Jackson did dissent, and she wrote a dissent saying that that it actually it was harm producing, and that it should have gone through Congress. And she was alone in that argument, except Justice Sonia Sotomayor, who's the senior liberal justice, had concurred with that issue, but she joined the majority, which has been kind of rare in cases involving the Trump administration. In particular, this flurry of actions that have come to the court on an emergency basis. So that was unusual. It has in many of these orders, it's come down the 6-3 with the conservatives grouping together and the 3 liberal justices writing dissents.
Although the high court order isn't designed to be the final word in the case, it marks a significant milestone in the president's campaign to transform the federal workforce. The affected agencies include HHS, the IRS, the Veterans Affairs Department, the Labor Department, the Energy Department, and the EPA. So does this mean that people who work at those places, you said uncertainty or their jobs are less secure? Yeah, go ahead.
Yeah, we're still waiting to hear from the White House, but it's most likely that this still has to go back to the lower court, and they have to review these plans and make the decisions on the merits. But again, the Supreme Court has indicated that the Trump administration is likely to win in the end.
What was the argument that the Trump administration made as to why they should be able to do this?
Well, that the president has the authority to redesign.
This doesn't look bad. What kind of discounts do they have?
And that's the argument that it's his under the Constitution, it's part of his role as the head of the executive branch.
Well, what did the side arguing against this is the American Federation of Government Employees.
Right.
What was their argument?
It was a group of labor unions and advocacy organizations who sued.
So you can't earn more than $300 profit? Is that what it's saying?
It's important to keep the plan on hold until the courts could rule on whether it was legal or not. The firings were supposed to be implemented in just a matter of months, and
so you can't win more than 3? Is that what it's saying?
Congress really needed to
That's easy.
rubber stamp this and give the president the authority.
I'm wondering if this decision, in your opinion, sets
Am I reading that right, dude?
precedent for future federal.
Oh, they're saying that depending on the account, that's the minimum. I'm
that
sorry.
Trump would want to do in the future. when it comes
Well-
to his executive.
Okay, yeah, depending on the account.
Yes,
Okay.
well, so far this year, we've seen a number of cases that have gone to the Supreme Court on an emergency basis, in which they have backed his actions, on deporting immigrants who committed crime or who allegedly committed crimes to countries like El Salvador. Last week, they authorized some be sent to South Sudan. In other cases, he's still seeking to get rid of the education department.
So
all
50%
along,
to do
the
this,
court
and you
has
gotta
tended to
have
back
minimum
Trump's
profit of
view of presidential power, an
minimum
expanded view
payout.
of presidential power, and this is just another sign of that.
Are we waiting? Remind me, are we waiting for any more cases to drop or any more decisions
Yeah,
to drop?
no,
Or
I know.
I can't keep this straight.
It's 200 at Lilu. I think it was 200. It was 200 at Top Step
From
too.
October to the end of June, they will still be dealing with emergency requests, which could come in at any time and which they can issue orders on at any time. The case I mentioned regarding dismantling of the Department of Education is still before the court, and we're still waiting on that, and we expect that issues involving tariffs could come before the court as well on an emergency basis. And again, this is just round one. In these
Yeah, I think the
cases. In
starter
many
plus
cases, they're
is
just
the way to
talking
go
about
too.
preliminary injunctions at this stage.
Elizabeth Wasserman, Bloomberg News Supreme Court editor, joining us from our Washington,
As far as I
DC
can tell.
bureau.
All right, so unlimited trading days on all types. I don't want you trading dirty news, which is not a bad thing. Contracts.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily, a reminder of how equity markets closed out this Tuesday, July 8th, 2025. They kind of did nothing unless you're small caps.
Yeah, they kind of did nothing. S&P 500 closing down 0.07%, but it's basically unchanged.
How was that Russell 2000?
All right.
Office best
Russell,
levels, right?
it was office best levels, but it closed up
get
about
it.
0.6%.
Hey, Snooze. Take it easy, bud. I'll talk to you later.
Changed for the year. It's strong. I feel like
We'll be
every
here
so
tomorrow.
often
We'll
I
do it
interview
again.
Someone and they're like, "This is the time for small caps to rally," and then it
Yeah, I'm
doesn't
gonna shut
hold
down.
for very long.
Oh, well.
Yeah.
Maybe tomorrow will bring a different day.
Yeah.
Well, I know.
All right, SM, I'm shutting down.
With the markets.
I won't be here.
We'll be here back in the morning.
Oh, yeah, Carol's back.
Take it
tomorrow.
easy,
I
everyone.
mean, you will be here.
Oh yeah.
Working.
I mean, I hope I'm still here. But
Hey, maybe if you have a new story out, we might.